All right, if we break down here, guys, I'm sure for the same cash flow targets. I appreciate you for being here.
I'm sure right now it's target hit. This is what we call a magic hour.
All right, I'm taking this.
The upside ahead, the momentum to the upside ahead, everything aligning, live price and historical data, right?
Right there.
Welcome, this is PackTV. Sit back, relax, and watch how we day trade with statistics.
PackTV, God-given, so I gotta make it happen, I'm on mission. Not like them, I'm different, that bag come with a pension. Talk about that business, like I'm hard all in the pain. Shining hard, don't need no chain. All this drip, it feel like rain. Everything on me, got it on my name. They don't got it like this, they don't talk it like this. I was built for this. That TV not like guns, take it away.
Stop me, it's me. If you're doing this for the women, you're losing. Do this shit for yourself. I do this shit for myself. They rigged the race long before your first breath. Signed your name in the ledger, made a bet on your death. Puppet masters and neckties, count your hours like cash. Presidents pushing their pieces while you fade in the ash. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn the script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain. Burn it down, burn it down. Burn it down, burn it down. A lead over production, too many miles at the throne. China rise in the rear view, old empires turn to bone. Same damn cycle, same sharp teeth in a grin. They sell you fate on a pay-per-view, call it virtue, call it sin. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn the script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain.
Welcome, this is PackTV.
One more time, it's the plan. It's the magic hour. Drez catches sings on my brothers in the rain. Karl with the bummer going in, turn the page. Miguel catching 10 points, me and not the same. It's the magic hour, all the money getting made.
Drez catches strings on my brothers in the rain. Karl with the booger going leads on the page. Miguel catching 10 points, be another same. It's the magic hour, all the money getting made. Magic hour, hey, magic hour, hey, PackTV, hey, PackTV, hey, magic hour, hey, magic hour, hey, PackTV, hey, PackTV. Boom. Now we're back, right? What's going on with this? I'm bouncing like crazy. Back this out of stat 4 o'clock low. My runner got tagged out. We got back above the 6 a.m. open and got my runner. So I'm sitting up 228. This is a combine I'm looking to pass here. Need like another $400, 3 and change, 340. Drez, what's up, brother? How you doing, man? What's up, Maz King? How you doing, man? Good to see you. This thing still might go down there. We're not holding that 6 a.m. open. We're coming up to it, swiping it, and then just failing back down. Opens right here in yellow, right in the middle of my screen here. This is the 15-minute, and here's the 30-minute in blue. So let's see what we do here at this 15. So we close back below it, because I think we're just going to put in a Q4 low here. So we got a Q1 high, Q4 low. We failed to we failed to get up above here, above the previous high, previous hour's high. We took out the previous hour's mid. Now we're just swiping it. So I think we're coming in for that Q4 low.
Good morning. Good morning.
What's happening, brother? You get that short, Em?
No, I just finished with my round.
Oh yeah, gotcha.
Yeah.
Came up right into a swing too.
Yeah. Wow.
Right into
This
15
ain't
minute
up and
swing.
reject.
So
Let's see.
Yeah.
Are you short?
I was short.
You got
I took it from 240 down to 212 with 3 contracts. I got 2 out, and then
Nice.
my runner got stopped on this up here. But this is the move I was looking for, right here. I didn't think it would come here, so I had my stop above the 6. So took out my runner there.
Nice.
Because you never know if it's getting back up that high, if it's going to just pull an 8 on you. This is a pretty choppy 6 a.m.
Yeah.
Usually get a better direction than this,
That's true.
So I would expect it to come down now that we're closing this, getting this Q4 low here, I would look for about 183. It's a 3-hour mid.
Mm-hmm.
So if I was in a trade where I had multiple contracts, I'd be taking some off at that point. Looking for a new low to get put in this 4 o'clock out. I'd be looking for that to get taken out.
Yeah. I like that petrol mid.
Yep.
Yeah. We went down.
So you like bullish? You like the top?
Well, I like the mid first, then the low.
I got you.
Make
Yeah.
market open low. Yeah. Mm-hmm. But if we keep continue going, like if we don't get above 6 a.m. opening price, yes, at least could go down for sure.
Yeah, you know what I'm not to is the long false. We got double long false, and
Yep.
a London broken is 82%. So
Yeah.
with the current, I mean, I get the initial London push here was a one tick wonder really. It just stabbed above and then dropped. We got 2 bearish signals on Asia and London right now.
Yeah. Market's weak right now. Can't I get to petrol mid? Yeah.
Yep. So I'm favoring the short.
You traded last night?
I did. I traded what did I do? 1800. I took a couple of scalp shorts here. I mean, they were tight, man. They weren't anything big. Well, my first one, actually, my first trade I lost. My first trade was a loss, but my second trade was a nice long I took. So I did at 1900 here. So that was a perfect one. Target, scaled out, went to target, and then all my other ones. These were shorts that I got 2 out. My runners kept getting stopped. The short until about what 20, almost 2400. Then I was done.
Nice.
I was looking for this big ass fucking drop that I didn't. I wasn't a part of. And
that's that 2100 short to go false.
Yep.
That's the magic. I didn't trade last night. I was busy at home. I couldn't, and then I fell asleep at 9 o'clock.
Yeah, it happens.
I missed that. Yeah. When is Dave popping up? 8:30, I think. After 8:30.
Yeah.
Yeah.
And Mick.
Yeah. Yes, sir. So we already got to the MAE on the weekly medium right here. Yeah, we are buried for sure. Wow. Below Sunday's range. Last night we rejected NFP low. Perfect. Like we pick above and fell. That's that 2100 short.
Yep.
And yeah. Can't even get to P12 mid right now.
Yeah. So earlier they had 610 lots sitting at 190s. They pulled it. So I think we're clearing out to get some lower pricing here. So the big level I'm looking at right here is this 120s. We got one of these CPI VWAPs, these anchor VWAPs from July 14th. We pinged off it twice. I think we come back and interact with it again. I think it's start closing below it. I think it's lights out for lower pricing. So I don't know if we're going to do that before 9:30, but that's what I'm seeing.
But I don't even know why we're dropping. I don't see nothing. It's weird. Only gold is pushing. Other than that, the big red, oil's red, the yields are red.
Do we got bonds? Do we got bond offerings? Because I think the bonds are playing a big, it's a big deal right now.
Yeah, bonds are okay. I see.
Yeah, we got a 6 month, 3 month, nothing. We don't have a big one.
Yeah. Any news overnight that you know?
It was just the Trump stuff with tariffs on Canadian imports. Yeah.
Oh.
They had a deal. Their talks broke down, so we're going to revert back 50% tariffs on select Canadian imports.
Wow.
So, yeah, that was this weekend.
Yes.
But that was the only thing that came through.
Mm-hmm.
That's the last thing, anyway. On the 21st.
I know your boy speaks today at 2:00.
My boy.
Scott Besson. He speak at 2.
Yeah.
Mm-hmm.
I don't know, man. We got a guy in charge of the dollar who's running things, who helped destroy, the pound sterling. So I don't know, man. I mean, they announced they were going to double the bond buybacks, right? $2 billion to $4 billion, and that's out of desperation, not out of strength, right? That's because they're letting Japan out of a lot of their debt. Let's see what 7 o'clock brings here. We got 10 minutes here. The gunship to pop.
Give me a few, Karl. Hold it.
Okay. Yeah, man. What I needed to do was just leave my stop right where it was. And I put this in. Because I'd still be in this runner right now. What I did was I moved it, just above. Actually, I gave it pretty good room too, above the 6 a.m. open, which is this yellow line here. But my stop originally was above this swing, up here at about 250. That was one contract. I should have just left it alone. Because I'd still be in this runner right now. Because this is really what I was looking for. This is the type of damage I try to get out of these runners. Because now we're interacting with that area, that 190s that ultimately I was looking for. That's where they had the 610 lots. So that's why I started looking at that short. Yeah, we're closing below there aggressively now. It's
Damn,
I think we take the lows, man. Yeah, man.
He said, "Look crazy."
I'm telling you, brother. I'm telling you, man. We're going for these lows, dude. We're taking this 4 o'clock low. That's what I'm calling it now. There we go. They just added 100 lots. It's 50. 29.50. What is that?
You know, it's all random fault. He got short last night. I know that.
Yeah, we got to watch this 120, 125 area when we get down there.
Yeah.
That's where we could bounce again.
I didn't get the signal from random, so
Nah.
the crack. Japan dollar. Yeah, the carry trade back on the chart. Yeah, the carry trade. Yep. The carry trade is popping.
Bro, did you
They
see this
stop
previous
buying.
15-minute candle? You see this fucking 15-minute doji there? That came in just before?
Yeah.
Yeah, it is
But
vicious right now.
Yeah. We reject the 6 a.m. open front. Very nice. Yeah. I don't know if they go for the dagger, make a new low, but yeah. Could be.
Yeah, that's what I'm seeing anyway. I mean, we didn't even make an attempt to get up to that mid. Not even close.
Mm-hmm.
Just enough to take my stop out, take my runner out, but yeah. Oh yeah. So we're previous 3-hour mid right here, right now. Right? We start closing candles below 182. Give me a 5-minute below that, and yeah, we're going lower.
Yeah. I missed that short, but it's okay. Yeah, I know one. Good, I know one. How's everybody feeling today in the chat? What's going on? Volatility is back.
Yeah,
This week at least we got a lot of things going on. This week we got Jackson Hole. This week we got Scott Besson speaking today. Yeah, pay attention to him at 2 o'clock for sure. Because he does move market. Definitely move markets. And we got PC as well. PC.
When?
I'll tell you right now. PC. No. Wednesday. This week, I mean. This week we got PC. Wednesday. We got Scott Besson today. We got consumer confidence tomorrow. We got jobs Thursday. Jackson Hole Thursday and Friday. And yeah.
That
So
should be a while.
volatility.
Didn't Mickey say something about Jackson Hole?
No, I was telling him.
Oh, you were. That's
Mike.
right. You were talking about it.
Yeah.
You were talking about it. That's right.
Yeah. I was telling him about Jackson Hole, what he did.
Yeah.
For September. Yeah. And also volatility 10 to increase. Hold on, guys. These people just come in like crazy.
I got you. Yeah, volatility is front running Jackson Hole right now.
Yes.
Bringing that heat.
Yeah, and yes, we got NVIDIA as well this week, NVIDIA earnings. So yeah, that's right. So yeah, man.
So here's what I'm looking for,
Yeah.
right? Yeah.
Go ahead.
Go ahead. No, I was just saying with the profiler, with what we're looking at, false. 82% broken for London, coming in at 7:30, 7:45. And then the next time would be the 9:30 time frame. So I think that's on the table.
And we got London below us, so yeah. London or you is below.
Yep.
Right now.
Yep.
Interesting.
Yeah, London OU is
So
sitting at
if we break that London on you, what's that? That let me see. Carl, you got a good call right there, Carl. Broken pizza low. We broke it, yeah. Pizza low goes to 80%. Mm. And then mid is 98%. God damn.
yeah. See, that's the danger, right?
Yeah.
That's the danger. They can come all the way back up to that mid and then still come down and take out the P12 low.
That's what I want to see, personal. I want to get higher to get short. But if I get the short first, yeah, I'll be longing with them at 8:30. Yeah. I'll be long this. Yeah.
Well, now it's 6 a.m. The 6 a.m. open is going to kind of dictate that decision for you, right?
Yeah. Yes, sir.
Let's see what we do here at this previous 3-hour mid. We're bouncing on it right now. 80, what's it, 82, 80, 83. 7 o'clock's going to open up. Let's see what we get with this 7 o'clock open. See what gunship prints. I'm going to take a trade off the gun.
Mm-hmm. So, what's up? Good morning, Funky Trades. What up? Yeah, if I hope he comes back.
Yeah.
Comes out where? The Pito low? The Pito mid? Is that Jeff? That's masking?
Jeff is masking. Yeah.
Right?
Yeah.
What's up, my guy?
Yeah.
I haven't seen my guy in a minute. Yeah?
Funky day trades. He's in the pack too.
Oh yeah.
I forget his name. I forget his actually what he uses in the pack. There we go. 7's opening up. Bo. That's right.
Yeah. We got 7 a.m. Okay. We can get some movement now, Carson.
Yeah.
To get some movement right here, right now.
Big
We are doing
coming
it. Damn. Okay. Gun chip short?
in. Not yet.
Come on, gun chip.
Not
Get with the
popping
pro.
Yeah, it's not popping.
Yeah.
I would have gone for it, but it didn't pop.
Yes, sir. Yeah, day trade. Yeah, sorry. Look at that volume. What time frame is that? 1 minute?
Fucking huge. Yeah, 1 minute. What, 7 a.m. open,
Whoa.
brother?
What's going on with it?
That's all right. I mean, listen,
Hey.
it's not that big. It's not that big. You scale out. You know what I mean? It's big, but we've had a
Man, it looked bigger than the other one.
407 was bigger. 405, you know? So it's the biggest in the last couple of hours.
Yeah. Yeah, HL is magical. You got that long or you got that where's Asia? You got short fault, long short fault, yeah. Long fault. Yeah, we're going long first. Okay.
London was the one tick.
Yeah.
But we are weak, man.
Yeah, we can't even get to pizza men. Yeah.
Very heavy.
That's not good.
Well, once we slipped Sunday, we slipped the Sunday range. I mean, it bounced on it, came back, tried to hang around underneath it, and whoop.
Yeah.
That was it.
Nothing goes happen below P12 mid, guys. So. NFP mix, NFP low. So that rejection
Yeah.
right last night, I would have been all over that trick for sure. I just couldn't get it. I was sleeping. But yeah, that was clear, clean. I know Randall was on that trade if we was not busy. That looked too clean.
So this aggressive candle closes below the previous 3-hour mid here.
Yeah.
Let's see if we can get back up. I'd like to get into a short.
Mhm.
So we took London OU.
Yes, sir. I mean, now it's below us. Now it's above us. Now that's more like it for that long. If you want that long to beat it, yeah. But if we break it, London or you is gonna be 98% to go to the mid. I want that trade. So now it's good. Just be patient. I'm being patient, Karl. I missed that short. That's okay. Ah, there you go, Randall. What's I knew that shit looked too clean, brother. Yes, sir. Good luck. Yeah, baby. Good shit, Karl. Good shit, Randall. Good shit, bro. Nice to start the morning, the, the week on the right side. Let's go. E. Nice, nice. Uh, we got. You think we get to? I mean, today's. You think we get to the mid car? Previous month mix. It's
That's previous
1%
month's
down.
mid.
28,878. That's
There it is.
200
I'm seeing
points
that.
lower. Think we get it today? I mean, depending what your boy say later, yeah, I think we can. That thing is, if we start messing with the bomb, treasury bomb trade.
I mean, it's, we're starting to get the signals for lower pricing, man, early.
Yeah. We're gonna have a big.
We didn't make any move to the peach. Nothing.
I mean, we try at 6. We got short, like cut short. Then we try again at 6:30.
Yeah, 640. Yeah.
And miss. That
But just
people we
barely.
couldn't. Yeah, it's weak. It's weak. Super weak, Brandon.
So were you looking for a long though? How would you structure it? I know you say you're looking for it to get back up. Would you looking for it to come into that 401 swing? That swing low?
We looking to get long around 140 and stop
Okay.
below that low, obviously. So that we 140, a little lower too. And my stop low will be that low, 4 o'clock low. That
Gotcha.
peach hole low be my stop. Yeah. Like it's in my area to get low. It just
Yeah, I see it. Yeah.
not at 140. I need 140.
All right.
Yeah.
So yeah, in the screen in
I
my
don't know.
middle, I just put it up. Yeah, you can see the 15-minute swings down here.
Yes, sir.
Yep.
But you said you got orders below us, right? Big?
No, nothing crazy now.
Nothing crazy. Okay.
No. 109 down at 29.50, but
Mm-hmm.
that's they had 610. Right here, they had 610 lots somewhere around here. They pulled.
Mm.
I think it was
Right.
190s. 190s.
Damn, look at that. Damn, Karl, look at that pump without me. Okay. Okay. Hey, you saw your boy last Friday lost $70,000?
Who's that?
Rick.
Trader Rick?
Rick. Yeah. 70K. He lost 72.
Jeez.
Okay.
No,
I quit trading. I will quit my trade right there. I'm not trading for the year. 70,000 and I'm dead. Yeah. That's great.
Yeah, we didn't tap into that swing though. I think
No, we didn't. We just bumped.
Yeah.
Yeah. She knows I'm waiting for her to get bumped.
I know.
It wouldn't be yeah, go ahead.
No, tell me.
It wouldn't be, it would just be a cash flow trade because I'm going against the grain, right?
Yep.
But yeah, you know those moves are super fast, like 15 points, 20 points. Like, look, like that bounce was 20 points, just like nothing.
Yep. So you need,
Yeah.
even though this thing's going down, because that's why I'm asking you, because that's the exact trade I took right here.
Mm-hmm.
For 6
Yes.
o'clock. Came right up into the swing.
Mm-hmm.
I was slow on it. I could have got a way better position on it, but I was a little slow on my entry. But because I got in at 240, I could have got in way higher. I could have got in almost I could have got in at 245, 247.
Yeah.
But yeah, they move quick once they get into that swing and they want to do it. It just rips.
It's print.
So,
Yeah.
I think we get down a little bit lower. I think you gotta wait for, you always say you gotta wait for that next 15-minute candle to come in.
Right.
We've done 15 yet, you know. Just let that Q1 print. Let's see what we do. Okay, here we go.
Lower, baby.
Yeah.
How was your weekend, Karl? You had a great weekend? Saw you with the boys.
Dude.
That was nice.
Oh yeah, man. Oh, you saw? Yeah, I posted. Dude, I had those kids out. I told Austin I had them out for 10 hours that day, bro. I was at the beach all day bodyboarding and went. I took them to the park, got burgers, whole bit, man. So it was good.
That's nice.
Oh yeah, man. That's what I usually do with them.
Yeah.
Dude, that's how my whole summer was. I was doing that 4 or 5 times a week. Exhausting.
Yeah. Get them tired. They go to sleep quick.
Oh hell yeah, man. Kids
with that sun. Right. That's some no joke. Yeah. Yo, no, está aquí. Está lista por ahí.
All right, let's see where 15 is going to open.
Oh no. Yeah.
Because what you may get an apex here. You know what I mean?
Good
Get
morning.
that 15-minute head below, give you apex signature, and then start ripping back up. Not take the P12 low yet. You know, wait till 8:30 or 9:30 to do it. Because we don't always come in this quick. You know what I mean? Take that P12 low during magic hour. Here we go, 138 lots at 165. Looks like you're starting to crush this thing down. Let's see if they take it. Yeah, Delta's gotten pretty heavy to the negative side. Boom, they did. They traded that out. So they bought that up. Yeah, I see that too, Mass King. That's exactly what I'm saying. Is I don't know if we're going to take that load now. You know what I mean? But I think that low's getting wiped. 8:30 or 9 is my bet.
All right, I got the
They
expensive
may,
here.
they may
Be
have
right
gypped you. They may have screwed you on that short, on that long, Drez. If they're going to do it, they're going to do it this after Q1 here. When Q1 open, they got to close below it. And then maybe we can see that. Oh, you got your chart up. Beautiful. So Drez is looking for this area. I'm looking at the same thing too. 140 below 146 pieces, more like 140. Because we didn't get to 5 base 5 box either yet. Oh, they playing right here, boy. Yeah, we didn't get any candle closures below this 15-minute here. There it comes. All right, London OU. Maybe coming back up to the view out there. Up over here. There it is. Yeah, something's not right with this view out here. Yeah, still flat bow. Yeah, we're flat too. I know Drez is waiting for it to get into this yellow box here. I'd entertain a short into it, but I want to see it close. Minute. This Q1 open here, 168. Then once if we get back above 7. And my mindset starts to shift. Right, but then I'm, paying attention because same thing happened here at 6 a.m. Here's the 6 a.m. open, right? That's what took my my runner out right here. So we may get another fake above 7 and just continue to break down. And as you can see, that 15-minute. If I took a trade off of that, closed below, came back up above 7 or above 6, closed below the 15, that was a great short, no heat whatsoever. So I'm looking for this similar type of action here. See if we get it again. But Drez is right though. I mean, what did he say? Let me. With the profiler, I think levels 88% for the mid to come in 8815. No, wait, what am I saying here? 6 to 6:15, but the median 7 to 7:15. So it's making its run now. Just be a little late. It's not a number I want to fight near 90%. P12 lows 8 near 80%. Right around the same time. Have a short coffee right now. I got to get a long coffee. Oh, there we go. We peaked above the 7. Yeah, just be patient, guys. I mean, Drez and I, we didn't get what we wanted for this. Get into this swing area here. Need to get into the 140s. I mean, you could have played it off the 15-minute here, closing above the 15-minute. If you were just playing quarters, stop would have been down here below 146. And then great long. Just playing quarters. Yeah, this move's more aggressive than it was at 6. Of the 6 a.m. open here. China is willing to strengthen cooperation with the U.S. That came in at we claimed the previous 3-hour mid pretty aggressively. Same with 7 o'clock. Let's see if we hold 7 here. Gonna have to wait for 30. Wait for the 7:30 to open up. This could just be an apex for the hour.
Yeah, Karl, you live without me.
I know.
Fuck.
You see, I mean, at 6:24, China is willing to strengthen cooperation with the U.S. That was a news.
Oh, you got news?
I don't know on what, but things started moving fast right at that time.
Yeah. I'm low coffee. That's for sure.
I am not. Yeah,
Nah.
I didn't make it in time.
Well, gotta poop on that bar.
Yep, let's see if we close below 7, because then this is the like pretty much the same thing we did at 6.
Yeah.
You know, swipe above, start closing below again.
Oh. Yeah. Oh boy.
Not yet.
Hey, I wouldn't want New York to start below London on you. Yeah.
Yeah, so 7:30 is going to open and get probably a lot of volume come in.
Yeah. Oh man. Okay. Yeah, that's that. That's that long. Not happening for me. And they sure at me. That's good. Okay.
What's Gunship doing? Gunship doing anything?
I want to check
No
right now.
front run. No front run.
One chick get slapped. A magic hour. One chip on 3 a.m. broke. We gotta reverse the
We
target
get
down
below
there.
7 a.m. open again.
Yeah. We got 1 minute for New York 1 clock.
I know.
I'm
I
gonna
know.
be waiting.
I'd like this short, but I'm not going to do it with 7:30 open in here.
Yeah. That's good patience. Reach it.
Yeah.
Yeah. And
Yeah, because that's where I would have shorted right there at the close of that candle, and this is why I didn't want to do it. Because
yeah.
New York one opens and likes to get really aggressive.
we got it right here, right now. Let's see what happens. Yeah. We are pushing. Okay.
Yeah. See, this was up. That was top.
Yeah.
Short.
Yes. Man.
And one candle. Boom.
That's what happened. Now we're going to the mid without me. Beautiful. Missed my entry for how many?
Probably like 5 points.
I know. 4 points. Was 142. It got to 145.50. Ah, nice. I like it. I like it. I like it, market maker. Who's the market maker in the chat right
You got
now?
in there. You got in there.
Stop playing with me.
Who's the
Stop playing with me, man.
Yeah, I drew that fucking box and it did not want to get in there.
Nope. Damn. That's fine. You got previous day low right here, right now. Let's see if we get above it.
Yeah, outlook just changed, boys and girls. Just took out previous hours mid. Yeah, it looks like it. Oh yeah. Super close.
Yeah, Bowie, they after us, man. Kind of bullshit is that? Oh Lord, they don't want me to be great this morning, Karl. That's what it is. They want me to not
It's
go
like
fit
that
fight the market at
sometimes,
9:30. Yeah, man.
Getting up to 6 a.m. open, we just pinged off it. I think they're gonna take it.
Oh, look at that. Oh. It's beautiful. I cannot short here, and I cannot long here. I have to wait, guys. I'm sorry.
Yeah, man. Me too. Same.
Yeah, if you see my chart, like right here, this box that we drew, like look at this. This
You
is
switch
my triggers that meant
Let's get Drez's chart up.
right
if you
here.
can.
That was that's not.
Who's in bed?
That was the order right
Austin,
there.
there he is.
Right here. Now
Your chart's up
that was
there.
yeah. That was the chart. That's the trigger right here. Okay, no lleva nada. No.
Yeah, he's got it. in his
That was the trigger right
bottom
here.
left.
He came here, missed it by 3 points. And we got that push. Like I told Karl, I don't need to be a home run, but that trade gave 80 points. I don't know about you, but with 80 points on AQ,
Yeah,
I'm very happy.
I go back to bed. I'd shut down, bro. I'd take that 80 and take a nap.
But that's that. So we have to readjust and wait. There's nothing we can do about it. That's trading for you guys. That's what it is. On the weekly, we started going up. This black line is NFP low right here. We missed. We look above and fell. 2100K. Now you're gonna see Random talk about it today or YouTube. Reengineering. 2100 like to go fall. So Asia. So we went long. 2100K, drop it down. Boom. We got to the weekly MAs right there. 29,130 to the T, guys. And now we got that bounce in London. Shout out to Bowie. Boom. And I tried to get with the program right here. It missed me by 3 points. So now I just wait. I like that P12 mids is 90%. Talk about it earlier. That's what I wanted to see. First, well, we get in it late and we are going. And without me, but that's fine. That's okay. That's okay.
I think exit dunk shot now. We're above 6 a.m. too.
Yeah, it's a slingshot. Perfect. That's a momentum trade, guys. So it's a scout, but with that momentum. Because I like wicks. You know me from a very long time. I like my wicks. You got it right here. You got my swing low. And the right here in this chart. Swing low. Came in. I like the 50 or below for my stop loss to go here. And look at this. Look at this guy. Boom. We got pushing. There you go, Karl. Stop playing with us, Karl. Damn.
Dude. If it got, I drew my box a little different than yours, but man, if it tapped into that fucking box, man, I was taking that long.
Yeah, baby, we would have not trade no more for the week, bro. That's 100 freaking points.
Not go. Well, I'm glad I didn't take the short though. I'm glad I didn't take this 15-minute short or the 30-minute.
Perfect, beautiful.
So
Yeah, that was
this is New York One. This is what New York One likes to do all the time, man. This type of shit.
Mm-hmm. Yeah.
So, yeah. Now did we take the? Oh no, I thought we took the mid already. Nope.
We closed. We 30 points above us. Midnight. We are above midnight right now.
No, not yet. Not yet.
Midnight. We touch it though. Yeah, we touch
Yep,
midnight.
close.
Yeah.
272. Now we're coming now.
Yeah.
Now we're doing it.
Sir.
I don't know if it's that
You know-
China, that fucking China news, man.
Probably.
That's when we got really fast.
Yeah. It's Austin's fault. He gets back from vacation, market makers come to the chat. It's your fault, bro. Hey. We gotta riot complaint to the board. Man, man. Yeah. I don't like chasing trades, so I have to be patient and wait. Getting back into probably Sunday low. Yeah. We're gonna Sunday low. Range. This area
Yeah,
right
I
here is gonna
chased
be
it,
interesting.
and it don't work out so great. But we're on the breakout
never
candle now
chased.
for the gunship. Gunship's printing. Gunship's
Yeah.
printing. So we're on the breakout candle now. Let's see it close. Did we close it?
No.
Yeah, it's a 5 minutes. So got 1 minute left for this to close it. And then we'll have the gunship print. And it's going to be a bullish print.
Mhm. Yeah. Okay. Yeah, Austin. Your fault, bro. Stop playing with me.
Ah.
Yeah.
All right, 17 seconds. It looks like we're going to get a gunship print, bullish.
But Magic hours, nothing.
Yep. 4 seconds. It drops like. There we go. We got bullish gunship print. Let's see if.
Damn, funky trade. Where you got long? You got long. I don't know where to.
TP secured. I mean, you
Nice.
could have taken that 15-minute. Break a 7.
Yeah.
You know, those are all good spots.
But this 15-minute candle got no wicks below, so I don't like that. We probably come back later.
Oh, shit. Yeah. Oh,
Yeah.
okay.
We'll probably come back later. But yeah, this is that P12 mid trade that I like every freaking day. It just, they didn't get my entry. Yeah.
Let's see if we get a pullback.
Yeah.
So we got a Q. So right now we got a Q3. We got a Q1 low, Q3 high. So we may get a pullback here at Q4 and pop for a Q4 high. That's what we can look for here.
Yeah. Maybe 8 o'clock should be the dagger down now that we close to the mid. But if we get about Sunday's range, right there, 300. You got orders above 300, Karl? We get about 300. Start closing, featuring in the close. Yeah, we can get pushed. We can still push.
We got 64 lots. We got 64 lots at like 330.
Okay. That's
There's a cluster liquidity right around 300, 275.
Yeah, gotcha. Yeah, man. I mean, we don't make 4 o'clock low days, right? But hey, this market maker lately, they be putting low days whenever they want. So hot. So somebody's wrong here. This higher day is 1930, and this low day is 4 o'clock in the morning. You pick and choose which one you want more. They're not in stack. None of them are in stack, high or low.
Yeah, that's what I'm saying, Justin. Too. Yeah, I'm looking for a pullback. I'm not taking anything unless we get a pullback. Probably around
Yeah,
27 earliest I'd be looking for it.
that'll be a good class packer. You talk about that. That'd be a good class for the gun shake trader. No sí. World casing. World casing. Ese es el blanco, el diablo. Ese. Ya. Yo le voy a decir, yo no le quería comprar, él fue que puso presión. I'll be back, Karl. One second.
Yeah, man. All right, we're starting to pull back. 745. Yeah, I want to see it come into at least 27. I'm going to take a long off it. So that means dipping below 6 a.m. open here. What time frame are you on? Carbon. What time frame? I'm on a 5-minute with the gunship. I think it's the same one. I'm not on any special gunship. $5-minute, and yours triggered at 35. Mine did at 40. Really? Huh. All right, let's see if we get below this 6 a.m. open here. I think it was Bill last night talking about this previous day low, how I forgot what he was talking about. 1800 when we opened up. He was saying we usually take out the previous day low, which we definitely did. I think they were doing something with candle science on that. There we go. We're starting to sweep the 6 a.m. open. Get into a good pullback.
Okay, I'm back. Yeah. Crazy morning so far for me.
I know. Pulling back
Yeah,
now.
right, Mick. Yeah. See, we got that.
Let's see if
No,
I-
we didn't touch that mid.
No. That's why I'm trying to see if I can get a pullback long here. Go for the mid. Doing it at the right time also.
Oh, we got
for it to
Q1
sweep
low.
below.
Looking for a Q1
What's
high.
that? Yeah, that's
We
what
got
I'm looking
Q1.
for. But I'm
Oh.
looking.
Got it.
I wanted to sweep below 6 a.m. open right now.
Mhm.
I'll get long.
E. 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 Yes, sir. Yeah, hit the like button. Hit the like button, man. Come on. Stop playing. Come on, man. Right? E.
Hey, here we go.
We got
Let's sweep
heavy
the
hitting
6
today.
a.m.
Trading with us. You know day trades on Karl?
Yeah, I'm familiar with him. I mean, I haven't
Yeah.
watched him a lot, but I know who he is.
Oh, he got YouTube channel? I don't know who he is. I'm about to find out.
All right, let's go. Let's close below this 6. Even if we don't close, just want to sweep it.
Yes, sir. See. They're getting open right here, right now, Karl.
Yep. I almost watching. You got these lots right here, 15, 15, 13. I think we're going to come in here and take these. I want to see what we do. Right around 27.
Yeah.
That's what I think I'd like to get long.
If I get long here, my stop would be about below 205. I don't like too much risk for me, so I cannot get long. Because I trade NQs, guy. NQ do not forgive you for misplacing trades. So no, not my trade. My trade was below 142. That was my trade, and we are 100 points higher. So, not happening. So I'm flat, and that's okay. That means I got to be patient, man. Patient pays, guys. So I will get another opportunity the day just started for us. New Year trade.
Yep.
So yeah, patience.
I mean, we got
patience.
930. Take that 930
Yeah.
trade.
Yes, sir. I can see the long right here for 6 a.m. opening, but it's not my trade because my stop is don't make the requirement. So. And that's okay. If I'm in MNQ, yeah, I can get long, but not for me.
Even MNQ, I wanted to see a sweep this 6 a.m. I don't want to see, this isn't good enough for me either. I'm trading MNQ, and I would take it, and I would take that deeper stop. But I needed to sweep below 6. I needed to take these 16, 17, and 12. I needed to take this liquidity right here.
Yeah.
Takes that liquidity, I'll get long.
I see you, yeah. See. Yes. And we got a new hour open in 5 minutes. Yeah, 8 o'clock. Be careful.
Yep. Absolutely.
We could go back in this last 5 minutes. We could go back to P12 mid. And yeah.
Not P12 mid. What are you talking about? Back to what? P12 mid's above it.
Yeah, we could go up. I'm saying this last 5 minutes. We could if we want to.
No, yeah, 100%.
Yeah.
That's the play. That was the trade to go for a Q4 high.
Yes, sir. Oh Lord. Yeah, there you go. Eat. Come on. Oh Lord. Where's Miller? Miller, where you at? Miller not here today? He ran out of coffee this morning. That's gotta go buy it. Oh my God.
And now I gotta wait for 8 to open up. See if we get a nice stab down at 8.
How many viewers you got from X right now? You got a lot, right? X viewer be popping. Twitter.
Yeah, that's where I'll tune in from.
Yeah, we got a lot of viewers. Shout out to you guys. You and X watching us, shout out to you guys, for sure. E. The only thing I'm loving this morning is coffee. And yeah. What it is.
See now, if it puts in this, if it swipes the 6 a.m. open now, I'm not going to take the long because I got to wait till 8 to open up. I would have taken it earlier, but because he had enough time. Like now I'm expecting, you know, the next 2 minutes for it to pop and take the high, but you run a risk of 8 o'clock opening up, and then price might be wanting to go higher. 8 will open, and if it's going to put in a statistically long candle, it'll swipe down first. And it's got a lot of room to swipe down.
That's 100% true. Yes, sir.
So that's why I'm just sitting here looking like, looking like an idiot staring at a chart, fussing around. But the truth is, I've been through this too many fucking times to just put trades on, right? So now what I want to see is wait for 8 o'clock to open up. Still sweep that 6. I still want to see it sweep below 6, but it may come in and try to interact with the this current 3-hour mid here, right around 215, right? And then I get really long on there.
Yes, sir. Who's that? Alex Carbonite. Yeah. Love Morning Wood. Yeah. Hey. You smoke?
Love Morning Wood.
You smoke? You're my client. You're part of the crew.
All right, 8's opening. Getting that.
Oh, we got that open right here, right now. Let's see.
Yep.
I'm
Sweep
patient.
6.
Nothing for me.
Yeah, I don't like the wickless candle. But,
That's 8. No.
yeah, it was 7 o'clock.
7:30 candle.
Yeah, 7:30. Sorry. Yeah. All right, here we go. Sweeping that 6. You gonna do it? Yeah, we closed below it hard, I think.
$90. Oh Lord. Oh. Yeah, 6 a.m. here is do or die, guys. We gotta hold to keep going. We lose 6 a.m. It get ugly for a new low day. Now at this point, I don't like the low again from the swing low down there because we did what I wanted to see towards P12 mid. So now this is not a long situation. I will get a short first, market open, short, insta low day, then I can get long, right? So that's the difference now of this swing down here. I don't like longs no more from that because we can go for a new low day. Keep it simple. I keep it simple. Date's coming in after 8:30. I believe he's coming. I think, yeah. He's definitely be on for
Taking a
market
short.
open. He's taking a short.
Yeah, I'm taking the short below the 6 a.m. open here.
Yes, sir. No problem. Yeah. But chill out with us. We're here, man. Chilling. That's what we do every day. Get this magic out with trade, aka P12 mid trade.
I didn't even need this much.
Yeah, this magic hour is basically most cash flow trade. Cash flow, you could call it GOP trades, 20, 20, 15, even 10 points, depending what you trade, how many contracts. They are good this time of day. Can make a whole business plan with 10 points. Nice. What's your target, Karl?
210. Oh, 210
Okay,
on
nice.
2 of them. I'm gonna try to hold it, see if
Nice.
that was just to move up, and then we come and take the lows.
Yeah.
Try to hold the runner. I'm just doing cash flow, you know.
Okay.
There's a close below 6. That's what got me into that one.
Mm-hmm. Looking good, Karl. Come on, baby. Stop playing with him.
Probably go lower.
Now, I tell you something. Austin said he's short, but he got Mike and make his watch.
But
So be careful.
we got 5 basis points is 206, so I'm ahead of that. 5 basis points off of the 05 box here. I was in at 220. That's where
Yeah. Austin cracked the code, so Mike can make it after him now. Gotta be careful. Can you imagine? That'd be crazy. Good morning, guy. What's up, my guy? We got Karl short
Waves coming on
here.
They start at 820.
Looking for
820
cash flow.
day trades.
Yeah.
You're almost halfway there. Let's see. Back to entry. Ooh.
Hey. What? I have a Mick.
Now we're going. Let's go.
All right.
What time is it? 6 or 7, or yeah, they go. They'll be on in 15 minutes. See if we can't cash flow before that. I'd like for this cash flow to get hit by 15.
Yeah, it's got low.
Back at previous day low.
Body's long, 218.
Wild deuces. All right.
Watch that stop loss.
Yeah, we might be stabbing down right about nowish.
And we could get back. We could get to 212. Little stop down, 212 first. Not my trade to take, guys. But yeah. Oh man. Yeah, Karl.
Well, you
Great
got your
boring
mic on
morning for
the
me.
back then? What's that?
What? Great boring
Oh.
morning for me. Missed my trade. That's it. There's nothing I can do. But something we did is practice patience and let the trade come to you. Don't chase. Do not chase trade. No. Not a good idea. Mm-mm. Oh.
Yeah, and what switched me up from one and a long here was I wanted to see a sweep of the 6 a.m. meaning I wanted to see this like I didn't want to see candle closures below 6, right? I want to see one stab down and then come back up. Started closing candles below, so that's why I went for the short instead of looking for a long off of it. So I think now we're gonna work our way down a little bit here.
We got a lot of people I never seen the chat. Good morning, guys. How y'all doing?
These guys are in for Dave trades. They're getting ready. 820. Here we go. This is the press down I'm looking for.
Let's go, Karl. Come on,
more
man.
Points. Let's do it. Boom.
Stop playing with him.
All right, 2 out.
Boom, baby. That was a nice trade, Karl. Let's go, baby. 3:05 in the morning.
So we draw it up.
Oh, it's 3:05 for you? Eesh.
All right.
That's that 212.
Yeah, get this down at the lows.
228.
Yeah, I'm just gonna leave my stop where it's at. Think way out.
Good shit, Karl. Let's go.
And we may be coming for that wickless 730 15-minute.
Yes.
That's the obvious target right. 23. Yes, that was a 20-point cash flow. Now let's see if we do some damage with this runner. You know what? I'm gonna extend this runner. I'm gonna put this runner back in that original swing we were going after because I think we're coming down for it. You know, it came in, went right above it. I think they're ultimately going to go into the swing. So 131 might be a little too low. Put it at 140. Just in case I want to tap into it lately.
Dame los cubos ahí, al favor. De ahí. Yeah, 212 bounce here. 209.
So what we're starting to do is we're starting to form an apex for this current 3 hour, right? Current 3 hour that we're in.
I mean, you got a question, Karl, in the chat. I know I never seen that name in my life.
What? You want it to go down? Have no idea how this works?
If you want this to go down, I have no idea how this works. Some guy, I don't know why he asked. You a trader or you a gamer?
I don't know if that's a real question.
Right. You day trading? Or what we doing? Not Call of Duty over here. Yeah. What you trying to find out?
Funny.
Let me know. I'm not trying to be funny. I'm trying to know what you mean. I gave it. Oh, I see. You're brand new. You're brand new.
Brand new. You got follow along for a little bit. Get a lot more information when Mickey and Austin get on. They start stepping through everything. I mean, because what you're looking at is like we use the daily profiler, which gives us all our levels right here, right? You know, which helps give us direction, which helps gives us our probabilities, right? So ultimately, I'm looking for lower pricing based on this London model that showed us cratering out around 7 o'clock, which we did. We did right at 7. We hit the bottom, right? We just stay flat, right? Really aggressive right here. But I think this pushed too far too fast, right? We didn't hit the P12 mid and we started breaking back down, right? I didn't see what I wanted to say on that 6 a.m. I wanted to see a sweep, meaning I wanted to see a 1 minute just dive below 6 and start closing back up. We didn't see that. We saw closed candles below, so I took the short, right? Because that signaled to me that, hey, this wasn't going to sweep the 6, that we were going to start working back lower. We had a couple of clues here. Drez called it out earlier. We had a 15-minute candle with no wick on it. That's rare. If you look at this chart, almost every single fucking candle has a wick on it, right? And the only other one that doesn't have a wick on it is right here. Another 15-minute that got reclaimed 45 minutes later. Well, guess what? 45 minutes is now. And I think we're getting ready to come reclaim this wickless candle, right? So it's, you know, these things repeat. These patterns repeat, right? Even though I was looking for a long here.
And also,
it changed. Live price changed the dynamics of that. Good.
Nah,
go ahead,
to mundane. If you want to get in, you in a good channel right here, right now. We have something called the Bootcamp where we teach what we do, and what he's talking about right now is P12. That's a time frame. It's called a 12-hour candle. And there's more information here in this channel. If you tune in every day, right? We got like war game. We have specific things we look to take trades from. What London, Asia did, the different ranges, the different MAEs, MFV, the higher time frame, the higher the time frame, the better the analysis you can make. And all of that you learn in the bootcamp. Is QR codes should be in the chat, right? Somewhere in there. Yeah. Or just go to the profiler.com and you will find more information about what we do, for sure. Yeah. The reason I know the game is because you got Twitch in your avatar. So that's why I knew. But yeah, hey, you can dailyprofiler.com. For sure. See.
All right, now we're starting to close candles below the current 3-hour mid, right? So this candle's starting to look like an apex in here. So it's good. It's starting to give the signals.
Un poquito hinchado hoy. Me dijo que lo dile a la cabeza. Sí, ayer. O le dolía de que la cabeza. Sí, se ve mejor, muchísimo mejor.
Wow, New York One's only been putting in 178 points. That's it, huh? On a Monday. It's not a lot. But if this is the top of New York One and we spend the regular budget of 178, that could bring us all the way down to P12 low. Right?
TDP, what's that mean?
So.
He means the daily profile, but what I'll do is we don't take any tools away from you. It's either you have access or you don't have access. So if you need to open a ticket, if there's an issue, or on the website, you can actually open a ticket as well, then do so. But
yeah, we didn't take nothing.
Thank you, Parker. I didn't know what he meant.
Don't worry. Don't worry.
You got my back.
Always, always.
How you doing, Pocket?
I saw your I don't know. Yeah, I saw your president. I don't know. You poor guy, your president leader or whatever the nation got. He was talking hot this morning.
Carney, oh yeah, he's all over you guys.
Like we don't need you to say.
Election's coming up, I think.
In Canada. So. I don't know if you saw that.
Yeah, I did.
Talk. But tough talk coming out of America's top hat up there.
I don't know his name.
Just like you guys, there's a lot of people tired of Trump.
First day. Oh man, that's nice. Me too, bro. Well, yeah, guys. Karl, I think we out of here, baby.
Austin is ready.
It was a good magic hour for you.
Oh yeah, man.
Yeah.
2:22. All right, guys. Appreciate you stopping by. Enjoy the show.
Let's go.
Did you find value in the Magic Hour trade
Let's
team?
have fun.
You can find them on X here. Watch them trade daily by joining the Pack Trade Group Discord in the description.
Alright, if we break down here, guys, I'm sure for some cash flow targets, I appreciate you for being here.
I'm sure right now target hit. This is what we call a magic hour.
Alright, I'm taking this.
Upside ahead, the momentum to the upside ahead, everything aligning, live pricing, historical data, right?
Right there.
Welcome, this is PackTV. sit back, relax, and watch how we day trade with statistics.
PackTV, God given, so I gotta make it happen. I'm on mission, not like them, I'm different. That bag come with a pension. Talk about that business, shit like on hard all in the pain. Shining hard, don't need no chain. All this drip, it feel like rain. Everything on me, got it on my name. They don't got it like this, they don't talk it like this. I was built for this. That TV not like guns, take it away.
Stop me, it's me. If you're doing this for the women, you're losing. Do this shit for yourself. I do this shit for myself.
They rigged the race long before your first breath. Signed your name in the ledger, made a bet on your death. Puppet masters and neckties, count your hours like cash. Presidents pushing their pieces while you fade in the ash. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn a script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain. Burn it down, burn it down. Burn it down, burn it down. A lead over production, too many miles out thrown. Shine a rise in the rear view, old empires turn to bone. Same damn cycle, same sharp teeth in a grin. They sell you fate on a pay-per-view, call it virtue, call it sin. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn a script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain. Burn it down, burn it down. Burn it down, burn it down.
Hey, welcome everybody. Another episode of PackTV, another week. Okay, so welcome in. If you guys are new, we do this every single Monday where we come up here, we go live, we share our analysis, we show you guys what a typical day looks like in the community from London all the way until market close. With London live trading, Magic Hour live trading. Now we're about to, Mickey and I trade live with Dave here coming up soon with Ambiguous Hour. Then we move into Bootcamp focus and re-engineering. So if you guys enjoy this type of content, leave us a like button in the little comment below if you guys find this stuff helpful. We go live every single day to show you guys just the realistic realities of day trading. Without further ado, Mickey, good morning.
Good morning. All right, it's Monday. Market's already doing great things. Already. Exciting day today. We got Mr. Dave Trades coming up, and I'll introduce him when he comes on. But like a dude I respect in this space, and yeah. You want to get going or go through the chats? What do you want to do? I can start.
Yeah, let's get going. We got a busy back-to-back day, so let us know in the chat where you're watching from. You know, as always, but I'm not gonna. Sadly, we got a lot of people already in here, so I'm not gonna be able to go through every single person. But yeah, let us know. Only thing we really ask you today is if you want to help support the channel, if you want to help support what we're doing, just head on over to X, like and retweet the tweet to let your friends and anybody around you know. We got two different schools of thought coming together today to live trade. Like, how cool is that? We have a group of statistical based traders, Mickey and I. And then we have a market-based trader, Dave, coming up here that's pretty well known with how he teaches and trades. And it is so cool to literally have like coming together of these major schools of thought of just applying live price or applying this perspective to live price. And they're going to come up here and live execute with you guys while having a conversation. So I think it's going to be a really cool stream. I think it's going to be a really cool day. Really excited to see how it turns out. So
that's the cool thing about that's the cool thing about like what we do and bringing different school of thought traders onto the stream is because like it doesn't matter what background you come from, market structure like Dave, ICT, volume, the little footprint charts and stuff that like Karl uses from that one company. Like we just, you know, probabilities are probabilities, and the cool thing is, you know, like they proved what we all speak the same language, right? Most languages of trading that aren't worth a damn have been filtered out, right? That's why you don't see like people with the tic-tac-toe charts on the charts, you know, the X's and the O's, or like all this stuff that is ass and trash has been kind of filtered out of the world of trading. So like now, like what's left is what's left, right? And it's like what you realize is as a trader, everything works until it doesn't, and everything looks good but can be bad without context, right? And so it's really cool to have different views come up on and live trade with us, because number one, everybody comes from a different background. The cool thing about today is like Mr. Dave Trades is in the arena where most people start, which is the market structure, right? You either start in the market structure and then you go down the indicator route, and then everybody either goes to the options world or the crypto world, and they blow up a lot of money, and then they're like, all right, I need to slow down and do this like a profession. So I'm pretty excited about today, right?
Me too, man. I got one question here. Are we counting London as long false or short false here?
Bro, that's
like
definitely that's a short false right there. What did the action of London do, right? And it bought up. So we're going to consider that as a short false for sure.
I'm gonna go ahead.
You want me to go first? You want me to go first?
Yeah, you want to go first?
Sure, I'll go first. share my screen. So we always chart on. We always chart. We always start on the daily chart, and basically what I'm going to do is I'm going to go and I'm going to utilize Friday's candle and Thursday's candle to put probability. Now, this is one thing that we do every single day at 1500 Eastern time during our re-engineering. We always put the probabilities of the next daily candle on our charts, and we always war game Asia, right? Hey, will you do me a favor and turn down that background music a little bit? It's totally distracting. So since we didn't do a war, thank you. We didn't do a re-engineering at 1500 on Friday because it's Friday and I had stuff to do and a concert to go see and a date to take my old lady on. Like the Asia traders covered down, but if we're gonna go on and do it anyway, because I know I had people in the boot camp that are trying to learn the system. So we're gonna come on over to the daily profile. We're gonna log in. We're gonna go to the candle signs app, right? And we're gonna say, hey, Thursday was a red candle, right? Friday was a green candle. And Friday was an inside bar. So let's go on and define that. We couldn't take out the previous day high. We're going to take out the previous day low. Right, and we can see right out the gate that there's a 69 for the high, a 59 for the low. Well, the first thing we did, right, was we breached the Friday's opening price. And then we took out the low, right? So far, this is what we have done. We've taken out the low, we breached the opening price, all this stuff. The moment we breached that opening price in Asia, we knew that probabilities shifted down to this previous day low, right? But now what we're going to define, because a lot of people say it's an inside bar, it has to take both sides, right? And what an inside bar, if you don't know, is it means it didn't take the previous candle high or low of the previous candle, right? And we've proven this statistically over and over and over again. There's certain if-then actions that need to happen. It does not have to take out both sides, right? But now we're going to go see what probabilities say about this sequence. Is there a high likelihood of us taking out that hot previous day high now? Friday's high. This is defining Friday's being an inside bar. We've already breached previous day open, and we've already taken out previous day low. And you can see that there's an 80% probability of taking out previous day high. So that tells me right out of the gate that a level that I need to pay attention to even anticipate that is this previous day mid, right? And this is stuff that we teach repetitively. We've got simulators and all that stuff to help you learn the different steps, right? So we know that this high, previous day high, now has an 80% probability. We know that, let's go do this real quick, right? We take out previous day low. We know that this sequence out of the last 20 years on the daily chart, right, has happened 245 times, 245 times, right? This exact sequence, the previous day, Friday being an inside bar, green, Thursday being red, us breaching Friday's opening price and taking out the low, has happened 245 times, right? So this yellow line is going to represent the previous day low, right? And these cool little dots are the distance that out of this 245 times that price went before reverted, right? So we're going to start at the, what I call the 30th percentile, meaning that 70% of this 245 went below 25 basis points off a previous day low, and 30% of them reversed before even hitting that. So let's draw that out real quick. 25 basis points, which is right there. Oh, I gotta unlock it. Oh my goodness. There we go. Let me unlock. Do this again. So we knew that there's a 70% probability we're going to touch the bottom of this green box, right? Now what we're going to do is we're going to go to the median, right? So this is the 50th percentile. So we knew out of this 245 days that we've done what we did on Friday and Thursday and overnight, right? That 50% of those 245 reversed before hitting 48 basis points, and 50% of them kept going. All right? So we're going to draw that 48 basis points out right there. Right? And so we're in a market where volatility is contracting. It's starting to pick back up, but we don't just change our way of thinking and our systems based off of one day. So right, we know that this is the highest probable box to expect reversal when volatility is contracting, right? But we're going to still draw the 70th percentile, meaning out of this 245 days, 70% of them reversed before hitting 81 basis points off the low, and 30% kept going. Now, if we were in a market where volatility was expanding, then yes, like we would expect the 50th to the 70th and possibly lower. So that was 81. Man, these drawing tools are kicking my butt today. So we can see right here, right now, that there is no reason from this view to expect lower prices, right? Statistically, we met the criteria. And now if we want to go attack that previous day high that has an 80% probability, we can. Now, with that being said, right, this is one thing that should learn from me in Austin is that, like, most people think purely, if they're statistical based traders, they think purely like linear statistics. Whatever has a higher probability, that's what they have to execute off of. We're not like that. We know that probabilities are important, right? They help our decision making. However, the live price has to agree with it. So that 80% for previous day high using candle signs, right, is cool and all. But if we just blindly start buying, it's going to be the day that that 20% kicks in. Right, so let's continue going down the rabbit hole and defining what criteria we're going to have to use to target that previous day high that has an 80%. Right, so now we can see that our current high of the day is at 1950.51, which for you Asia traders is the exact time, 2000 using Friday's AM and PM. That said, if we're going to go with the lower probability in reverse, right, this is when we should do it. So hopefully you guys caught some really awesome shorts. And then right here, the 4 o'clock, right, that's an awesome time to go false, which is that lower probability movement, right? So the daily profile, we're going to log into the actual daily profile now, right? And this, so what we just used, which is candle signs, let's just put probabilities on open, high, low, close patterns, right? Now, what the daily profile allows us to do is to put probabilities on sessions, right? So let's do this real quick. We're going to reset everything, right? And we're going to say, hey, Asia went long, and we can see that there's a 64% probability that we're going to continue to the upside, right? There's a 35% probability that we're going to reverse, and we kind of define which one we're going to do. So last night we reversed. Right, we planned for both sides, and wouldn't you see that, right? 1955 to 2000. If it's going to reverse, that statistically is the highest probable time for it to reverse. And guess what it did? It reversed at 1951, right? So I know a lot of you guys that are coming from the Dave Trades community. I'm not a market structure guy. I'm mediocre at best with market structure, but this is that kind of stuff that I use along with other fixed constants that the hourly and the 3-hour time frame do. That gives me an edge in the market, right? So now let's go define London real quick, right? So London broke short, right? And so we can see that London has a 62% probability of continuation to the downside and a 37% probability of reversal, right? So we can do the same thing that we did in Asia. Right? If we're going to go the lower probability, what time can we expect it at? We can expect it around 3:45 to 4 o'clock, right? And so, right here at 4 o'clock exactly, we got that reversal, right? So you can see, right, like how we do that. Now we're going to do the same thing with New York 1, right? We can see that 7:30 to 8:30 is our time-based range that we use. right? And we broke to the downside, right? So we know, and now we're going to do a very detailed analysis. I just did hasty ones to show you guys how we do things around here using Asia and London. But we went short, and we can see that this is the session, unlike Asia, that had more probability of continuation after breaking out of this time-based range, and London that had more probability, higher probability to break out and continue. New York 1 is the complete opposite, right? New York 1 tells us that there's more of a probability of a reversal than a continuation. So we're going to look at this through both lenses, because remember, this might have the higher probability for a reversal after breaking out of the 730 to 830 time-based range. However, if I just blindly sell, right, that's when the 35% of the time comes in and says, hey, we're going to continue selling off like we did on Friday in the New York game, right? So we know that there's two possibilities now that from 7:30 to 11:30 that it can do, right? It can do the short false. Wait, let me make sure. Broken. Yep. All right, we can see, right, that this is the one possibility. Right? And we can see that the other possibility is short true. Right? So, right, we know that one goes down and one goes up, right? I mean, yeah, the lower probability is that we just completely sell off into oblivion. The other probability is that we go down to come up, right? So now what we're going to do is we're going to put probabilities on our low of the day based off of what Asia did, London did, and the highest probability, which would be the short false. Right, and we can see that under this situation, right, for a short false, the highest probable low of the day is going to be, number one, we can see that there's no real edge in overnight highs of days and lows of days. Yes, we have data around that 2000. We've got about 5% there. We usually do the whole hour, 5, 9, around 15% where our current high of the day is. We currently have around 10% where our low of the day is. But if we look right here, this represents the time of highs of days and lows of days based off what Asia and London did, right? So with that being said, we can see we can anticipate a new high day and a new low of the day in the RTH, because we're going down to come up, right? I like to say, like, it's either going to be a low of the day between 9:30 and 10:15 to a new high of the day in the day, or it's going to be a new high of day in the morning, the new low day in the afternoon. Now I'm going to lean heavier on the low of the day in the morning and the high of the day in the afternoon. Why? The fifth principle of patrolling is common sense, right? We're closer to the new low of the day than we are the new high of the day. All right. So I'm not going to try to get jazzy with it and say, hey, we got to rip up here to come down. No, I'm going to say, hey, we're going to make a new low of the day in the morning. And then if we attack this P12 mid and this previous day mid, then any longs that we engage with, we can leave runners for this previous day high for that 80% probability. But if we can't do that, then my job is to let go of that high of the day scenario and just accept the high of the day that is at 1951. All right. So now from a price standpoint, right, we're going to look at the low of the day. We can see from mode to median, right, our low of the day is from 0.4 to median, which is most of the data, to 0.8. So we're going to come to our short false, and we're going to go 0.4 to 0.8, 9:30 to 10:30. I conveniently have it already selected because that's the same thing we did Friday, right? And we can see that we already breached this box right here. This green box represents, from a time and a price standpoint, the statistical most of the time low of the day that we did what Asia did and London did and went short false, which is a higher probability. So we're going to keep that in mind, right? So now, how do we define if we're doing that movement where we go down to come up, right? Right? And so, like, I do steps for everything. I have traumatic brain injury, 8 concussions, 6 from my IDs, 1 from an airborne jump, 1 from getting hit by a vehicle. Like, so everything is a repeatable step-by-step process for me, right? That's why, like, I suck at market structure, because there's so many variables that can happen, right? And I can't find a repeatable system that I can do. I'm going to talk with Dave. Maybe he's got something about that. But like for me, if I know that there's 2 possibilities, right? We're going to, from now to 11:30, we can come down to come up, which is the highest probability, or we can come down, right? I use something called the 4-step reversal to identify the times that we go down to come up. And I use something called the 4-step continuation for the times that we continue to go down, right? Thank you. All right, so the 4-step reversal simply is this, right? I'm going to draw some imaginary boxes, right? So this is going to represent the 9 o'clock hour, and I'm doing this between 9:30 and 10 o'clock, well, 10:30, right? First step is, can we get above the 9 o'clock's 50%? All right, so whatever the high to low range is, can we get above that 50% of that range? Second step is, can we get above the 9:30 1-minute candle? That's step 2, and then step 3 would be 10 o'clock takes out 9 o'clock's high, and step 4 would be something called an instat low. We've ran the statistics on when we typically put lows and highs in the hours, and we break them down to 4 15-minute candles, right? Q1 is the first 15-minute candle, and so 10 o'clock needs to make an instat low, right? Which is statistically the most common to make the statistical high or low for the hour. And then a Q4, which is the last 15-minute candle. So the 4-step of the 4-step reversal is, can we make it instat low? And then once I lock those 4 steps in, doesn't mean I'm not taking trades before that, but I can definitely lock in that low of the session for the 3-hour and expect a 3-hour line up, or the low of the day, etc. Right? Now for the 4-step continuation, and if I take longs, which I'm not afraid to, I will, right? The way I do it is, because the higher probability movement is to go down to come up between 9:30 and 10:15, right? I will use around 2.5 to 5% risk per trade, right? I do something called cover the queen at 10 basis points, meaning like I'm taking half the position, turning it into a risk-free trade, period. I can always add to that position at 10 o'clock or 11 o'clock. If I really captured that low of the day scenario, low session scenario, I can always add back into that position. Right, then I have half the position still left. I take a cash flow target at a high probability movement called the gunship, and I'll use the 50th MFE, right? Because the market is aligning with that movement, so I'm going to shoot my partials a little bit higher. Good morning, Maz. It's good to see you here, right? And then I'll have a runner on for the rest of the day to target that ended day high day, right? And if it comes back and stops me out, that's okay, because I covered the queen, right? I've already taken cash flow, and I'm okay with like getting stopped out of that. So no harm, no foul, right? So now let's talk about how I'm going to define, right, this step right here if we decide a continuation to the downside. Well, first step is we blow right through the short false, which is a higher probability, the reversal low of the day zone. We just blow through it and we don't respect it. Second step is lack of 4-step reversal. So we can't get above the 9:30. We can't get above the 9 o'clock's 50%. And then the next steps I do is, because it's the lower probability, I want obnoxious data that is separately measured to tell me. One of those steps was...
Is this a me thing, or did I lose you?
No, I'm still here. Can you not hear me? Type in the chat if you guys can hear me. Yep, it's the Austin thing. All right, so when we take the 6 to 9 o'clock range and we measured it, all right, we noticed that once we breached 40 basis points off of the 6 to 9 o'clock low, in this case, more times than not, we went with that lower probability movement, right? And then the last thing is, if we take the MFE of the 7:30 to 8:30 range, so this time-based range that we base our decisions off of, right, we can see we saw the same effect. Once we breached the 50th percentile, which is right here, conveniently synced in with the 40 basis points today, right? We got the lower probability movement more times than the higher probability movement. So with that being said, I will take shorts, but because it's the lower probable movement, right? I do about 1% risk, 1% to 2% risk per trade. I cover my queen 10 basis points off of entry. I use a higher probable target, the 25 percentile off a gunship. And then, because what you got to realize is like we have every time-based range, every stat, every MFE, every MAE. We know statistically the 9:30 to 10 is the highest possible reversal time frame of the day period. There's no other time frame that has a higher hit rate of a reversal than 9:30 to 10. Like you already saw when I was doing my war game, Asia has more likelihood of continuation. If it's going to reverse, it's going to happen specifically at this hour. Same thing with London. It's more likely to continue. And same thing with New York too, which is the afternoon session. It's more likely to continue. The reason I'm a little bit, I trade manage differently for the lower probability is because I know that 9:30 comes with increased volatility, and any 1 minute candle can just rip me out of that position if I go with the trend. So I would say 9:30 to 10 is that time where you can anticipate that the trend is not your friend. It's actually the complete opposite, but that's the only time of the day I'll say that. So I will take shorts, all right? I will reduce my position size of entry. I will still cover my queen 10 basis points off of entry. I will use the 25 percentile, which has a 75% probability of getting hit. And then at 10 o'clock, if we're still below the 9:30, all that good stuff, I'll look to actually add into a continuation trade for the 9:30. I mean, for the New York morning. So that's my trade plan. It was fast, it was furious. I rushed it because we got Dave coming on. We got Austin that still needs to do his war game. But if you like this kind of analysis, every day, Monday through Friday, I come on the same YouTube channel at 8:30 in the morning. I go very in detailed. I do the same thing over and over again. I've been doing these same steps for years in front of you guys, and they're not that hard to memorize. Remember, like I built this for my strengths and my weaknesses. My strength is I have a master's degree in statistics. My weakness is I have 8 concussions. So whatever I make decisions from, they have to be repeatable and constant every single time. Because I believe that 98% of the decisions that you make around trading can be defined before you ever press a button. And that's what I got to say about that. Austin, you're up.
Yes, sir. Boom. All right, guys. I just want to, like, this is insane, by the way, but like, we just hit a new all-time high stream record. We have 162 people. We had 154. That was the current PackTV record 2 weeks ago when we had Rye Trades on, and now we're bringing Dave. Dave isn't even up here yet, and we're already hitting all-time highs. So that's pretty crazy. So hit that like button if you haven't yet. We're breaking records, baby. All right. So welcome, guys. If you're new here, for me, you will notice a lot of the things that I look at. It's pretty similar to what Mickey says. So, you know, I'll try to, anything that Mickey kind of touched on already, I'll just kind of briefly go over instead of go super in depth. So let's first start at the 60-minute time frame. That's the first major thing that I care about and look at. And why is that? Why do I start at the 60-minute time frame? Because I just want to see, if I'm a day trader and I'm trying to trade the fluctuation of the daily candle, well, then I want to see, how does this daily candle fluctuation impact the weekly candle, right? How is us creating the open high low close or the open low high close of the weekly candlestick, and how does the daily candle kind of influence that? So for the weekly candle, every day has some sort of statistic. If it's a Monday and Tuesday, statistically, that's one portion of the week making a higher low of the week, and then vice versa, Thursday to Friday typically makes the other side. So in this case here, you see how today we made a Sunday weekly high, but a Monday weekly low. So if we get back above the weekly open for any reason, and then going into Tuesday to Wednesday, we keep this low of week, whatever the low of week happens on a Monday, I know that statistically we're making a good low for a bullish weekly candle, and vice versa. If we can't even get back above the weekly open, holding this Sunday high, going into Tuesday to Wednesday, I know to look and see, is there reasons for daily candle continuations to the downside because the weekly candle is forming bearish. So going into today, I can see that we have that Monday weekly low and that Sunday out of stat weekly high. Going into now the daily candle, same thing, just like how I look at the high and low of week and where we're at within the current weekly candle, we're looking at the current out of stat, in stat, high and day, low a day. I like to tell people, if you're kind of new to statistics, we're not doing math calculations on the chart. We're not actually doing quantitative financial, whatever you've seen on Google. If you Google quantitative stuff, we don't do none of that. It's all just calculations that are already printed on your chart. And so I'm just using, like a little detective, what is the day currently mimicking of what historically has happened before. So if I can see that statistically, this is an out of stat low of day, because typically we only make highs and lows of days between 18 and 1900, 3 to 4, 9:30 to 10, and then power hour 15 to 16. Because I can see objectively within the numbers that those are the 4 major times that we make some sort of high or low of the daily candle, I want to now align that. Let's mark this down real quick. This is an out of stat low a day. And then I come up here and mark my high. So this is an out of stat high a day. And then now I just want to compare generally. So you guys seen Mickey do this way more in depth. I want to see generally with these out of statistic high a day, low a days, does this conditionally make any sense with the daily profiler? So then we add the daily profiler to our chart. And the daily profiler, what it does, and you guys, again, seen this with Mickey already, is it shows you these boxes here of just conditionally, what did we specifically do overnight that leads to the high day, low day being made at what specific time, and how far does price have to move within that time period? So that box, that's what makes these boxes, is from left to right is the time that which statistically could be a low a day in this case. And then what makes it go in height from the upper point of the box to the lower point of the box, that's price distribution. How far off the open did price move down to make that low a day within this time period? And what it does is you got this nice little box that shows you that if we go short false, meaning, again, what you all just seen Mick do, if we go false to then, if we take the low to then come up and take the high, this is where, from a time and distribution standpoint, we should be making that good in stat low a day. And then vice versa, if we do the continuation. One thing that I love to tell people that the daily profiler really helps me a lot is the nuanced high day, low a day. So we know generically the 4 major times, anybody can remember that. But what's really hard to just remember in the back of your mind is all the different variables of what the overnight could do that then bleed. Maybe 1950 is a good high a day. And if it is, what condition makes sense for this high day making sense? And this is where I tell people all the time, from a statistics standpoint, this is where people miss the forest through the trees. If you want to use statistics, you're not just looking at the high strike rates. You're not just looking at the things that give you a large number and you're always marrying that large number. You're applying context to both sides of the number. You have, let's say, an 80% probability of something happening, but then you also have a 20% probability of something happening. And depending on what probability you have, there's probably signatures within live price that bleed into giving you both of those probabilities. So if you could just close your eyes and, copy and paste all the different times price retraced to midnight open when it was below, you can imagine price would have to obviously make a move up to the upside and vice versa. So that the context behind midnight open getting retraced, if it's below, price is making an up move and then vice versa for the down. So the same analogy there, apply it to the high day, low day stuff. If we know that 1950 is an out of statistic high of day generically, but conditionally, specifically with how we moved in the overnight, you see this box here the daily profiler is highlighting, saying, hey man, just letting you know, if we do any short true movement, again, that's where we take the low of New York 1 and do not take the high. There is some significance for this high of day that currently stands. So this doesn't let me or Mickey marry this short true high day. It's not as if we're trying to form a bias or only trade one side of the market. That's another reason we love Dave, and we're having him come up is he loves to also account for both sides of the market. And that's what we do is if we stay below the 930, if we stay below the P12 mid, we can't even get back to the P12 mid, which is the halfway point of the daily candle. If we can't do any of these signs of reversion to show that bullish intent, we're most likely going short true. And what the daily profiler just lets us have a little bit more confidence with that trade if we do get a true movement, because that high day is supported. So now the final segment here, my war game that we always like to make a joke on. Cool story, bro. Cool story. Cool essay, school report, whatever you want to call it. But what actual trades are you going to take and put risk behind? What's the trade? And so this is perfect timing. So my trade idea is going into this, and then we're going to bring up none other than Mr. Dave Trades, is if we do the false movement, if we do take everything to the downside and make an in-stat low a day and get above 930, I use this box to represent the 1 minute high and low of the opening range. If 930 comes down, makes an in-stat low a day, and we get back above it, I'll be looking for scaling longs for all the statistics above going false. If we do the early pre-market mean reversion, okay, this will be scenario number 2. If we start reverting and going false right away into the 930 and 930 opens somewhere in the mid to lower portion of the P12, the overnight range, we get below it, I will take shorts for new lows of days. If we get above it, I will take cash flow longs only to the weekly open. And none other, Mr. Dave himself. What's up, Dave?
What's up, Austin? How's everything?
Dude, your timing's impeccable, by the way.
Oh, I mean, I had to make sure I was early. You guys are military guys, so if you're on time, you're late.
5 minutes to the 5 minutes.
Exactly,
right?
Exactly. Have you doing push-ups on stream?
Yeah. What's up, morning, guys? Morning,
dude. Well, dude. So
dude,
I don't
brought
think
a lot of people with you. My bad, Austin. You brought a lot of people. We don't even know if our systems can support this many people watching us.
I was literally just telling them we hit an all-time high for the stream 2 weeks ago at 156. Before you even hopped on, we were at like 173. So we're just bullish today.
You guys just by next year, you guys will be adding another 0 to that number.
Dude, that would be dope. We'll see.
Yeah.
So Dave, tell everybody, for the people that don't know you, give you a little rundown. Who are you? Why do you trade the way that you trade? What's your experience? And we'll just get right into it.
All right. So, when I first started trading, like many people, it was from a place of desperation, right? I did not have the facilities or the ability to be able to work and make money and risk little by little while I was learning. I was in a place where I was desperate. Food was running out, going through eviction. I had kids that I was taking care of, and it was a lot at the time, a lot of pressure, right? And as for men, these are things you don't generally talk about. You just take it all in and you try to figure it out, right? But my kid asked me one time, she was like, why don't you just pay the rent? Like just out of innocence, if rent is due, to pay the rent, and that broke me, that crushed me on the inside, because it's like, what do I say to a child that depends on me to provide when I know that I spent this amount of time wasting it, right? It was leading up to this moment, and I was still playing video games. I was still doing all these different things that it was just careless, as if I had more time and I didn't, right? I failed as a father. I always talk about that, failed. And I came across trading, and trading was something that, we all start out with the whole, you can get rich if you just spend X amount of money, do the leverage trading, or, as you mentioned earlier today, the crypto, the options, it's just different things you tend to go into. I think Mickey had mentioned that there's different things you tend to go into in trading. And I went into the Forex field because it was just leverage, right? Leverage is being able to spend a small amount of money to hold a larger position. Leverage is I mean, dangerous too at times, right? But that was the style of trading that I went through. And when I was learning, I went through, like many people here, so many different strategies, right? You're learning with the Fibonacci's, you're learning with support and resistance. Different people have different ideas of how the market moves, but no one generally had the answer. Everyone was telling me, hey, if you're trading for money, then you need to quit. And at that time, I didn't have that option, right? I get it. I'm a guy that would carry 2-3 jobs if I could. I worked 2 jobs and took 21 credits in college. You know, that was me. Every quarter I was working round the clock. I probably had about maybe 4 or 5 hours of sleep a day, but I was doing so much, and I can do that, right? That's right. I think as men, when we have kids, there's something in our loins that sort of gives us the strength to continue even when we don't want to. So that was me through college. Coming into the trading field, I would hear all of that. If you're trading for money, then quit, go find a job. I couldn't find one. I was injured, awaiting 2 major surgeries. I was fired from my job. There was no way for income to come in at the time. So I had to figure out, okay, I don't have time to sit in Discords. I don't have time to watch live streams. I don't have time to talk online about who's a guru, who actually knows how to trade, who doesn't, who's scamming, who's not. I don't have any time for that at all. I have to figure out what works. So I started to just quickly scale through a bunch of different strategies. That means that there's no time online, right? No social media. I had a blackout during that entire period. No social media, no playing video games, nothing at all other than focused on what I need to do now. Granted, there's a bunch of people saying, you can't do this, right? Limiting me at the time. I knew that if my discipline matched my level of desperation, I can figure it out. I always have, and I always will. So granted, it is much harder to trade when you do not have money. It is so much harder to trade when you are trading for money. It is not impossible, but it is incredibly difficult. And the only thing that's going to get you through that moment is risk management and discipline. You literally have to execute like a robot, and your risk has to be the same each time. You can't afford blowing up. You can't afford losing your Sonic rings, losing the coins that you have to be able to play this game, to be able to scale. So you cannot size up improperly or too early, and you cannot just degen and take trades outside of a system. So I was in search of a system. I wanted to know who was teaching what that was cyclical, that was repeatable. It was something that I could essentially do on my own and blindly follow, right? I wanted to look at different strategies that could meet the needs that I had, which was to be able to trade my way out of the environment that I put myself in. No one had the answer. There was no course out there. There was no theory, nothing. I've been through all of it. Elliott Wave, Wyckoff, GAN theory. I've looked into a little bit of Dow theory, all these different things that are out there.
Well, what about harmonic patterns? Did you draw some bats on your chart?
I bought a book on harmonic patterns.
Listen, we all go through the bat phase, okay?
Yeah. The book had so many typos in it that I couldn't even read it. I was just like, no, I'm not doing it. You know what? I'm gonna sit here at the computer and watch price. I'm just gonna watch the charts. So I spent quite a bit of time that a lot of people don't have, but for me, I was getting surgery at the time, and I had the downtime to do it. I learned after COVID, not, most people, they generally found out about trading within COVID. For me, it was after. While everyone was at home learning this, I was working. And when everybody went back to work, I was at home learning this. So it was just always the opposite of everything. But I was watching the charts, and I sat there for 16 hours a day, right? 7 days a week, no breaks for 4 months straight. I'm just sitting at a chart, staring at it, not with I'm distracted looking at things online, or I'm talking in Discords, or I'm watching videos. I wasn't distracted. It was just watching the charts, that hyper fixation on what can I find within this movement of price that repeats. I need that thing, nothing else, right? I don't care about what happens in New York that doesn't happen in Asia. I became profitable in the Asian session. So there's this misconception that Asia is you shouldn't trade it as a terrible session, or you should.
Oh, we can prove that. We can prove that wrong.
Dude, we sit here all the time like, I don't understand how these people are saying, like.
Yeah, it's parroting, it's repeating. When people say things that they have no experience behind, you immediately know this comes from a thoughtless mind. This is just in AI, and in the AI field they call it meat proxy. So it's someone that takes whatever AI generates, does not read through it to look and see if it's accurate or anything, and they just relay it to its intended recipient. Yep. So that's what these people were, meat proxies. They would come on and say, after 10:30, there's no volume in the market, right? Like, what are we looking at the same market right now? There's no volume on gold after 10. It didn't make sense, but I realized that much of these people that were on screen, much of these people who were even big in some of the different parts of the industry, they just repeat what they hear someone else say.
Yes.
And it's not anything that they actually have experience with. So I went through the rabbit hole of hearing Don Vo repeat Raja Banks repeat this, Alan Sky repeats. It's all these different guys that are repeating something they learned from someone else who did not know how to trade to begin with.
And the origin guaranteed started with this statement: this is high probability. And they had no probabilities behind it. They had no data. They just said high probability is the selling point.
And that's why we even started making this joke, Dave. It's so funny, and it's kind of funny how profitable traders kind of all speak the same language a little bit.
Yeah.
We say, you know how people say the trend is your friend, right? Well, this always bugged me as a day trader, because it's like, well, what trend? Like, are you swing trading? Or are you trading a 1 minute candle, an hourly candle? Because I can definitively show you, as an intraday trader, the trend is not your friend if we statistically range more than we just make a clear one directional move. And so it's like, where do these sayings, and that's what even led us to trade statistics. It's like, people keep saying this is high probability, this is high probability, this is good. It's like, well, my nerdy brain, for me, just like how you were like, I just need to see that move. For me, my brain, I need to prove that is a high probability. I can't just sit here and take your word for it. So like everything that I wanted to pursue or look at, it's like, what is the actual probability? Not just, nah, it just looks good.
Yeah, I mean, with that, it's so true. I started out what I became profitable with, or not even, I don't want to say entirely, the profitability that I have now. It was just on the cusp of consistently profitable. Still felt difficult, but was making money at the time. It was with trend lines. And I mean, just slappatory trades on the chart, right? It was with trend lines. And for me, it was so difficult. It was so hard. Why? Because we had weekly trend lines, daily trend lines, 4-hour trend lines, 1-hour trend lines, 15-minute trend lines, 5-minute trend lines, 1-minute trend lines. And before you know it, the whole chart looked like a frozen strobe light. It was just, I couldn't believe that there was this break that goes to here, then it breaks sometimes and then continues in that direction. So, okay, the trend broke, we expect a new trend, but then it continues in the same trend that it just apparently broke. And then the risk is too far, the risk is behind the high that previously traded back to the trend line, or the low that traded back to the trend line before it broke. And the risk was way too much on that. So I had to figure out, what is it that I can do that allows me to risk a smaller amount and still follow what the market overall is doing. This is where market structure came in. And market structure that's trend lines, but with a little more detail in it. So there's market structure, then there's multi-time frame market structure. So as you mentioned, with the trend is your friend, yeah, what time frame are we talking about? Because we can be in a downtrend on the weekly and an uptrend on the daily, and a downtrend on the 4 hour and the 1 hour, and an uptrend on the 15-minute, and then on the 1 minute we can just be consolidating. So what exactly is the trend that we're engaging in? This is where multi-time frame market structure came in. And with multi-time frame market structure, that was something that helped me to understand there are highs that are placed at specific places. There are lows that are placed at specific places where price does not generally return to them. They're protected highs, they're protected lows. Well, that's what we coin it as. That's what we explain it as, but it's not necessarily protected. Price can go down and break it if it wants to, right? We don't control where billions of dollars go, but there's a higher probability that this remains intact should this behavior continue. And
if then,
this,
not
exactly. If then, that's essentially what it was. So I went into market structure, and then, going through market structure, I started to see a little more detail in the market, which led us into where we currently are now. But it's just, throughout the years, you just begin to refine, and you refine in a way where you understand that while I'm mechanically following this, there are times where this does run out. Like when Mickey just mentioned that, with 9:30 to 10 o'clock, we see these reversals that occur. Yeah, this is entirely true. That 9:30 to 10 o'clock, some people get caught in that. Okay, 9:30 is supposed to take out 10 o'clock's high, and then could go to the pool of liquidity that's up at the smooth rounding, and the London range is going to, and before you know it, you see a reversal, and it heads the other way, and there's people caught at the top of that reversal, and the market just trends the other way for the rest.
Exactly. That happened on Friday, actually. So that's why it's important to know where you have to change, because I think it's, as a retail trader, the only thing that you can control is your decision making and your position size, right? Yeah. And I think decision making and position size are equally as important, right? You mentioned the position size, and I definitely want to hear what got you to that, because I've been proving it and saying it with statistics, with live trading and all that stuff. Position sizing is the one thing, doesn't matter what kind of strategy that you trade, that can really increase your sustainability in this market. And if you have sustainability in the market, then you have scalability in the market. So what got you to the point where you understood position sizing being a huge thing?
So it was being able to take trades, and what we end up seeing was, even if we take trades based on this mechanical thing, this mechanical idea, or this high probability idea, the day that the probability, the day that the idea does not work out, we end up blowing up. The day that the probability does work out, or the idea does work out, we make a little profit, right? So it was just, having to take trades and seeing that while some days this does work, you give it all back the next day. Monday, Tuesday, Wednesday, great days for you. Thursday, you get destroyed and give back all 3 days of gains. And then Friday, you lose your entire account trying to make back what you had during the week. There's that constant loop, that constant cycle that's throwing you back and forth between progress and growth, and then losing it all. And now you have a strategy that can work should sizing be something that you take seriously, or you have the proper sizing, but you can't scale because you keep giving back. You keep going back to flat. You keep going back to break even. So you can bring your account up by 500, 1,000, 2,000, 3,000, but then you give it all back within a couple of days. And then you can bring it back up again because the strategy actually works, right? But you give it all back again. The thing that stops you from giving it all back, you should never lose your entire account in one trade. You should never lose your entire account in one day, not even 1 week. But the problem is, when people are improperly sized, this is what ends up happening within the parts of the strategy that you will take losses. Every single strategy that's out there, you will take losses. So whether the loss rate is something that, let's say the loss rate is 30%, or the loss rate is 70%, whatever the loss rate is on a strategy, when you encounter the trade that's going to lose, if you are improperly sized, it doesn't matter how many great trades you took prior, you're going to blow up. So with that, it was just making sure that I understood I can't scale an account if I'm using improper size. So I need static risk. And with my static risk, the only way I can increase my risk is if the equity increases. So I started this thing where for every $1,000 that I'll make, I'll add another micro into the mix, right? So I'm starting with $1,000, or let's say I'm starting with $10,000. I'm adding a micro every 1,000 that I make. I can't blow up that way in a single day. I can't blow up that way if I lose 4 or 5 trades in a row. So it was optimizing the risk for those losses that were within that strategy. The main problem in this industry is that people are trading without an actual strategy. And no matter what your risk management is, if you don't have a strategy that's profitable, that has some type of positive expectancy to it, then you're not going to be able to scale at all. You need the proper strategy, and then you need the proper risk. They both go hand in hand.
Absolutely agree. And like the expected value is the most important part, but like also like the profit factor, and because like there's people out there that will trade 50% and below strategies. However, what you got to realize is like, are you disciplined enough, like you said, to actually sustain the consecutive losses and the max drawdown periods, right? And if not, like maybe that's something that you do a beep bop robot and have it be disciplined for you, and you check on it once a month, right?
Yeah.
What do you think about? So I think being a good steward, like all I hear is Dave is a good steward of his situation, of his experience, of his work ethic, of his capital, right? What got you to being a good steward, and what made you different, right, than just trying to rig and gamify the system, the prop industry, or choosing the lazy easy wrong over the hard right? What got you to that point in life? Like, was it trading, or was it something that happened in your actual life?
So it has to be, I would say, both. The first part was when I was introduced to trading, but that was with the life circumstances that I had put myself in, that I didn't want to acknowledge. I didn't want to be honest about to myself. And
real quick, you keep saying you put yourself, and I think there's a lot of things that make a profitable trader. That self accountability right there, like that is something that any industry that you go to, like instead of playing the blame game, taking accountability, that's huge. Because if you learn how to take accountability with yourself, just like I say, right, if you got to learn how to manage your budget before you come into the markets. But if you learn how to take that accountability yourself, then you can actually make change. I think that's huge, and we can't sleep on that. That's the sign of a champion right there.
Mm-hmm. I mean, with that, I wasn't willing to go down the rabbit hole of where it began until trading. Trading started to pull out some of the ugliest things in me. It started to show me that I was impulsive, that I was stubborn, that I had a big ego,
mirror,
that
bro.
I wasn't
It's a mirror.
that I wasn't transparent, right? It started to show me all of these things about myself that I didn't want to acknowledge when it came to my own personal thought. I didn't want to look at the mirror, but trading created a mirror for me. And I had to either respond to that or try to creatively get around it by what? Breaking my rules, my plans. Oh, I got in based on this. I got in based on that. Oh, the market is being manipulated. It's easy to point and say it's someone else doing something that's causing your hardship than taking part in getting down to the bottom of why your hardship is occurring and what part you play. So trading taught me that. The markets taught me that. It kept pointing the finger back at me. You didn't lose this trade because something that happened in the news or because some kind of broader manipulation. You lost this trade because you didn't even wait until your plan showed up in order for you to execute and take that trade. So I had to go through each of my losses and look at my plan against the trade that I took. And most of the time when I lost, it's because it did not align with the actual plan. I said, I'm going to wait until price gets here, and then I'm going to look for the confirmation and then take it away from there. Price got close to the level, then it ended up moving significantly away from it, only to turn and go all the way back to the level. But where was I? I was caught in the top of that impulse, ran all the way down into the bottom of the low that was there, lost everything, and then it continued to show up the same exact way in every single loss that I took. I kept getting ahead of my plan, cart before the horse. That's essentially what it was.
Well, I tell people, like, the whole accepting losses, I just say, dude, it just increases the velocity of your edge. Like, if you have edge, okay, like imagine, I like to shoot guns, right? It's like, imagine shooting a brick wall 5 feet in front of you versus 100 feet in front of you. Like, that bullet is going to travel further the further your obstacle is away. So like your edge, if you just destroy in a single day just because your ego or whatever, like you're limiting that increased velocity that edge actually can produce. And and what you're saying is like, it's like you just keep touching that stove enough, you're either going to be like, dude, I'm just going to quit, or people like us, we have a clear vision, we want to do this for the rest of our lives. Like, you're going to learn to be like, I'm not touching this stove anymore. I'm not. People
or you make changes, like we hear it all the time on Twitter. Like, with the same accounts we follow, they're like constantly saying, man, price action is garbage. Price action is garbage. Price action is garbage. And I'm like, dude, like, then figure out why it's garbage and align with it. If you keep saying something is garbage, why aren't you adapting to it?
Because price is supposed to do what they think and not them following price.
Bingo. It's like, dude, how many? It's like, I said this last Friday.
Market openings.
Imagine every day being like, man, today's a bad day. If every day's a bad day to you, you have something going on. Like, I have maybe one bad day a week, like just feelings and emotions wise.
Yeah.
If I have more than that, I need to change my environment.
Right. Market's open is dropping.
Let's go, baby.
Remember, we're expecting a new low of the day. Statistically, we should have a new low of the day. And then me and Austin will start looking for longs. We'll be paying attention to the 4-step continuation process. And Austin, I'll let you take it from here.
Yes, sir. And Dave, feel free to share your chart and interrupt us if you ever get a trade popping off or it's setting up or anything.
Yeah,
we never take it personal.
Sure.
All right, we're letting the 930 candle just form. Like, if it had already made a new low of the day, then I'd be hyper focused on is it rejecting, but we haven't done that yet. So as 931 and 2 comes in, I'll be paying attention. Does it get outside the 930 low? And does it continue to suck back into the range, right? Those are we know that we're expecting a new low of the day, and there's your new low of the day. So now we're paying attention to the action of a reversal. It doesn't mean we at the bottom tick or top tick, but man, it likes my trend lines, by the way. Like, for this 15 seconds, like I drew this like 30 minutes ago, I'm just saying, I'm just kidding. Oh, crap. Make sure you're on M&Q, not the wrong. There we go. I almost like started slinging trades on NQ. That would have been bad.
Yeah, I'm being patient. I like this low a day. Guys, if right here, right now, at any reason we suck back and close above 930, I'm long. If we continue pushing below 930, I'm waiting for 945.
All right. Get everything set up. So we're paying attention. We got below the 930. What's the action that's happening? We are completely sucking back into the range. So now I'm paying attention to this 25% level. We've got an in-stat low of the day right now. All right. So now it's just like letting our edge set up. We still have front run activating downwards, but we're just paying attention to, like, can we get above 25? If we can't, how far do we make a new low and then suck back into the range? Like, just simple, like, we make the same decisions around the same lines every single day, right? So what is price telling us? And Dave, this is definitely your stream. So like, anytime you want to inject, right? They hear me and Austin say this every day when we live trade. So it's nothing new. They want to hear from you.
Yeah.
As well.
I mean, I'm just taking it all in, right? I'm just listening to you guys with your approach, your analysis. Most of the mentorship that I run, they have different tools already with what we expect price to look for and how to participate within it. When price is headed to wherever it is that it's going, and we're looking for it to begin at either place, right? You guys say you account for both sides of the market. If I'm looking for this to begin somewhere around, let's say 29,007, which that's where I have a lotus down there where I'm expecting the market to snap and then run back up. If I expect it to begin there and move higher, or we might see a rejection somewhere around 29,300, 400, somewhere up there, right? Whatever's happening between those two levels, to me, is considered a scalp. And when it gets to those levels, that's where I begin to look for and participate in a larger move, a larger hold. But whatever is happening in between there, I just consider it a short-term move that I'm looking to take, scalp up a little profits to be able to risk on the next trade. So I'm just listening to you guys as it's heading to any of these levels.
Real quick, we're coming up on, we hit the 70% probability to the downside that we had off of the 730, 830 time-based range. This is the 40 basis points. I'm paying attention to 10 basis points below the 930, right? Same thing, right? Like we know that this is just one 5-minute candle, right? We know that 930 to 10 produces the most reversals possible. So like we don't have to bottom tick, right? We can be smart and we can wait for the obvious. Because remember, there's a 36% probability of continuation to the downside between now and 11:30. So we don't have to rush to failure. We've got another two more 5-minute candles that it can reverse on, a new 15-minute candle from 9:45 to 10. Set the conditions for your success, for your proper decision making. And with that being said, I'm long 15 minis. I'm just kidding. That was a joke. All right, so we see that we're rejecting the 10 basis points in the 70% probability zone. So start defining that if this is a reversal, what can it do? We talked about the 4-step reversal. That's 9 o'clock's 50% is right above the 25 percentile of the 930 candle. So obviously we can't get below, make a new low. If we keep making new lows, then we're not reversing. We want to see us ping off this 10 basis points. We want to see a step above the 25, right? And then we can start like entertaining risk for the front runners like me. Or if you're like Austin, you wait for the breakouts. And if you're really cautious, you wait for the pullback after the confirmations, right? But you don't have to rush to failure. That's the one thing, like you're not going to make $1 million overnight or in a day, but you will lose $1 million worth of confidence if you start rushing your systems. All right, so we're rejecting this 10 basis points. Can we make it up to the 25, which is at the 9 o'clock's 50%, part of the 4-step reversal? Austin, you just...
What's
I know
up?
how you trade. I know how you trade, so I know you'd be echoing the same thing I'm saying.
Yeah,
you didn't take the short, right?
I'm hyper focused right now. No, I'm still flat.
All right, so now we know that like the way I teach is like when I trade, right, I cover the queen, 10 basis points. So if I take a trade anywhere in here, like I got my 10 basis points, which is 29 handles, right? So wherever I take the trade, I know that this 930 low is usually what my risk is going to be. If I take entry between the low and this 10 basis points, then it will be 10 basis points off of that. But remember, the reason we cover the queen is so that we can be wrong and in a risk-free trade, right? That's the one thing that most people don't like to say is that they're wrong. I will wear that on my chest, a scarlet letter, that I'm okay with being wrong because I know how to manage my trade to turn it into a risk-free trade. And you guys will see me execute that here in a little bit. But I'm allowed to be wrong because it's free. That's why I cover my queen. I take half the position off 10 basis points away, because usually my risk is only 10 basis points, right? So like I'm taking half of it off around that area. All right, so now let's see if we can get above this 9 o'clock's 50% and flip front run back up. And then we've got the rest of the day to add into this position if this is truly the low of the day. Another thing, right, we don't have to take our full position when trying to capture a reversal. Break it up into fourths, right? Because you're more likely going to be wrong on the first couple attempts, right? So do a fourth at a time. So if you're trading 5 micros, then one once we get above here, One when we get above here. One when we get above here. 10 o'clock does this. I'll add another one.
Patiently waiting here. If we keep on staying below 930 in the P12 low, I will try to get in short for the continuations. I'm just waiting. I want to see how we interact with this low. If we fail to go higher, 945 plus, close back below, I'll take that short every day.
Yep. Especially 945. Right now, this 5-minute candle is telling us nothing other than we're just stuck between 930 low and the 10 basis points. So we're listening. I see this 930, this 5-minute candle can take out the previous 5-minute. If not, if we bounce 10 basis points, can we get above that 9 o'clock 50%? All right, we made a new low. See, this is why we don't rush to failure. If we tried to long off of here, we would have just got stopped out. Yes, we could have covered our queen, but now your confidence is getting destroyed. You're going on tilt status, right? And a lot of people like to go on tilt, right? This is why being patient, defining those if-then scenarios is important. Now I'm talking a lot. This is how I usually do.
Dude, you're feeling the air perfectly because I'm zoned in on this. If we get a really nice, and this is again for any newer people, we do things called, we marry live price with stats, right? So we have our live price components for me is 930 and then 945. And why 945? Because that's where we see the statistics either drop off to where that's the last chance really of them being significant. So they kind of expire. So that gives us one of two hints. First hint is if we start trading towards the statistics here above by that time period, I know to start positioning myself long. Vice versa. We start heading down and continuing to push down away from these stats, I know to start trading away from them. And so 945 coming up here in the next 5-ish minutes, it also keeps me a little bit disciplined, where a lot of people complain, oh, I wish I could be disciplined. Well, bake into your process discipline. Don't sit here and just every day go and meditate and say your 10 different manifestations or whatever. Like, no, like make your process mimic that of a disciplined trader. So my process is what's forcing me to be disciplined, not my own emotion or not me trying to be all whatever. Like, no, it's just me waiting for these time periods to align with what live price is doing. So if 945 if we keep pushing away from 930 by 945, and then I'm just going to use this box to represent the 945 1-minute candle. So if the 1-minute candle, let's say, opens somewhere here, this is a really good signature I love to see, but with distance between the 930 opening range and 940. So Dave loves to use time-based ranges. I do too. I use ranges to kind of define, my different little action points of if above bullish, below bearish. Yeah. So if we stay and do something like this with distance between, I will scale long for a new low a day. If we get below it, I will scale short for continuations. But only if there's distance between. If we suck back up here, look, see, Dave, I draw squiggly lines too, all right? So if we suck back into 930 and open here, then that idea is invalid.
Well, the one thing that I think would help a lot of traders, like if you're going to take the mentorship role of teaching people how to trade, like a PDF and a video is not going to do it. Like, and that's one thing Dave does like us is he'll do it live in front of his community, right? Yes. So he can talk over price and what his thoughts are and what his decision makings are. That way it secures the student to actually know, like, all right, this makes sense why he's not taking the long shot, even though statistically we hit the low of the day, like, and we should be reversing. Like, think about how many stops that we saved if we were trying to force our trade long. The obvious isn't in yet, right? It'll be obvious. And that's one thing that we admire about you, is because you will trade live in front of your community. You will talk over your concepts, and because like you can only read so much in a PDF, and then you expect somebody who just read the PDF or the instruction manual to execute it with live capital. That's a no-go. That's not leadership in my eyes.
Yeah, I mean, there are certain things that will happen around whatever it is that you're expecting that gives you that sort of, discretionary, edge to say, hey, yeah, let me just take this off because it's not moving in the way that I would be expecting, right? Like some of you guys saying, I think you just mentioned with, there may be a few possibilities or a few entries where you are wrong as you're looking for this particular thing to happen. Yeah, you get stopped out. Hey, boo-hoo, that's fine. Everybody gets stopped out, right? Like you can't make money without taking the risk. So you need to know where you can reduce your risk and what you need to look for to say essentially, yeah, I'll get in and I have a little confidence of this going higher. Like I just sent this screenshot to my group and I said, I'd be expecting price to bounce somewhere around these levels, just off of something to the left, a couple zones that are over there to the left, 29,048, 29,007, 28,976, and 28,942. These are areas where we expect little bounces to move its way back up as it's making its way down. So you never want to get caught shorting somewhere where a long is produced or where a rejection may happen. So as long as you know where these particular things may occur, it essentially keeps you out of being in an entry full of drawdown, even though you have the direction correct. So I'm looking for that 29,007. And when we get down there, we'll see what the behavior looks like and if it can make its way back to that 930 open that's there.
Yep.
Ooh, I would love that. Let's
get a
Furu trade, baby. We're due for a Furu trade, PackTV. All right. And okay, so this is a cool little opportunity. So Dave just said 29,007, right?
Yeah.
I want you guys to see how cool this is when you can have different perspectives but still speak the same language. If you guys see my chart over here, this is the indicator we use called the gunship. And all it does is project distributions. And what that simply means just where price typically distributes, moves towards at median to average. So if we move above median to average, that's giving us a hint. Maybe we are in a trend to the downside. But if we reverse off the median to average, that's giving us a hint. Maybe here's where that reversal could start to take place. He just said 29,007 is where he's seeing that reaction of some kind. If you guys look at my screen, what's the price right above my 29,001? We are like a few points off, right? Yeah. And it's the same thing. If above this box, continuation. If below this box, continuation. Or I'm sorry, if above, reversal. If below, continuation. And here we go. I'm waiting for this 940. I love right here.
I like this. Yeah. Let's see if we can get above the 945 for sure.
We're making distance right here, right now, guys. So I'm gonna get my 945 projections on. We got 10 seconds left here for this 1 minute candle to close.
And as you guys mentioned, waiting a little further towards, somewhere around 10 o'clock. Do you know that 0 DTE volume, that's when that comes in around 10 o'clock. So that's why we tend to get those sudden bursts, those big moves, those reversals that occur, because that's when the 0 DTE volume is coming in. And the 0 DTE volume is generally what drives the direction of the markets. It's 0 DTE exposure that the market tends to trade towards in intraday during the New York session. So knowing when that volume comes in, you can essentially sit out and wait for that particular thing to, begin to materialize.
Honestly, didn't know that. That's pretty cool.
Yeah.
I mean, it makes sense. That's where we see during 10 o'clock to 10:30. So that's the first 2 quarters of the 10 o'clock hour.
Yep.
That's where we look for either continuation or reversal. Like if 10 o'clock, like let's say in this case, okay, hold on, 5 seconds.
All right, real quick. Yeah.
All right, I'm taking this long here. Stop below 945.
I'm long as well, right? 3 micros. Like if this is if this is the true pivot, then I'll have plenty of range at the 10 basis points off the 930 to add to this position.
I'm gonna cover 2 micros at the 25th percentile here at 29,034. Then I'm gonna have 1 more micro right at the edge here at 13 basis points.
Real quick.
So that's going to cover my risk.
Share my screen real quick.
Yes, sir.
All right. So in the eval account as well, right? I'm 20 basis points up, right? I went in with 5, right? So I'm going to take 2 off right now, and then that one's in 3 now too, right? Setting the stop, right? And then going to the funded, right? I'm already in 3. That risk is worth 159, right? Plus I've already covered, right? So now I just move on with my day, and right, once we get higher up, if this trade is going to work, then like that's okay. Like I'll add 2 somewhere up here, right? Because if we're putting the major pivot in for the New York session, I'll have plenty of space. I've already covered the queen. It's already been done, right? Like this is now a risk-free trade. And that is all she wrote. I wanted to show you guys the purpose of covering the queen, and then price started ripping. And I usually do it 10 basis points. The day I did it 18 because price moved. It doesn't work that easy all the time.
I just barely missed my cover here. So I got 2 micros covering off at 32, and then one more at 44.25. And this is kind of what we were looking for, right, guys? So this is something I call like my trade idea is in an asymmetric area where I'm happy to be wrong or right. So when you're kind of fully accepting the outcome of a trade, no matter if it's right or wrong, you can kind of let it produce a little bit better. So because 945 is so small, right, my area of invalidation is about 10, 12 basis points here, 10 to 11 basis points. So I can be wrong and pay for this trade a few times, to where if I get stopped out of the long, I can continue the continuation short. If I get stopped out of the long and I get another retry, I can take another retry because it's such a low amount of risk for the opportunity of this trade either materializing back to 930 or away from 930 to continue. So I really like where this position is. I want to either, if we are going to reverse back to 930, I really want to leave some runners on. This is also an example of, again, what I was kind of referring to what Dave was saying here, is this box, this zone is basically my, if we reverse off of it, long above it, break through it, and I get stopped out, short below it. So this is like a really key pivot area for me.
And so for me, like today, shorts are going to have to be an afternoon play because like I'm not going to take a candle signs said we're like on the extreme of me, like we're on the edge of distribution. So mean reversion trades are the only things I'm looking for. And if it continues, it can sell off to, you know, wherever, right? And I'll just happily not take a trade to the downside. Austin's trade plan is different. Like it's based off of what he can make decisions from, right? But under these conditions, because we've moved this far low, like I won't take any sells. And I've missed out on a lot of great opportunities, but that's not my trade to take. I know what is enough for me. And I know that there's 5 trading days of the week, and 2 of them are going to show that true movement, and 3 of them are going to revert. Right? I'm here for the reversion. I will take the trues if we're closer to the 930 price.
So in the option space, there's something called implied volatility.
Yeah.
And implied volatility is essentially the market pricing in volatile movement or uncertainty if it's high, and if it's low, there's a little more certainty in the market where it's not expecting very volatile moves. So when implied volatility is low, generally options contracts cost a bit cheaper, and when it's high, options contracts are a bit more expensive. Also, when it's high, we tend to get larger moves that occur in the market versus when it's low, we get a little more sluggishness. So just understanding when price is likely to put us in ranges, when we're likely to get much smaller movements around open or throughout the day, you can just look at the volatility levels and that'll let you know whether we're generally going to have a larger sudden burst kind of movement, more
real quick, Austin, share my screen. Right, just so you guys can see, like if I get stopped out, those entry, right, is worth 159. Like I got to take this phone call real quick, and then like that's the risk that I decided to take, right? It got covered. This 159, I collected like 210 off of the to that tick off of it already, but like there you go, right? I'm gonna pay for this trade, but I gotta take this call, Austin.
Yes, sir.
Yeah, if we get a failure here, if we, fight the move lower and we begin to make our way back up, then I'd be looking for us to get back to that 931 candle, that 930 there. So I'll be participating in a move trading higher back to there.
Heck yeah. Looks like I'm about to get. Oh, there we go. Got stopped on that long. So see, this is something because we have market makers that watch my stream, Dave. So this is something. So you've heard of market makers hunting stops, but I actually have the reverse problem. I get what's called tick denied. So my risk was right here to get covered, and we just barely missed it. So like they'll watch my stream, and then you know what I mean. They'll sell it right before my TP.
Yeah. They're out for you.
Yep.
And dude, you can't say stuff like that and not confirm that you're joking. People are gonna believe you. You don't.
Oh wait, I was joking. Oh yeah. Guys, I'm joking. I see you, Patrick.
Yeah.
Patrick from Citadel. We went to Wall Street. That's where I physically met Mickey. We went to tour Wall Street. What was it, Mick? 2 years ago now? 1 year ago? 1 or 2 years ago we went. And we met Patrick from Citadel. Ever since we told him what we do, sorry guys, sometimes you just got to deal with it now. It's the tax of me trading. All right, if we get another close back above 945, I'm taking another attempt at this long. Waiting 30 seconds. 1 minute close above here. I'm long again. Dave the Rave. Somebody put in the chat. Dave the Rave. Dude, we need the rave music, bro. That's another reason I like Dave so much. Me and him have very similar music tastes.
Yeah.
People make fun of me for it all the time. They're like, Austin, you sound like you just snorted 10 lines of cocaine. Sorry, bro.
Yeah, they call it the unts music.
All right, I'm taking another long here. Stop below 945 again. Same trade idea.
Yes, this 943 pinning us down. I'm just trying to get us above that and then back into that 931, 930. And what I love about options is that whatever your risk is, it's on the contract itself. So what was your stop out just now? The one that they
my stop was 11 basis points.
So whatever that cost is for the 11 basis points, you can actually just take a contract that's worth that. And the contract could end up being the stop loss instead of having to place the stop on the actual chart. So you pretty much have, an hour and a half, 2 hours or so during the morning to be able to just have that move or go into whatever direction it goes in without your equity being at risk. So that's what I love about options trading, is that you're essentially trading without a stop loss. That's what I would call it. But it's just a certain risk defined in the contract you are using, and you're able to just have that, go in the direction that it's going in. Even if it sits in a little drawdown, a little consolidation maybe, and then begins to move, you're able to just risk whatever it is you're willing to lose instead of having to cover that. We use stop losses in futures because we're covering the equity in our account.
So
exactly.
And basically be like, if price is like, let's say where my stop is, it could gravitate, like if you were to translate what you're saying, it would gravitate to where my stop is, but as long as that contract doesn't expire or end where that is, you're saying that it wouldn't be realized. I'm trying to understand because I'm so clueless in the 0 DTE and all that stuff space.
Yeah. So I talked about implied volatility, right? With implied volatility, that's something that inflates the value of the contract. So let's look at the 706 contract, right? 706 QQQ contract. Currently, it's moving with this move going up, right? That contract cost $1. Okay. The implied volatility on that contract is 21%. Usually a high implied volatility is somewhere around 30, 35%. So this costs the dollar at 21%. If the implied volatility begins to go down, then the value of the contract also goes down. But if price is going up while the implied volatility is stagnant or going down, then you're making money with every dollar that, or not even every dollar, every cent that the contract moves, or the underlying
the value of the contract now is changing.
Yeah.
Gotcha.
So if you buy that contract for $1, which is it's $100 that it would cost for one contract, you pretty much have from now until maybe, I would say, leading towards 11:30, 12 o'clock for it to begin picking up and going in that direction, right? It trading higher. So your stop loss is essentially the time that's left on the contract, along with just a few of the components of the Greek, versus you having to cover the equity that's in your account. If I'm risking that dollar and I have, let's say, 1,000 in my account, and I'm risking that $100, I can only lose that $100 on the trade. That 900, it's not exposed to the contract being open.
Okay.
So you're essentially just risking however many contracts you buy versus entering into a contract with margin, and your equity is the thing exposed to the risk.
See, all I'm hearing is that we need to all get together, especially since we're stats guys and nothing is priced without some kind of statistical background in the markets. And if you teach us, right, we can run the stats on these OTEs so we can figure out the most cheapest option from the implied versus the realized volatility, and we'll build something. We're in a world where if you can think it, you can build it nowadays.
Yeah,
right?
yeah, definitely.
The job is just to, be disciplined on what you're building and not squirrel all over the place. But I like what you just said. But me and Austin, we just do not understand the OTE arena. So that's definitely something that is your strong suit, along with market structure. So
yeah, I'm clueless with that stuff.
The one thing in the Army that I learned very, very quick and fast and in a hurry is you don't focus on people's weaknesses. You don't care about what you're weak at. You put up left and right limits and you focus on their strengths. And right now, our weakness for me and Austin is, OT options, right?
Yeah.
And that's your strength, right?
Yeah.
So that's where it comes down to leaning heavy on you. And our strength is statistics. We know how to run calculation, pricing, all that stuff. So something might come in the future that would be pretty cool.
Yeah, I mean, definitely. I don't mind, right? That's something that, you guys understand how to. I'm more of the get in, take what I can, get out, come back tomorrow, analyze it again, look at what I'm looking for, get in, take more money out, come back the next day, right? I'm more of that, where you guys are understanding the moves that can happen throughout the entire day, and you can be a part of that. There are options contracts that do not expire the same day, where you can benefit from that, large range move that occurs. So that would be something that, could be pretty lucrative for your students as well, or the members of your group, as you all know how to time the low of the day and how far price tends to extend from there.
Mm-hmm.
And
so that's one thing I'm trying to get creative with. So they're coming out with these nano futures, which allows you to take a live trading account and actually not have to over leverage, right?
Yeah.
Kind of I think that's genius. And I hope.
Didn't that start today?
That started today. So hopefully what comes out of that is people stop falling for the shenanigans of the prop firms, and they start investing in themselves, invest in yourselves, right? And then then you can't blame nobody if you're profitable or not profitable. It's all coming down to your decision making and your position sizing.
Yeah.
And so I've been thinking creative ways of doing that, and then learning about the option space, because the one thing is leaders in the space, right? It breaks my heart to see these prop firms run working class individuals, run ringers around them. They don't see, because they're just trying to improve their lives, right? The working class trader's just trying to pull some extra income in to take some of the stress off. And these prop firms have completely abused their power in the space and took advantage of them. So I'm always thinking about how we can force the trader themselves to take pure accountability for their decisions. And I can't do that if I have prop firms moving the goalposts and all that. So
yeah,
definitely interested in what you have to say about options for sure.
Yeah, I mean, with props, it's leverage trading too, right? You're essentially just giving them, let's say $200 for an account, and you're getting access to be able to trade with a larger contract size than you generally would be able to trade with, with a live brokerage account. But they create this disinformation in terms of telling you what you can and can't do with a live brokerage account. You can't scale fast. You can't open up X amount of contracts if your account is this size. It will take you, like I saw one post that said, it would take you, if you had 25K, it would take you 5 to 10 years to scale to 100,000, which is complete buffoonery. It's a straight up lie, but it's propaganda to essentially tell you that. So you're basically saying to yourself, okay, it's probably better for me to trade it's better for me to trade prop firms than my own live account, because at least I can reset. Why are you planning to reset? Why are you not planning to have discipline in your scaling? I have one student, Ashley, she wrote to me about taking a loss a few months ago. And it was a relatively small loss on a single funded account. And she kept talking about how she was just, she took her hands off trading. She stopped and just went to focusing on charting her system. I mean, I'm talking about one loss on I think it was like $700 or $900 on a funded account, right? First of all, you're over exaggerating, but it's great that you feel that loss, because it could be real money, even though it's not. But you should approach it that way. Yeah, I took this loss. Let me take a step back and figure it out. Imagine if she loaded up 30 more accounts, 50 more accounts, and was just resetting everything. And how much more of a hole would she be in, instead of understanding, hey, I broke the rule in my process. Let me go and refine my process, because this kind of behavior is unacceptable. So it's the mind of a trader that's where it starts. Profitability starts in the mind, not in actually executing.
Yep. And then one thing, everybody knows, when their system's taking a loss because it's just a healthy loss in a consecutive loss period or a max drawdown period of time. Yeah. The people that drive me crazy are the ones who are they know daggone good and well that they're breaking rules, they're over position size, and they're tilting.
Yeah.
Or those are the people, we've talked about it a little bit earlier, where it's you got to look inward, right? Stop trading, because you have no business to be in the trading space if you can't take accountability for your actions. And that's why me and Austin, we told it, there's 4 levels of proficiency. We can, there's unfamiliar, familiar, proficient, mastery, right? We can get you from unfamiliar to familiar. Your back testing and your practice and your simulators that you build can get you from familiar to proficient. But only you, yourself, and the live market can get you from proficient to mastery. And your self-accountability is huge.
Yeah.
That's why it's own your decision making, own your space, even if it's bad, right? Some of the best lessons I've ever learned in my life was when I let myself down.
Mm-hmm.
Right. So if you're one of these individuals who keeps finding other people to blame why you can't trade, maybe it's just time. You got the rest of your life, number one. Number two, just pull on your left ear, flush all the bullshit out of your butt, and start over, Start over and do it the right way. Give yourself, Dave, he spent 16 hours for 4 months or however long, and he didn't touch a button. He just studied his craft. Abe Lincoln says, if I'm given 6 hours to cut down a tree, I'm going to spend 5 of those hours sharpening the axe. Right? That's the best analogy I have for trading.
Yeah. But you have this idea that people are like, hey, backtesting doesn't do anything for you. Or, looking at historical charts doesn't do anything for you. You need to be trading, which, part of that is true. But the other part is you should not be trading if you don't know what you're looking for. And if you are trading, you're trading only what you're looking for. There's no it can't be any different than the two. Find what you're looking for in a learning phase, and then trade whatever it is that you have found in a learning phase to work in a live market. And then you have to go through taking the losses in the live market to know, hey, okay, I have to optimize this particular thing to avoid, not necessarily avoid, but minimize or reduce the amount of losses I take with this. Like, for an example, I always talk about with the group, if you're in a trade and it's spending about 10 or so minutes around your entry without invalidating you, because we understand that where we get into the market and what we're looking for is some sharp moves to begin to trade away from our levels or begin to trade away from maybe our indicator pop-ups and stuff like that. If you have a very long time where price is just sitting in this one spot as you're in your entry, you need to get out of that trade, right?
Especially in the option space, because you're just getting destroyed, because most people don't realize that theta and gamma are completely inverse, right? Gamma is what gives you profitability. Theta is the time, right?
Yep.
And if you hold them statistically together, when one moves one way, the other moves in the complete opposite effect.
Yeah.
And so basically, if you're stuck in these consolidated periods, your theta is draining and your gamma is fading at the same time, right?
Yeah.
So that's something that's designed to be inverse is now becoming correlated.
Yep.
And that will kill your premium faster than anything on earth, right?
Yep. And I think that a lot of people, they trade with these instruments and don't understand it first. So some people trade with, these contracts, whether it could be futures contracts or CFD contracts, and they don't understand margin. They're taking trades before they don't know what margin is. They're taking trades before they don't understand that you can't go within 75% of losing, all the equity.
On wall number 2 there.
Yeah, this is just sitting in this consolidation period here. I still do have it going up. It's just taking some time to sit around before it retraces higher. And this is what I'm talking about with options. Like, for me, if this contract can get just a little bit lower, I'll enter into a couple of contracts to take it back up. But with this here, you essentially do not have to you do not have to set a stop. You're just essentially in that particular position waiting for the market to move in the direction.
Yeah, because your premium covers that stop. Able to define it. Yeah, that's awesome.
Yeah.
So you said you wanted to talk about something about your new indicator that you had going on, and you wanted to drop some sauce and
Let's
see what you got here.
So let me do this. Let me turn off these indicators. How do I?
I'm gonna give myself one more attempt, guys, on this trade. I'm still just like hyper focused on this 945 if we're pivoting above or pivoting below. And I'm giving myself one more attempt. I'm not gonna get chopped around 945 here.
For me, it's going to be like Q2 has to take out Q1 side without taking the 9 o'clock low for any more possibilities. Right, same protocol that we do with the 4-step reversal. We've already breached the 4-step continuation, so we're expecting proofs, but the second 15-minute candle of 10 o'clock, right, is a confirmation of if there's still a probability of going up, or if it's is going with the lower probability to the downside from here on out. So I will wait for Q2 of this hour to take out the high. All right, you want to share screen, Dave?
Yeah.
There we go.
All right, cool, great. So with this here, I know a lot of people don't use volume, right? You probably don't pay much attention to it because it's I don't want to say it's subjective, but it's essentially the data is different, based on whoever it is that you're getting the volume from. So with broker data, it's going to be a lot higher quality than something like TradingView. But what we're paying attention to is where these, let me just go here. I'll do it like this. We're looking at this row of volume that's here, right? You see where, let's say from this low, starts at this low, and then this entire side up, right? Market begins to make its way higher from there. So as we are making our way lower, as we are trending down, we're looking for the possibility of the market giving us some sort of rejection, some sort of bounce, right? Looking for it to hold. Where is it likely that it can hold, right? As we are making our way down, we're all looking for something, some kind of support into some mean reversion back to the other side, right? So with this volume on TradingView, you just type in volume and you can get it right there. We're looking at what is the highest spike that from this low here, right? This is 1800 from this low here all the way up to this high. Where is the highest volume bullish spike at? Where is it located? And wherever that highest volume bullish spike is located, a lot of the times that is likely where price is to find support and produce a strong move coming out of the low that's there, or the little zone, the POI that's there, and then we trade back into the range. So this doesn't have to be based on a POI. This can be based on, and I mean by POI, I mean zone, right? Supply, demand. Some people use imbalances. Some people use wicks. Other people might just use levels based on time-based ranges. Doesn't matter what it is. When we generally see a spike, what we look for is for the market to trade back to where that spike occurred. And it's not only the single spike, it's from this low, as we begin to move out, it's the two highest spikes that are there, right? So as we see this begin to make its way out like this, right? We're looking for the two highest spikes. So we see the two highest spikes is actually this 10 o'clock candle that's here. And then we see this 1600 candle that's 6 a.m. No, that's 10 a.m. That's 10 a.m. too. So we both 10 a.m. candles that are here. We see the volume spikes that are there, right? This would mean that when price is retracing to wherever it is that it's going, and you can look at this later on, another day when price actually gets there. Could be NVIDIA's earnings, could be later this week. I mentioned that I'm looking for bearish price action throughout the week. Usually Mondays we tend to have a retracement up, and then we begin to make our way in whatever direction that we're going in later throughout the week. But take that candle that's there, right, that the spike happened on. So this is the 10 a.m. candle from July 31st. And then take this candle here. This is the 10 a.m. candle from, and this is all on the 4 hour, right? 10 a.m. candle from July 30th. That's there. So these two candles, when the market makes its way down into these levels, now you could have something that, you might have the Fibonacci swing high, swing low that's there. You might have support or previous support turned resistance, turned support. You might have all of that, marked out over there as your level. But when we have those volume spikes that are near those levels, this gives us a little more confidence in understanding that, price can be better timed when we dip into and when we get to these particular candles that are here, these particular spikes. Now, this is a spike that's on the 4 hour chart, right? We have spikes that are on the hourly chart as well. So if you're looking for longs, it's bullish spikes. That's where the buying began, right? That's why the spikes matter. If we're looking for shorts, it's where those spikes began. So as we are trading higher, if we are to move higher up above here, we would want to look at where those highest spikes are located to expect some sort of rejection off of wherever those candles are with the highest volume spike that's there. Again, it's going to be relative to the data that your broker gives you. But when
just
we
the fact that you mentioned use the broker data over the TradingView data or the prop firm data is huge, right? We have a lot of people that do trade volume in the packs because probabilities work for anything, and so like I know they're going to get a lot of value out of this. Like one of our traders, Bowie, who trades London, right, uses a lot of volume base, and Karl, who trades the pre-market, they do volume too. So I know they're listening and they're going to find value in this.
Okay. Yeah, that's what a lot of people don't understand. TradingView says they have tick data, but it's not necessarily the same data that a broker would call tick data or a broker would have. So it's best to stick with the broker's data when you're looking for, even with footprint charts, right? Anything that's layer 2, broker data is more refined than the data that you're getting on some of these platforms that are essentially a third party. So with here, we see, let's just look back at this low that's present here, right? This low that's here. And then let's look at the different volume spikes that are within there. And we want to look for where are the highest spikes that are here, right? Below, we're currently below this candle here. This is the July 6, 9 a.m. candle. Sorry, August 6, 9 a.m. candle. We're currently below that. So we're looking at these candles that are here, and we're trying to figure out what is the highest spike in those candles. And that's generally where we're looking for the market to potentially give us a sharp move coming out of. So we go from this low that's here, and bullish spikes only, right? So we go from this low, this ends up being the highest, this ends up being the highest candle here, right, on this 9 a.m. candle that's here. So we move this over. That ends up being the higher candle. So now we could refine it to this right here. So previously we had the 4-hour doji that was there. Now it's this 1-hour candle that's here. So 1-hour TBR, we use the 9 a.m. candle on the hourly as the time-based range. So it's a 1-hour TBR that's there. We have that as the highest spike. And then the second highest spike ends up being right. This is pre. So it's this here. Okay, so this is the second highest volume spike that's here. Right, and look at the behavior around this candle here, this hourly candle. Right, this is the hourly 9 a.m. candle. Look at the behavior when we make our way back into it. We see price trades into that candle with that volume spike that's there, and then we see a move that trades out. Now, this is something that you can, if you use, let's say, the previous range, if you use any supply or demand levels that are inside of there, whatever candles you're using as supply or demand, if they have these volume spikes that are in it as the highest spike on the session, we can go further into the 15-minute chart and now look at the spikes on the 15-minute chart and refine it a little more. But when we get those volume spikes that are from these different time frames, when price trades back to them, we tend to see very large moves coming out of them. So you want to make sure that one, the data that you have is a data you can depend on, right? It comes from your broker. And then two, you want to make sure that it starts from the low into the high that's up there. And you're looking for when we do begin retracing, we're retracing back into those volume spikes. So this makes its way higher. This begins to go down again. And you're looking for where those volume spikes are below that previous retracement. Obviously, we took out that low. So if we are headed down, wherever it is that we are going to on the downside, it needs to be, or it should be preferably, some area, some zone, some level, something inside of there that encompasses that volume spike, right? That is the highest likelihood that we are going to see the market tap into and reject off of, as it has done it in the past. Now, when we do trade below that spike, this is another thing. When we do trade below that spike, a lot of the times you'll see price use that same candle as some sort of resistance. So we talked about this being the hourly candle here that had the second highest spike in that move trading down,
Hey Dave,
right?
not to interrupt you real quick, just give you guys an update on trades here. So I did take one more long off 945. Let's see if I get my third cover. Again, the cover here being 42.25. Go ahead.
Can you share my screen real quick? Because I didn't want to interrupt Dave neither.
Oh, yeah.
Yeah, no worries.
So real quick,
My bad,
because I am
Dave.
going to have to jump short. Share my screen real quick. So this was the trade I took. We had this false 05 break, right? Rejecting to take out the 10 o'clock low, entered in 5. We just covered the queen, right? So now the only if-then statement, which was $239, right? Initial risk was 335. Now the risk is, let me update this, 201. So this is a complete risk cover, risk-free trade with $60 in the cash. We have to take out Q1's high for any of that. If not, like, I get stopped out, and that was a risk-free attempt. All right, Dave, real quick, I do have to jump. I work with a nonprofit called Still Serving Veterans, where I help veterans find jobs and all that.
No worries.
Austin will stay on with you, but I do have to jump. Listen, guys, I'm just going to call a spade, right? There's so much corruption. There's so much shadiness. There's so much hidden mirrors and smoke and mirrors in the trading space, right? At the end of the day, right, you have to gravitate to people who are transparent and honest. And Dave's one of those people that is transparent and honest, right? So make sure you give him a follow if you're into market structure, especially in the volume, in the options. Like, he's definitely, in my opinion, right, like one of the best that I've ever ran into when it comes to this stuff. Now, with that being said, all right, just like any man would do, you get salty with him, don't cry when he bites you, right? So if you're one of the trolls, just like I will freaking bite you, right? Don't get disrespectful. If you don't trade his style, go away. Go find a style that you do. Because, like, we're all grown-ass men, and we're in our 40s going into our 50s. I'm not putting up with you 20-year-olds who think, like, I get it, you're 20, you got something to prove, but we ain't got nothing to prove because we already proved it. So, like, if we're not your style, move on. Move on to somebody. There's plenty of broccoli hair traders out there that fit your ego and your type, So, with that being said, Dave, from the bottom of my heart, like a brother in Christ, like, I appreciate you coming on, and I look forward to many more shows with you, all right?
Yeah, same here, Mickey. We'll talk.
All right, thanks. Gotta go.
All right.
Thanks,
So-
Austin. Gotta go too. Bye.
Yes, sir. Good seeing you, man.
So last thing, when we take out the lows of those candles that have the spike on them, you tend to see price use, as we've taught time-based ranges on my YouTube channel, right? We tend to use those same candles to then create some sort of resistance to send us to the other side. So me looking for us to trade a little bit lower to this 29,007 and looking for us to potentially consolidate to move back up to that 9 a.m., that 9:30 candle that's there, right? This is all off of us tapping into that volume spike candle, that 9 a.m. TBR that's there, and then looking for us to trade back down into some sort of TBR that's over here, but we usually move away from that, right? So this is the next level that we're looking for. Just place an alert right on this level here, 28,800, 28,817. Place another alert on this one here. This is 28,166. So place an alert there and watch the magic happen, right? A lot of the times we tend to overcomplicate things because we want to see all these little tiny things hold, when we can just look at the broader reasons as to why something happened and why we expect price to do it again, right? So if you go into the weekly, go into the daily, go into the 4 hour, whatever time frame you want to go into, look at the candles that has the highest volume spike to it, and you'll see how price will play off of those candles, whether it's trading into it and rejecting from it, or whether it's violating it and then reusing it. Those things tend to happen around these single candles that show the highest spike. It can be within the session or the highest spike within the week or whatever it is. We tend to return back to those things.
Heck yeah, bro.
Yeah.
I appreciate you going like super in depth on this. I know a lot of people, I mean, again, we have a lot of people from your community too that just really enjoy and mesh well with these. So thank you for going in depth.
Yeah, no worries.
Selfishly, I hope you're wrong about your levels, because this is my third attempt and this is going to be the final trade of the day. Because look at this, bro. I'm telling you, market makers. So I'm just, if anybody in here is new, I'm just joking about the market makers thing. But I got, so risk wise, why am I only giving this one final attempt? So we talked a little bit this morning about knowing your risk of ruin, knowing your risk, knowing the statistics around your edge, and knowing when to call it quits. Yeah. And this is the unsexy side of sometimes live trading. You guys see me go 0 for 2 right now. This is my third attempt, long off 945. And the reason why I can't really go a fourth time is because I'm going to eat into my budget, where these two spike ups missed my cover the queen. What you guys heard Mickey say, how he covered his queen. So now the rest of his position is either net positive or risk free. So for me, it's the same thing. I was unable to extract a portion of these two trade attempts as they kind of spiked up here. It just barely missed. So it was 2 full stop losses instead of just partial. So now I'm one final attempt long here. Hopefully Dave doesn't hunt my stop loss, and we'll see.
Well, that 28,817, that's, for some time later on, right? We might get into there later today, sometime during the week, but when we do get there, it can get there next week, right? I'm not saying today we're going to head down there. Right. As I mentioned, I'm looking for us to more trade back up to that 931 candle that's up there. I'm expecting price to give us a move there. And this is why I mentioned options is so much better, because you would have just taken that single trade that's over there and had just been sitting.
You'd be laughing like, what stop loss? I'm still sitting in profit.
Yeah, and you would have been risking whatever it was that's behind the actual trade that you're taking. Now, one thing I do tell my group is that they should wait until 10 and anywhere from 10 to 10:30 to take trades, because you can be looking for higher prices when we open up, and we can begin to push higher and then completely collapse and move all the way down into these lows. And now 10 to 10:30 is just slowly trying to make its way back up to where it fell out of. So I tell them 10 to 10:30, because you don't get caught in these very large moves, or you don't get caught or stuck in a move that's up here and you're hoping that price actually makes its way up to wherever it is that your entry is stuck in. So that 10 to 10:30 mark is something that we tend to use a lot as well. So I hear you guys taking trades around, I think you took a couple earlier. Mickey took a couple, and I was just waiting until we, sort of give that intention to where we might be taking out this low that's here, or we may not, and we're looking to move back into that 931 that's there. So I just picked up a couple options contracts, 10 contracts on this trade. That's QQQ. I'm looking for a price to trade higher with it. I'm in the 706 contract, the one that I gave the example on earlier today. I'm looking for price to make its way up to, again, that 931 candle that I've been eyeing for some time. So all we have to do really is get up above this high that's here and close. If we can close above that, what is that, 29043, then it can show some intention to actually move us higher into that 931 candle and potentially that 930 gap that's there.
I like that level. And, I know. And again, guys, here's like the second or third example of like Dave and I speak the same language, just different accents. So you were saying that you love to tell your people, hey man, 10:30, that's where you want to start. We have the 9:45 to 10 reversal. That's where we see in the statistics, like if we do a false move off 9:30, which is that move you're talking about. And here we go. There's cover number 2. So now I'm 2 micros long. So this is what I'm trying to capture is inverted to what you're saying is if we continue off that 9:30 movement, my 9:30 trade is to take that expansive move. But if I can't see or put risk behind, like I couldn't take this 9:30 short because for my edge at this very moment, there were more likelihood and statistics to go higher. And over the course of 100 trades, I would like to take the trade towards the majority, not the minority. And so that's what 9:45 lets me do. And exactly to what you just said is that's what the whole goal was, is I'm trading this long if we make that false 9:30 movement. Or if we continue, man, I'm just clueless and I'm a fraud today. Like we'll come back again tomorrow with a new daily candle.
Yeah, and that's what I say too, right? Every day is not a day where I win trades, right? I'm not 100% on the trades that I take. I do take losses. I say price is going to go here and it goes the opposite way. I always talk with my group and let them know. There are times where I say price is going to go, it probably has 100 more points to go down. It goes up 100 points. Oh, price is going to 29,100. It ends up going to 28,700, right? It just does the opposite thing that I'm expecting. So, with things like that, I definitely do lose trades, right? I poorly timed direction at times, but when you do have risk managed and when you do have a system that provides multiple opportunities for you, you're able to take trades with the confidence in knowing even if you lose, there's another entry around the corner that could deliver what it is that you're looking for.
Yep. Knowing and dude, there's so much value in that. Like I tell people this all the time. If you're an educator, and beautiful long, by the way, Dave. So
yeah, thanks.
I got one more cover. So I'm in 2 micros runner. And again, guys, this is what Dave and I talked about this morning. This is why risk management is so king. You guys seen me get stopped out twice, went 0 for 2. Does it suck to lose when you got Dave up here and we're sitting here talking about it? Yeah, but you execute your edge. You follow your system. We got another break above 945. So it followed my system. I'm looking for that final attempt. And if the risk is there and I can define risk, you execute. You don't hesitate. So I don't know what just made me go down that tangent there. But, my target for my runner here is 123, and that's what is 123. That's right in between the P12 low, which is the first half of the daily candle, and 930 1-minute opening range low. So this puts me in a position of power. So every single time, if you're new here, the reason I place my targets where I place them is they're all statistically some sort of if-then statement towards my overall higher time frame view. So if my idea for this trade is a reversal back into the 930 range, which is here, I still want to be wrong and make money. So my target being right where it is very intentional. I'm not just randomly placing it at this random level. I'm saying, okay, if my overall runner target is continuations to and through 930, well, then where can price still go trajectory wise? And I can still be wrong. And that's why it is right here. So yeah, that's back to you, Dave.
Yeah. And this was just an area I was expecting price to bounce from. I sent these levels to the group while you guys were sharing your analysis in the morning, where I was looking for price to give us some kind of move to push us back into the range above. The indicator also, I always talk about the fact that you should have either side on. We created an entry indicator that allows you to be able to get into an existing move, not a reversal, but an existing move, to where you're able to wait for it to start to show you that this is the side price has chosen. And now it'll deliver more entries in that direction. So it's more of a supplemental entry indicator rather than an indicator that you just blindly follow. So just looking at here, these levels that we have price trading down to, a lot of the people in the group likely have the buy side on, since I was expecting bounces that are from here. And you see a buy pops up here on this candle. You see a buy pops up that's there. And your risk would generally go behind any of the swing lows around those candles. So there's no invalidation that's here. There's no invalidation that's here. And that just allows for you to continue in that direction. When you're expecting that move to materialize, it's not just buy and sell anywhere. Like up here, there's a buy that popped up here. Now, this buy popping up at 916, does that mean 930 is bullish and you should jump into a buy? No, you still have to have some sort of higher time frame analysis. And our higher time frame analysis was looking for price to trade down into those levels and then provide some relief trading back up into the range that we came out of. So this is something, this specific candle here is something that I've taught in the mentorship as well. I don't want to take up too much time going through the technicals, but we have other tools that we're creating to help supplement our ability to get into trades and feel confident in just the tools telling us what to do. Now, you see, I was looking to take a long. I took a long trading back up to this 931, and the indicator also has longs popping up on that side too. It's you can only code something that if you're already profitable for it to be profitable. So I know there's a lot of buy and sell indicators that are out there. There's a ton of things that, ton of tools that people have where it gives you these individual things that could occur. But when you have an already profitable system and there are certain things that are mechanical within that system, you can sort of offload those tasks to the parts of the system that are mechanical, the parts of the system that are cyclical. So for me, since I already know how to enter, and I've taught this over several years, how to time entries a little better, how to find multiple opportunities in one existing trend, I just put that in a script and put different ways that I've learned how to enter over the years. I put that into a script to where now, if your analysis is correct and price is actually on the side of your framework, you shouldn't feel so much FOMO or any hesitancy to get into trades after being stopped out, because there will be another opportunity somewhere down the line. And this indicator is sort of visualizing it for them. I think your mic is off, Austin.
My bad. Sometimes Mickey, I'll be typing and I forget my mic's unmuted, and I have one of those mechanical keyboards. It sounds like I'm typing on a freaking typewriter, so I don't want to bug you. But it's really cool. We got to see your indicator, because I'm glad you said that. I completely forgot to ask you, like, what's it look like over the live market. So there you guys can see there his new balcony indicator.
Yeah. So it's I'll turn it off and put this on here. So these are the settings that we have, right? We have scalp intraday. This is intraday into a swing, and then this is trend swing, which is a higher time frame trend. It'll give you positions that are trading in that direction. And then there's invest. So invest is essentially, there's no sells on it. The direction for all of the modes are buy and sell. That's it. There's no putting both on it and hoping you can catch a long here and then a short there. This forces you to have an actual framework to trade with. What is the market actually doing? Are you long or are you short? And that's essentially where you're going to have to choose either one, instead of just trying to put both of them on and outsmarting the market and hoping you can catch every turn and every shift. So I have, it's called Vector. We just updated the name. So it's Vector, and it gives the scalper, the day trader, the position trader, right, the swing trader, and the investor options to where they're able to take trades based on whatever it is that they select. It's basically meeting the needs of every kind of trader, every kind of participant in the financial market. So while we have Vector, we can go into the higher time frame on Vector. Let's go to something like Tesla, and we'll look at the daily on Tesla,
And I just want to take like a second real quick for you guys. Hey, listen, we got 268 people. Hit that dang like button, because not only do you have two dudes up here like talking and educating, they're freaking executing. Like, are you kidding me right now? Look at this.
Yeah.
Almost at freaking runner number 2 here while Dave is freaking talking. Like, I just love this, bro. All right, keep going.
Yeah. So we have these buys that will pop up in some of these different assets that are here, and it's giving us long-term opportunities. Like we can go to Bitcoin or MicroStrategy even. MicroStrategy is here. We have a long-term buy that popped up on MicroStrategy. The indicator does take some time to generate. There we go. There's a long-term buy that popped up on MicroStrategy here. You look at where we currently are from that long-term buy. I mean, we're up 35% on that. You look at something like Bitcoin. I didn't see this until a later time period, but we see that Bitcoin, there's a buy that's right here on Bitcoin, and we see this appreciation after the buy occurs, right? Up 30% on it. There's a couple of assets, right? They talked about Trump got into Visa. We had talked about Visa from last month, right? There being a long-term buy that popped up on Visa. You look at where we currently are now, because a lot of people are chasing this move due to finding out that Trump bought this, right? But it's essentially something that can meet the needs of all traders or participants in the financial markets, to where while you have a bias of whatever stock going wherever it is that it's going, right? This is something that can provide you with better entries to be able to get in and, see price develop in the direction that you have it going in. So it's not something that you just click on buy, click on sell, and hope for the best. It's you having an existing framework and this providing you with the best or more efficient entries to be able to get into. Now, this is just our entry indicator. We're developing a bias dashboard to give you bias every day, every week, every month, every year, right? Every decade even, right? We're developing so much right now, but this in particular is, just based on the needs of traders who are currently participating in looking at things through TradingView itself. We'll likely code something and license it through NinjaTrader or some of these other platforms later on, maybe even MT5. But this is just the first of many products that are here that are coming. This is already done. I'm waiting to release it soon. I just got to do some prep work around the videos for it. But this is essentially what you're going to see. It's not going to be the best entries ever, right? There are times where some of those entries pop up, and let me try to find something that maybe didn't work out the best.
Dave, if it loses at least once, I don't even want to hear it, honestly.
I mean, you know how the industry is.
Yeah. Look, that one green one didn't look. It wasn't at the bottom. Look, I see it exposed.
Yeah. Yeah, so let me not even go and explain that. You're absolutely correct, right? It's just something that provides you with a way into an already existing framework that you have, right? Yeah. And I mean, it's something that has restored the confidence for many of the students who are in the mentorship. I'm seeing more engagement come in. I'm seeing, people feel a little better about the framework that they're trading, as well as it's exposing whether they actually have a good plan or not. Because if you're suffering multiple losses using something that's designed to work with an existing trend, it means that the trades you are trying to take, it's not on the side of what price is actually doing. So you shouldn't have, 3, 4, 5 losses in a row if you claim you are trading with the trend. If you claim you're trading with whatever price is doing, however it is that it's delivering. If you're trading with that delivery of price, you shouldn't have 5 losses in a row. That shouldn't be something that exists, right? Yeah, you could have 2 losses, right? Three even, right? But you see how you just took 2 executions and got stopped on both of them while almost reaching the profit target. But now, you're able to take this trade and now it's as if the losses didn't even occur. Right. So this is something that you're going to see in many of the entries within the indicator as well. I don't know if did I lose you, Austin? Did I? Yeah, we might have lost Austin.
I think we did lose him. He looks frozen there.
Yeah.
I'm sure he won't be long to get back in, but carry on.
Yeah. We're optimizing this in a way where we want to use it with direction, right? We want to use it with trading based on one side, right? Not something that we're looking for both, up and down and up and down. And this forces you to find a framework that actually has an expected delivery and then take part in entering alongside that delivery. Now, your preferred entry is usually whatever your regular setup is, right? There's people who trade the they trade different concepts, the EMA crossover. Some people use the inversion fair value gap from the time that Tupac got shot. Some people they use all these different things to sort of enter in on based on the bias that they have. But then after they're stopped, they lose confidence in the ability to be able to enter again, right? Or maybe they manage their stop to aggressive to where they get stopped out, but they still do have this expectancy of the delivery trading further, and they don't know how to get in and feel confident getting in. This is essentially what this kind of tool is for. So it's not to top tick, bottom tick. It's not going to have the sexiest entries that are out there. There are some, I will say that, but it's just more or less to give you the confidence to be able to get in and feel comfortable taking the trade and watching it, materialize into whatever existing direction you already have price going in. So that's essentially what the idea was around this indicator. Your entry should not be up to you, right? Your direction should not be up to you. The bias, it should not be up to you. It should be up to your framework. Your entry should be up to your framework. The only thing you should be paying attention to or even doing, your only job is risk, right? That's it. Nothing else. It's knowing how much you're going to put into the trade. And then on the other side of that, it's managing the stop loss. But as far as where you get in and where you have price going, price is the leader of those things. Let price do its job, and you just find ways to get in and follow it. That's why we, use the term or the phrase, we follow price, we follow Christ, and that's on rice. Because we're just great followers of whatever it is that the market is doing. I'm not forcing the market to go higher. I'm not forcing the market to go lower. I just know that there are certain places where we can expect turns in the market. And after those turns occur, then we could, have a little bit more, some idea around what else to do next. Okay, you turned, you showed me that you no longer wanted to go higher. Let me flip this on and try to find a way in. So that's the approach with this indicator. It's not something that, is promising any riches or anything like that. If anything, it's going to expose you and show you that you have no idea what you're actually doing in the market. But this is essentially, the idea around it. Austin, do we have you back?
Heck yeah. Can you hear me now?
Yeah, I can hear you. Yeah.
Dude, I get attacked, bro. I don't know what happened. There.
The market makers, you got the tick, and now they screw it.
See, I got the trade. Then they said inject, restart Austin's computer out of nowhere for no reason, because that's exactly what happened.
Yeah. So I took profit. We hit this 931 candle. Told you that's what I was targeting. That's what I was looking for. When we get to those targets, I'm an all in, all out kind of guy. I'm not interested in holding to see if runners can continue to go X amount. I get it. It might be leaving money on the table, but for me, since I know that I can produce trades daily without having to see how far it can go or where the runner can go, I'm just giving myself less work. Can I reproduce a 400-point trade? No, I can't. right? I can't do that every single day. So there's no reason for me to look for a 400-point trade to deliver while I'm in that full position. Now, maybe the runner can go to 400 points. Who knows? That is something that I don't want to really be, hassled with, because I prefer to just everything that's on my screen, the dollar amount that I see, I'm just going to take out and leave it that way, come back the next day, and whatever profit that I made today, I can risk tomorrow for more profit. And I'll repeat the same process. If I can get 50 points, if I can get 100 points, whatever it is that I'm able to reproduce daily, regardless of the condition that the market is in, I'm going to stick to that. Now, there may be days where we have larger ranges, then I'm taking more out of the larger ranges. But I try to find a systematic approach to where if I can reproduce this daily, I'm going to stick with that. So me trading back to a particular target, I can't reproduce us going from this low all the way to that 930 high that's up there. Sometimes we don't get that. Why would I risk or put my trade on the line to get taken out at break even and walk away with nothing when I was already up in profit because it did not go up to take out whatever it is that sometimes it may go and take out? So that's my approach to trading. I tend to just wait. Again, 10:30, it's better to wait around that time. I would even say 10:30, but it's better to wait around that time, and you get the result most times of what you guys have seen here today.
Heck yeah, bro. And yeah, I mean, dude, everything Dave is saying, I would completely agree from even just a analytical standpoint. Dave, dude, this was a great session. Like we got to understand how Dave trades. No pun intended. We got to learn a little bit about him personally. We got to see why he trades the way that he trades. You guys got to even see him call and execute a trade live.
A Furu trade, yeah.
A Furu trade, bro. One and done day, right? And then you guys got to see me take a couple stops, see how it looks to just lose, just pay for some trades, and then also what it looks like when now live price is aligning with what the statistics say. Because we have a little saying called live price tells us where, and then statistics tells us where too. So if I'm bullish above this box, well, am I bullish to new all-time highs? Am I bullish to previous day highs? Or am I just bullish to 29,123? Because that's where at median it could potentially go. So I think this was a really cool session. I have one important question from the audience.
Okay,
First and foremost, put in the chat, did you guys find this helpful? Did you guys find some little aha moments or whatever of just being able to see two different people that trade profitably and consistently and just put their own perspectives to price, and they kind of were speaking the same language? And then the second question is the poll. I have a poll in here, okay? So I told Dave this, and I keep kicking it around. Do you guys want to see Mr. Dave teach me? I'll go back to school. I'll put my school hat on, take notes. Y'all want to see Dave teach Austin how to trade options, so then I can put my statistics brain on and throw some 0 DTEs with Mr. Dave up here. So make sure y'all let us know.
And I do apologize when I'm teaching, when I'm trading even. I generally don't pay attention to the chat, so I don't even know who's here. I don't know who's attending.
Oh, you had a bunch of people from your community just repping it. We honestly have had we haven't had to ban or block anybody. No trolls. Just
that's great.
Cool people doing cool things.
That's a record. For me, that's a record.
Heck yeah.
Yeah,
all
but
right,
we want to do that.
Go ahead.
We definitely want to do that 0 DT experience, because you guys, I'm telling you, you guys have it on lock in terms of understanding the low of day and how far price can go. Those things I generally don't trade with, right? I trade with whatever cyclical behavior I'm looking at a particular higher time frame level, and finding a way to take some money out of the market while we're in that specific condition or regime, right? So if I can successfully open and close a trade with profit, I'll put that magic internet money in my pocket and then come back the next day. But what you guys are doing is very powerful to where you're able to catch some of or understand the low of day has been put in and the high of day will go to X amount of percent or to that particular target. That can, be something that's very powerful to use with zero DTEs, especially when the Greeks conditions sort of align with it. And I mean, you can be hitting 400, 500, 600% in a day when you understand it from that level. For me, 100% trade is great for me, right? That's perfect. I'm okay with walking away with that. I really don't require several 100% unless price gaps up in my direction. But what you guys have, it's extremely powerful to be used in options because you sort of know or have some idea of when to pick up those contracts. And now the risk is tied to the premium itself, and you see that reward is a variable. That reward is something that as price is going in your direction, the profit is multiplying. It's not just, so with MNQ, it's what, $2 per point? If it's moving higher, it's actually giving you more delta. I mean, you understand this in options. It's giving you more delta per dollar movement as it goes in your direction. So it's as if you're sizing up and you're not really sizing up. It's just the market or the profit is in your direction and it's multiplying it as it continues further in that direction. And you can use that on, again, you do this on NQ, but I'm a firm believer that all charts move the same in terms of what we look at, right? They might move differently day to day, but when you're looking to enter just based on candlesticks, it all presents the same data, right? Yeah. A double top is a double top on any chart. Double bottom is a double bottom on any chart. Consolidation on one chart is the same consolidation on another. When we're breaking out of that consolidation, it's the same thing on another chart. So just those identifying those patterns you're going to see on every single chart that's out there. But the difference is knowing the how the asset moves, right? We know NQ loves to run all of the highs before it actually makes its way lower. It loves to just quickly and sharply move from a low and run higher. Those V-shaped recoveries tend to happen a lot more in NQ than some of the other indices. So just knowing that, knowing the differences in that and pairing it with some of the statistics that you've built on, not just NQ, I'm hoping you build those same statistics on other things too, other assets as well.
This stuff is universal, bro. I do it with my investing all the way to swing trading to my cash secured puts. Like take cash secured puts, right? Because that's the only exposure I have, honestly, to the option space. Yeah. This is my cash secured puts chart, and this is for your audience listening. Like cash secured puts it's not a you're going to get rich quick. It's honestly just get rich slow, as you already know, Dave. Like it's just you collect premium, but the reason why a lot of people don't do it is you just need a lot of capital just to make some cash flow. Yeah. But how I use statistics from even a monthly standpoint that I would love to get more of an understanding of how Dave applies it to the intraday with zero DTEs is if I understand that, let's take a monthly candle or weekly candle. I like to sell my cash secured puts on blue chip companies that I'm actually willing to hold long term. So I don't ever do cash secured puts on trash companies or penny stocks or anything like that. It's always on good quality companies that if I do get assigned those shares, it's just shares I already would buy. So I'm basically getting paid to set a limit order for long-term investments. Yeah. But if I understand that we're in the third quarter or the third portion of this monthly candle, and I know statistically within this monthly candle, this is the low, and we typically form a high in Q3 to Q4. Right now, we have a Q2 high, so that's out of the norm. So this is, if I am getting a cash secured put, I would start looking Thursday to Friday of this current week to sell a cash secured put with my strike price being somewhere below this open. So that way, if I do get assigned, well, great. I get assigned a really good entry that I got paid to take, aka the premium of the cash secured put. But then now I have a good entry that if we keep on pushing up, I can take profit off those actual shares I own, or I can do the wheel strategy that you're probably familiar with, and I just call them away. And now I get paid to set a call to just get assign those positions at a guaranteed profit, because let's say I set my strike price for the call. Let's say it's in they're even numbers, whole numbers. I'm just using this as an example, but let's say it's 1.42%. So now I'm baking in a guaranteed 1 to 2% profit of the trade. Plus I got paid premium on the front end and back end of both of those transactions. So that's why I love cash secured puts so much, but I would love to like take that exact way that I use that, but then do it intraday the way you do it, where it's like, okay, well now if you do know where that in-stat low or high is most likely, well then if you're telling me time is a really big benefit to these options and I don't have to sit and get stopped twice, I just still be right about the move. Maybe it's a great marriage, you know?
I mean, it's very powerful just knowing where price is going. I think the thing people struggle with is they look at all these little candles, the closure below the up candle, the closure above the down candle, the inverse fair value gap, the imbalance, there's all these different things that they pay attention to, and they're hoping that it holds instead of understanding where price is going. If you know where price is going, your only job is to find a way into wherever it is that it's headed. And if you can find your way in or multiple ways in, then I mean, you've basically solved 80% of 80-90% of your actual trading, what it consists of. If you can put that in a mechanical system that you don't have to figure that out based on your own thoughts, then you'll see the real magic happen when you learn how to manage risk. And I think that that's the third horseman in trading, is that a lot of people, they don't necessarily know how to manage risk. They don't know how to risk properly, and they don't know how to scale up. Everyone has a desire to scale up to be able to make more when their system is working for them. But when they scale up and they get cooked, they end up trying to change their system or scale up. They try to position size up a little more, size up to what they're not ready for while they're tilted. And there needs to be an entire process that works with a system that doesn't change. My system does not change. I'm either looking for this or that, nothing else. Its price is either going up or it's going down. There's nothing else that it's doing. Even if it's going sideways, what was it doing prior to that? So it's still in that regime until that sideways move turns it. But it's either going up or it's going down. And if you can't identify that, then you need not be trading, and you need to find a system that could help you to figure that out on most days. Yeah, sometimes I think it's going up and it goes down. Sometimes I think it's going down and it goes up.
Be wrong.
You're going to have those moments, right? But as long as I'm right more than I'm wrong, then I'm willing to stick to the system that I currently trade with.
Well, and it's like in the world of statistics, you have what's called variance. So every time you try to do something different all the time, just because you lose a few times, like you're adding that ripple, right? If anybody here likes the TV show Flash, right? He goes and travels through time because of how fast he is. And every time he travels, he creates a new reality. It's the same thing you're doing in your trading edges. Anytime you're like, oh man, I took a loss today, so I should instantly switch and do something different. Well, now you just created like this entire ripple in your trading where like now you're starting back at zero. You're starting back at zero. Like you got to experience isn't how long you've just arbitrarily been in the markets. It's how long are you doing exactly the same thing over a long period of time. That is your experience.
Yeah.
And it's like the dopest thing in the world to just, and it's honestly like a freeing feeling to be like, I don't have to care about all that stuff. This aligns with me. I can see the probabilities are better than just a coin flip.
Mm-hmm.
Now I just have to put positive risk management to it.
Yeah.
And what we find as humans psychologically is us as humans just kind of gravitate to the things that give us feedback the quickest. Mm-hmm. And if you really think about the new trader, the psychology of a new trader, and if you guys are listening and if you align with this, let this be a trigger to you. Am I doing what most of the people do at the beginning of their trading journey, which is go to the thing that gives me the feedback the quickest? Why? Because that gives us dopamine in our brain. We chase dopamine. That's our survival mechanism, is we go where the dopamine rewards us because that's rewarding survival. That's keeping us alive.
Yeah.
Well, if you think of in trading, which one gives us the feedback the quickest? The learning risk, get in, get out of a trade, click the button, click the button, click the button, click the button. And so everybody instantly goes to, how do I get into a trade? How do I get into the trade? Where do I put my TP? Where do I put my stop? And not, well, how do I actually make a trade, like define the quality of said trade? How do I put myself in an environment that's conducive for the trade that I'm looking to take and the move that I'm looking to capitalize on?
Yeah.
And when you can kind of flip that script and obsess over what people at the minority obsess over, I'm telling you, the game changes for you.
Yeah,
it really does.
Yeah. And this is, what I was telling Mickey earlier, when you're trading and you have two levels that price can potentially tap into, right? I had talked about that, the 29,300 up here, and then those levels that I marked out down below, which were down here, right? I know that between these two levels that are here, whatever's happening, it's all short term, right? I need to make sure that if price is not at this level, anything that I'm taking inside of here will just be a quick scalp. But when I get down here, I can look for a move that I can hold a little bit longer. Now, I'm not looking for it to go to a high, but I know that this move can materialize more than just a scalp. Likewise, if I was looking for any shorts that might have been up here, right, or shorts that have been inside of here, I'm essentially looking for moves that will be short term inside of there. And when we get up to this level up here, this is where larger shorts can play out. I can feel a little more at peace and safer with the market making its way down from here instead of being inside of this range that's here and knowing that longs are better down here and shorts are better up here. So it's about, knowing what you're expecting when you enter into your trades. Am I expecting a larger move right now, or am I expecting a short move? I need to know the difference between the two. The shorter move needs to be covered faster than the larger move does. The larger move may be able to, have the ability to scale in at that larger move because you're expecting, of course, you still want to respect your risk, but you're expecting a larger move to the upside or a larger move to the downside. So I know I can obsess a little less over this larger move and I can have a wider stop on this larger move than the shorter moves, I need to cover a lot faster. So, people don't understand where those things generally occur because if they're not trading, if they're not trading one thing, they're trading another thing. If they're not trading what you're trading, they're trading something else. Oh, well, the statistics, it hasn't shown the entry as of yet, but here's this inversion. Ooh, squirrel, right? There's just all these different things that they see in the market that they quickly go to react on out of impulse instead of just being able to wait for us to get to exactly where price is going and then begin to move in their direction. I told you, I said I was waiting for price to have this failure below. If we maintain that failure below, we begin to make our way back up. I'll be looking for us to go to that 930, 931 candle that's up there. I had to wait for us to get down to those levels that were there. If price left and did not come to those levels, then I have to wait until we get all the way up to 29,300, 400 for me to try to find a short that's up there. But either way, price is going to make me wait. And if I don't wait, I'm going to get cooked. So if I kept buying as we had those little up candles on the way down, I would keep getting stopped out until that would have been 4 stop outs, maybe 5. And then price actually goes my way and I lose the confidence to get in because I got stopped out so much. Versus if I just waited for that one spot for price to get into and then we begin to trade away, I can just focus on managing the trade because we've already got to the level where I expected price to turn. And I know this is a larger move to be able to take shape and trade out to whatever target I have up above. And between where I'm getting in and where price is going, I owe it to myself. I owe it to my family. I owe it to my trading plan to pay myself on the way. I'm not trading to be right. I'm trading to make money. So at any point in time, I can take out money out of the market to be able to give to and store up for my family. I'm going to do so, right? Partial for what kid number 1, partial for kid number 2, partial for 30 Amazon packages that keeps coming to the door every day. You know, you gotta make sure that you're doing things in that manner to be able to do this every day. If it's up to you being right every day, trading is going to feel so hard. It's going to feel so difficult because this is not a market where you can be right every day. So even if I'm wrong, can I still make money? Then that's the objective of trading. It's me being able to enter in, put a little risk on, take something out, and come back the next day. Sometimes it'll deliver to that large target. Sometimes it'll only go a couple of points. You got to accept whatever it is that the market gives you and understand that the market doesn't follow you, you follow it.
It's process versus outcome, you know, like
yeah.
The easiest way to just hack your brain, because people say things all the time, right? But it's like, how do you actionably do this XYZ cliche? Well, the cliche you guys always hear in trading of process thinking over outcome thinking. Well, every time I take a trade, I don't look at could this trade win in this? No, it's could I take this trade? Do I want to take this trade that I'm going to, if this situation also happens 100 other times, is this the trade I would want to take 100 times? Like, again, this is why I teach over live price. Look at today's market open range. I define a lot of my risk off of 930, but if that trade, I don't care if I see it winning or not, if I can't pass step number 1, which is defining risk, it's not a trade. I don't care if it could win or not.
Yeah.
If we broke below 930 here with this huge range, absolutely, I think we could go lower. But can I define my risk to where if I just every single time this happens, I make a, well, it could win, so let me just take it this one time. This one-time trade, those turns into ripples into your trade plan over the next 100 of every 5 to 6. Think about it like this: if every 5 to 6 trades is those just one-time trades, some of those are going to be devastating. Some of them will still win, but if they do follow your plan, they're going to be devastating. So it's just going to destroy the velocity of good edge. So if you can't pass your risk question for however you trade, it doesn't matter if that trade could win. So that's how I brainwash myself into being like, yes, this trade, this 945 or this 930 or this high day, low day, whatever trade I'm looking at, if I'm like, yes, I would put my name beside that trade over the course of 100 times, no matter if this specific one wins or loses, it also puts myself in the frame of mind that as that trade's going on, whether it's in drawdown, at entry, we joked about earlier, but missing my cover the queen, whatever that is, I can laugh it off. I'm not sitting here. It's not like this devastating event that I'm going to blow my account or go crazy, take bad trades because arbitrarily that one singularly lost, because I'm thinking over the next 100. So I love that you said that, because that's the golden ticket to trading, right? Is knowing when to just be happy with whatever the end result of that singular trade is, because you are doing something for the next 100, not right here, right now.
Yeah, and when you're in the building phase, you need to trade with that mindset. I'm not trying to build with 400-point entries, right? I'm trying to build up some capital or build up some profits to be able to risk for more profit later on, so I never eat into the starting balance. So if I'm able to start with 1,000 and I'm able to make, $2,000, at some point, if I choose to risk out of that 2,000, 20%, that 20% could yield, 50% of that trade or 100% of that trade on a small 0 DTE entry. But if I lose it, I was willing to take that risk. I'm not going back into losing the $1,000 I started with. Now I'm only down now I'm only down to $1,600 in profit left. But my equity is still at 1,000 that I started with, even though I upped my size in that initial trade of $200, right, or $400. So with that, it's understanding that when you're building, you can be building a house, right? Most people think that they're trading an account to live out of now. No, you're trading an account to build it. Later on, when it gets to a certain size, you want to live out of it after. So if I'm building a house, I'm putting together the foundation, right? Putting together the structures. Now I have to put in the wiring, and hopefully the plumbing is in already. But now I have to do the covering of the structures that I created, and then when I get inside of it, I gotta insulate it and all these different things after. I'm not putting the laying the concrete of the foundation and then bringing a bed to put on top of that, right? I'm looking to build this thing out to where it's able to sustain me day in and day out throughout all of the needs that I have. So you got to look at trading the same exact way. When you first start trading, you are building an account. You are not trying to make X amount of profit to withdraw. That's not your goal. Your goal is to build the account, to get it to a certain size where now you're able to risk a daily percentage and either make or lose, whatever it is. And by the end of the week, if you're up in profit without touching where you said you're going to, live out of the account, let's say you have 25,000, you're up 10% profit by the end of the week, you can pull that 10% profit out. If you're only up 5% profit by the following week, you can pull that 5% profit out, right? But you can't go below that 25,000 at all, because now you say you're going to live out of this account and you're going to trade the profit you make today for more profit tomorrow. So whatever it is that I made today, I can risk tomorrow. And should I be able to gain 100% on that trade tomorrow, now I'm up again by whatever profit that I have that day. But I never touch my equity at all. And the end of the week doesn't mean let me just go and withdraw profit and start over again, because then some people start over, they lose everything in their account, and then now they have to put more money back in. I don't want to go through that cycle anymore. I'm done with all of that, right? The tilt is not blowing it's a loop. Tilt is not, you should not blow your entire account in a day or in a week, right? Or in a month even. You should have a certain risk where you're able to take 40, 50 losses and still have the account. You have to account for the long term, not just this current week. I've just activated my funded account and blew it the same day I activated it. How many times are you going to learn this lesson, old man? How many times are you going to get back to the same thing? It just doesn't make any sense. Or
we call it the doomsday scenario, right? Like, what is your doomsday scenario? This is why you got to know your edge. Like, I know for me, I can go like in my edge, it's realistic to have maybe 2 days back to back red, right? Like not blown, but just a normal expense. Then 3 days back to back is like the extreme. Like I'm just, Austin, dude, you got to go back and just understand what a trend line is, I guess, because you don't know how to trade. That happens maybe once a quarter, like once in a blue moon. I just can't operate efficiently back to back to back. Yeah. It's not normal, but it is things. What I do is I account for the moderate to the extreme, the doomsday scenario to the normal. Yeah. And it's like, can I still survive 2 to 3 days back to back where I can't see anything? And then if I can, my risk is good, right? I can survive the worst case scenario. So that way now when everything is aligning, when everything is working correctly, I just have to worry about executing consistently. I don't have to stress about a singular trade winning or, oh my God, I took 2 back-to-back red days. Is today the day I lose my account? No, it's accounted for.
Yeah, I think people are living trade to trade, trading trade to trade.
Trade to trade,
and, yeah. And it shouldn't be that, right? That's not a long-term mindset. And I think this is what the prop space has sort of put into the minds of people. Oh, if you can do 10 solid days of trading, 5 solid days of trading, then you can withdraw X amount of money. So now people's only goal is 5 days of trading. Oh, we do daily payouts and there's all these different things that they're implementing where people's mindsets only or their vision only goes up to that point of being able to get to that day. oh, I was 3 days away from a payout. I was a day away from a payout, and I lost everything. I lost 40 accounts, $70,000 gone in profit, and I was just a day away. What were you risking that a day away from being able to withdraw money, you lost that much? It doesn't make any sense with dollars. You're not trading for the future. You're trading with the cheese right in front of you. You're trading with the carrot right in front of you, or whatever it is that the hamster runs after. You're trading with that. And as long as that's in front of you, you're running on this wheel, this meal, where you're essentially trying to get to that target and not realizing you're destroying yourself along the way.
Yep. We got a question here. This kind of can be a great question for both of us.
Yeah.
We got Andrew. What's up, Andrew? He says, how do you get confidence in your trade? How do you rectify the need to have discretion with every trade strategy needs otherwise 100% automated? And now I can relate that, Andrew, specifically with the trade that I'm in right now. It's number one, you got to keep doing the same thing over a long period of time, even when you get your shit kicked in. And this is where everybody I lose so many people. And I'm sure Dave feels the same way. You mean to tell me that you want me to learn how to make money, yet right away I'm not trying to focus on making money? Yes, just because when you were a baby, your goal wasn't to do a 100-meter sprint at track. It was just, can I freaking put one foot in front of the other without falling over? The way that we learn doesn't change just because the barrier to entry is low. You have to have experience doing the same thing, no matter if it's statistics, market structure, it doesn't matter. You need that second part of that thing in your brain where we can just, I always forget what it's called, but in the world of psychology, there's a word for you just naturally pick up things because your subconscious learns it as you keep exposing yourself to it. That's why I tell people that learn statistics, the worst thing you can do is just, and you even talk about this, Dave, you just give AI something and then you just blindly trust that is what it is. No, the first thing that you should do learning statistics is to put all the AI aside, pick up a spreadsheet or if you're a notebook person, a notebook, and actually look at day after day after day after day, because you're not only building the stats of whatever move you're trying to capture, you're building your subconscious memory, the seeing, okay, if I'm collecting the 10 to 10:30 time period Dave told me to trade, and I'm noticing that it's just making the high day, low day. Oh, I see this little thing that happens too. Like you note it down within your brain. Like you just see it because you expose yourself to it.
Yeah.
And so that you just got to get experience doing that. And then the other side of the coin with, again, why did I have confidence to take this 3 times? I know when the edge diminishes, just like Dave knows when his edge diminishes with giving X amount of attempts or taking this trade going long or short. You need to understand when that edge diminishes.
Yeah.
And it's not so much, I hate using the word discretionary, because if you look up the book definition, you're just going off your feelings. Like we're still being mechanical. People get mechanical trading confused with, we're not being robots. You just have clear if-then statements, and there's full TP right there. You have
beautiful
definitive if-then statements that guide what decision you're making. So you're just applying these different little decision trees until it finally comes time to click that button. But it's not just, I feel like this specific candle. No, this was the 3rd attempt at getting this MFE. And if you see my indicator here, this is the MFE I'm talking about. All these favorable price, these whole zones, it's just probable price movement, right? This is your high strike rate, your very high probable things that typically happen, even if you're wrong. This big median box here is your median. This is 50% of the time it comes here, 50% of the time it doesn't of the data. And then this is your 75th percentile is still realistic, but it's your expansive. It's your larger movement where if you're correct about a directional move of some kind, this is where those directional moves are spent. And you can see, look at my targets. Why did I exit where I exit? Why are these exits here? Because this was the in-stat low a day, pushing off of it. So I know that the high strike rate area, aligning statistics with live price, accepting above a live price component that tells me bullish versus bearish, just like for Dave, his is market structure. For me, if live price tells me where, bullish statistics tells me where too. These areas, these zones. Now, I didn't have enough risk to have this crazy FU Furu runner, but that's what scaling out of this position was for. This was to get a little bit more of the movement if I'm correct, a little bit more of the movement if I'm correct, de-risk my position and cover the queen. And there was the full trade. Dave, I'd love to hear your answer to this.
So with discretion, you're not trading with discretion. Well, sorry, learning with discretion. If you learn something, it's either you're doing it or you're not. There should be no discretion to it. When you learn how to drive a car, you're not using discretion as to whether you should run the red light or not. You're following the system of it's red, I have to stop, right? Or it's green, I have to go, right? It's not whatever system you're learning, there should be no discretion to it. Are you trading the system or are you not trading the system? Now, when you're taking the losses or you're seeing the wins in the system, you find different things within it that you may be able to refine. But that's if you're trading alone and by yourself. If you are learning from a profitable trader, then you should be doing exactly what it is that they tell you to do blindly, right? Because if this is what they actually do in their trading and they have a profitable outcome doing this, you should have the same outcome too, doing it as well, if the system itself is profitable. I have an outcome of driving my car, turning left, stopping at the light, turning right, and then making another left, and boom, I'm there at Costco, right? You should drive in the same direction, the same map, the same route to get exactly where it is that I have gone plenty of times. But once you go off script, now this is discretion for you. You chose to, hey, there's that 930 candle we hit.
Dang, dude, this was the guru right here. See, I'm telling you.
You chose to go off script, and you chose to do things your own way or with what you thought versus what your system told you to do. Discretion is thinking in trading. I don't need you to think when you follow the system that I teach you, because I've already done the thinking. I've already sorted all of that out. I know exactly when to enter, how to enter, when to close the trade, right? When to stop taking entries. That's, how many losses you take. I know all of that, and I've provided all of that within the system that I trade with. And it's up to you not to follow it in a discretionary way. It's up to you to follow it blindly, right? You need to follow it to where you're able to find confidence in the reps that are there. So every strategy does not require discretion. Every strategy does not need discretion. When you're trading discretionary, you're trading based on what you think the market is going to do. That's not a system. That's something that you're doing. Now, there's some traders that are profitable with that. That's based on their own experience in trading. You're using discretion that way. But if you have an actual system, what is the discretion for? If you're learning from someone who claims that they take trades this same exact way each time, why are you thinking about whether you should enter or not, or what you should do if this doesn't do that? You should just be following your system blindly. And when you follow your system, you learn blindly how to optimize it in the areas that it struggles in. So that's where discretion actually comes in later on, because now the places that you begin to struggle in with the system, or where most of the losses occur, you just stop taking trades there. So while the system tells you, yes, go and execute on this, you say, hey, no, I'm not going to take this trade. I'll give you an example. So let me just do this. Whenever we are in highs, like we have a high that's here, I know that a lot of the times what I've seen is that we'll trade up to the high and the market will trade away from it. So when we have the indicator on, I generally tell people, hey, when we're near this high, if we have a buy that pops up here, do not take that buy. Now, doing it in a mechanical way entirely is saying, I'm just going to buy every time the buy pops up. I'm just going to sell every time the sell comes up. But when we actually have a buy that pops up here, this is where discretion comes in that tells me, do not take this entry because it's near that high to the left that's there. Now, I don't know if a buy actually popped up there. Okay, there's a buy there, right? We have a buy that pops up here. What happens near that high over there to the left? Buy pops up, you took it, got cooked, right? Because this is something that as you were blindly taking that entry, you know, anytime we're near highs, we are not longing. Anytime we are near lows, we are not shorting, because those are likely the entries that will not work out. That's where discretion comes in. Discretion helps you to deviate from an otherwise mechanical system when you know based on the mechanics that it's best not to do this. Can I drive off of a cliff, right? Can I drive near the edge of a cliff? Can I drive on the sidewalk very close to the mailboxes? Can I, whatever it is that I can do, can I, get around traffic on a motorcycle by driving on the sidewalk and then going back and say, I can do all of that, correct? The motorcycle, the way you drive it is put it in drive, put it in whatever it is that you're doing. The car, put it in drive, put it in neutral, put it in reverse. You can do whatever it is you want. But based on the system that you're operating in, you need to know when to and when not to, right? So you slow down when you're getting to a yellow light, hopefully, right? You don't drive too close to vehicles. You're learning by operating a mechanical device how to be discretionary with it. Now, it's the same in the market. Whatever it is that you're learning based on what these candlesticks are doing, based on what's cyclical in nature, okay, a buy popped up there. This is what is scripted to do. But discretion now comes in and tells me not to buy there because this is where most of the losses occur. Can it actually work out? Yeah, it can. But I know that more times than not, I lose when I'm taking this trade that's positioned at this spot right here. So that's where discretion begins to come in. But you need to learn something first that's highly mechanical or specifically mechanical in order to say, okay, now I could start to put some discretion in here. But if you don't do that, then you're not going to really learn anything. You need to learn mechanically, learn and blindly do something, and only that. You'll find out whether it has an actual positive expectancy. And can you increase that positive expectancy later on? Yeah, you can. But you could also decrease it too. You can decrease it by changing things up in it that just, messes with the results of it. So you blindly follow it. If it works more time than it doesn't, you have something to work with. And then that's where discretion comes in to start to optimize where those losses repeatedly happen. Now, while the system says to take a long here, your discretion says no, not to do that because you're going to take that trade and end up in that loss. So with finding confidence comes from you executing daily, time and time again, on the same exact thing, doing it the same exact way. I always talk about trading back to this particular range here, right? Something I taught in the mentorship. But I've done that so many times that I know, okay, yeah, we start to bottom out. Now I'm looking for price to trade right back to the bottom of that target that's there, right? Could be going to that 930 candle as we mentioned, but I'm going to prefer to use the 931 candle. That's something I've done so many times to where I know that I'm willing to get cooked based on doing this. I'm willing to take losses based on doing this. Yeah, people have an idea that the market could go further down. I do believe the market has lower to go as well. But what we're seeing right now, where we are, what we're looking at, says that I should be looking for price to trade higher, right? I should not just go with what I think. I should go with what I've seen plenty of times before. And what I've seen plenty of times before is price trading back up. So I stuck with that. And I needed to see this plenty of times and get cooked on it, as well as win on it, to know when to use it and when not to use it. Now I know it's higher time frame POIs that I should use it in, and there's other things to it. It's not just as simple as trading back to that. But the discretion part only comes in after you've found positive expectancy in a system. And if you don't have confidence in your trade, you don't trust your system. I had the utmost confidence in price going back to that 931 candle. I wouldn't have said it, right? In this industry, you live and die by your call outs. You live and die by you saying price will go here, and consistently over time, if someone was to follow and calculate all the trades that you took with a certain set risk, they would be profitable on the other side of it, or they would not, right? So am I typically calling a bunch of losers? Am I typically luring people in to take trades that don't work? Am I, 1 for 20 on the month, 3 for 40? No, I'm not, right? So I understand that I need to wait for the things that is higher in likelihood to work out in a positive way than to just try to go off of what I think in my mind. If I go off of what I think in my mind, I'm not going to have confidence in trading, because this is a market that doesn't follow your thoughts. The market does what it wants to do, and your thoughts often are wrong. But your system, if you just follow that, your system will work out more times than it does not, because you are following something that the market has historically done versus something that you think it's going to do on the day to day. The market is right all the time, and you are not. So that's why it's best just to follow price, right?
100% agree, man. Market's always right.
Yeah.
It will humble you.
Yeah.
You answered it perfectly here. So Eric, I hope Dave answered your question there, because he got it perfectly. Like, he was asking why did you choose the 9:31 a.m. candles? There you go.
So I was looking for price to go back to the 9:30 candle that was there. 9:31. I always tell people that with my targets, even if I have price going to take out this high, am I looking to take profit at the high? No, I'm taking profit somewhere below it, because I know that I may not be 100% right of price actually going to take out that high that's there. So for me, I moved it down to that. I was looking for it to come back to the 9:30 candle, but I moved it down to the 9:31 candle because we had a previous rejection there, and then price traded lower. So I'm just trading back to that previous rejection. We could reject again there, right? But ultimately, we then make our way up and actually trade into the gap and potentially above that high that's there. So it's just about me not. I don't care about being right. I don't care about the high getting taken out. I don't care about the low actually going, right? It's just where my entry starts, which is down here, where my target is, which is that 9:30 candle that's there, and what I can pull out of the market on the way to there. If you're able to go 75% from where I get in to where I have it going, you're able to trade 75% into that direction, that's a successful trade to me. You're able to trade 50% from where I'm getting in to where I have it going. That's a successful trade to me. I owe it to myself to pay myself something. Now, it's just history repeats itself, right? We rejected from there before, so I expect another rejection to happen there again. Why would I want to, in turn, have this rejection here, spend all of this time sitting inside of here before we actually begin to make our way back up and actually take that high? Now, what if we reject again and we're sitting around here? Now I spend much longer having to think about this trade that started somewhere over here, and by 12 o'clock it actually delivered. I don't want to sit there thinking too long. You have a limited amount of mental capital when it comes to trading, and you need not use it in places that is a waste. And the mental capital that I should be using is based on the management, not based on how much money I want to realize. So if I can make my management risk free, or if I see an obstacle within my management where it's better for me to take profit than to wait for it to go here, then I'm going to do that so I don't exhaust myself. There's a real thing called decision fatigue, right? I call it winner's fatigue, but it's decision fatigue, where you actually see your decisions are degraded over making a series of great judgments or great decisions over time. Your decisions become degraded, and now you're taking less than great entries, right? But this is why I created the indicator too, because the indicator essentially changes a lot of that for me. Now I don't necessarily have to look for, you know, entries and make the decisions on my own. The indicator would make the decision for me after I've found my preferred entry. So you just look at where some of these buys are, right? A buy that's here, there's a buy that's there, there's a buy up there, right? You likely would have got cooked. That's fine. There's a buy that's there, there's a buy that's there, right? So out of all of these moves trading higher, only one of them would have been invalidated, or maybe not. This probably, you know, your stop would have probably been behind a swing low or something down here, but that would have been a little too much risk anyway. So I likely would have taken the stop order to break even there. But out of 4 entries or 5 entries that we had signal out, 4 of them begin to deliver in one direction, right? So I don't have to make those decisions anymore. The market will make the decision for me, and I just have to know where I have it going. So because decision fatigue is a real thing when you're trading on your own without automation, I offloaded that to the script, and now I just focus on where I have price going. So that target that's right there, you know, we've rejected from there before, so it's best just to take profit at somewhere that we've rejected instead of looking for it to go further. It just means that if my entry is taken out right here, right, and we didn't trade back up above there until what is that, 11:29. So I TP'd at 10:41. We didn't trade back up there until 11:29. For 48 minutes, I would have to watch all of this. Look at you know how exhausting all of that is? Looking at all of that inside of there for another hour just for it to get back to where I said I was going to take profit. So it's essentially, you know, just avoiding the mental capital exhaustion that comes with it, and you know, it's just a better spot to take profit at. Yeah, the high can go, you know, it may not go, I don't know, but I don't care either. I don't trade to be right, I trade to make money, and I know that it was better for me or safer for me to take profit there.
When I don't know how you are, Dave, but like usually when I capture like the move that I was trying to, that even brings me to be behind the chart today, which every single day it's either the high probability movement towards statistics from 9:30 or away the statistics from 9:30 or 9:45 in this case. So it's just to trade the high probable price movement of the RTH AM session. And when I get that, or if I just can't afford to pay any more expenses, that's when I kind of call it quits. You know, it's like,
yeah,
the chunk or the meat and potatoes of what I was trying to get this morning has delivered. So now it's like, I'm done. Let me go out. Let me go about my life, because that's why we do this in the first place, right? Is to not have to keep executing or have to be behind something.
Yeah. Yeah. And I think that's the misconception that people have, is that you have to catch every high and low that's there. You have to catch every trade that the market gives. No, it's just that one trade that you take. I mean, some people, they're up $1,000 in just a couple of minutes. Why is it that you can't accept $1,000 in a couple of minutes as a day's worth of work when you know that there is no job out there willing to pay you $1,000 in 15 minutes? Why can't you just walk away with that? Right? It doesn't make any sense, or dollars. You're willing to give it all back, because what if this can be 2,000 on a day? What if it gets to 5,000 on a day? There's all of this. I talk about this with the group a lot. So let me just explain it this way.
Yeah, man.
Right. So I took in the entry down here, right? Let's say the entry is here. Let's say the stop is behind here. Let's say the target is the bottom of here, something like that, right? If I said, based on my system, that I was going to enter here, take the profit here, and when we start to push heavy into that direction, I in turn move my stop, move my take profit further up to here. Right? The system says take profit here. Anything after that is now gambling. It is not, you said you were going to take profit right here. Your system told you that's the most efficient spot to take profit in, and you were willing to walk away with whatever this was on the day. The minute you moved your take profit from here all the way up to here, I get if you move it closer, that's fine. But the minute you move it further away, as price is trading heavily into your direction, you are now gambling because your system told you this is where you should take profit, right? Or this is where you're supposed to take profit. And this is where your mind or discretion told you you should take profit up there, right? So now what you're doing is you're operating outside of your system and you're now gambling because you want more profit from this idea that you executed successfully to the target that it successfully got to, but you thought it could go more. A lot of people lose their accounts. They lose all of the progress that they've made with trades like that. They look for it to go up. They remove their stop from back here. Now there's no stop there because it went up, revisited their entry, and they go, oh, this is just a retest. And then it starts to go down like that. Guess what it does after? It makes its way up, back to their entry, just goes a point in profit. And then wham, right all the way down to some larger move below. All because you couldn't accept the profit that was here in your system and you wanted it to go further. And then you end up seeing the market collapse on you and trade the other way. You wanted to be right about where it was going instead of just following the system that you claim you trade. So with this is essentially how you have to, optimize your system, how you have to take your entries. Take your entry, take your profit, get out of the market. It doesn't matter if it goes much further to the 1 hour BISI or whatever it is that's there, right? I don't know what other people trade, but for me, I trade from entry to targets. That's it. I don't care about anything extra. Oh, I'm going to come back and see what the PM session is going to do. Oh, so now you're a philanthropist. You make money and then you give it away later on in the session in philanthropy hour. It doesn't make sense.
He's a philanthropist.
They make money in the AM and they want to come back in the PM. AM paid you more than a job out there would pay you for the skill you have, and you come back to make more? That doesn't make any sense or dollars. That's my approach.
Get your piece and leave, or pay for the potential to get your piece and then start over tomorrow.
Like, it doesn't make sense, but this is what trading is. It's battling those impulses. I get it. I grew up in poverty, so I dealt with a lot of that stuff too. People who grew up with lack, it's harder for them, right? People who grew up with the lack of food or the lack of opportunity or whatever it is, it's so much harder. You have more to overcome. Like you, if you're 30, 40, 50 years old, you've been that way for however long that you've been living. Now you enter this space of trading, and trading is telling you you have to change. And the sooner you change, the sooner you'll start to see progress. But you're being asked to change who you've been for 35 years in the 2 months you want to become profitable in. That is crazy. That is hard. You have a year to change 35 years of who you've been. 40 years of who you've been. That's hard. That's difficult. So,
and how people change, like the speed of it's so specific to the person. Somebody, they can pick up a habit in 30 days, right? They're not going to be perfect in 30 days, but they can start doing that consistently. Versus somebody, dude, some people just got to touch that dang stove 10 times to convince themselves, like, okay, the 11th time I should not touch that stove and burn my hand.
And it's about placing boundaries around, the things that you struggle with. If I know that I make money but I give it back, why am I coming back to give it the chance to take it back? I need to know, hey, I secured this amount of profit. I'm not entering it again, because I have a problem with just entering trades based on discretion, what I think, instead of entering trades based on being able to wait for the system to show up. So the great trades that I take, they're a part of the system, and the bad trades that I take is a part of my thoughts. But I can't stop trading whatever it is that I'm thinking price can do, and that keeps tripping me up. How do I fix that? How do I solve that? You solve that by creating a rule that once you walk away with profit, or once you close that trade in profit, you cannot take another one. Live to live another day, right? Walk away from the market, come back tomorrow. And the way you start off tomorrow is defensively. You know that you make a great decision in trading today, but tomorrow you struggle. Okay, size down on your first trade tomorrow. Now, if you size down, you've probably lost 10% of the profit that you made yesterday, but it doesn't feel as bad because it didn't set you all the way back a whole day or 3 days. You need to have an approach, a plan to how you're going to approach the market when you deal with those struggles. And these are things that every live stream we have, we talk about these things, right? I make sure to explain that, hey, we have price going there. Some people are looking for it to go higher here, but why not just take the profit there? These are things that we explain every single day in trading. And we can identify that, yeah, that's us. That's exactly how we trade. I ask people, why don't you just follow? There's people who did the pilot program for the indicator. The biggest issue is that people would not follow the instructions of the indicator. Why can't you just follow it? You see that it's so much of a better trader than you are. Why can't you just follow it? What's the problem? Then people started to realize, okay, yeah, I'm being creative instead of just following the rules. And I see if I follow the rules, it's a lot easier for me to be able to realize money in the market than to do anything else, than follow my own way. Trading is just a perpetual state of learning and unlearning. And as you learn how to trade, you're going to unlearn behaviors that you've carried for years. Behaviors that have impacted your life negatively, behaviors that have impacted the lives of others around you negatively, the behaviors that you did not see, right? You're going to have to figure those things out. Some people actually have to go to therapy. You actually have to go and figure out, why is it that you can't feel comfortable in not being in control? Some people, they were violated by people who took care of them when they were younger, people who were supposed to keep them safe. And they turned around and swore they will never give anybody else that kind of control over them. And now that's spilling over into trading. They're trading with a survival mindset. They're trading with being, following someone blindly and foolishly. And now I'm going to follow my own way. I'm going to do my own thing. I'm going to force the market into submission to what I want versus following what it's telling me to do. And you start to unearth a lot of those behaviors around trading when you start to execute. You start to realize that I always say, people who are liars, you're never going to become profitable. But there are people who they lie because it's out of fear, right? They might have been violated when they were younger. They were picked on, bullied, whatever it is. Some people, their parents were their first bullies, and they just had to lie to be safe. And I don't know why you lie versus why you do, right? Or why you don't. I don't know any of that stuff. But what I do know is that you have to solve that problem, because trading is going to show you. You cannot outsmart the market. You cannot lie to the market. And you can lie to yourself all you want, but wait until you get behind having to make those decisions in trading is going to cook you. What you don't kill on the way up is going to kill you on the way down. And you have to be sure that that is something that you deal with as you are growing, because if you don't deal with it later on, it's going to deal with you and you're not going to like it. So there are plenty of things that you have to sort and solve while you're learning this chaotic market, while you're learning this, or even on NQ, on gold. Some people trade in these pairs that acts like a bull, right? It's just, and I don't mean bull by going up or down. You can't control it. I mean, you want it to go up, it goes down. You want it to go down, it goes up. You're in a good position, it goes sideways. You get out, it goes in your direction. You cannot control it.
Yeah.
So you have to get rid of that need to exercise control in the market and just follow it. Accept losses. Accept that price isn't going your way. Accept that you should not engage or enter until the time that your system tells you to. And if you can do that, if you can just be a great follower, if you can just be obedient to your plan, that you will scale so much faster doing that than anything else. So much faster. I always talk about the fact that, you know, for me, this is how it tends to happen. So I look at something to the left. We got to the, what was it? The 47, I think it was over there. We got to somewhere around 47. And this is where I usually I start seeing some wicking there. My mind is telling me, let me just enter. There's some wicking that's happening there. Let me just get in. There's a bullish counter that showed up, right? Those impulses are being pulled on. And I enter here and get destroyed on the way down. Bam, account is gone, right? And I always say, this is you. And this is the guy she told you not to worry about. Right? Right? This is you try to just push whatever buttons you can over here. And this is the guy she told you not to worry about, right? This is where you should be executing. This is how you should be taking your entries versus you thinking it can go up or it can go down here, right? I always explain that in the group. I'm better off following what my system tells me to do than following what my mind tells me to do. Yeah. And you can see it on the chart. People who get in and they get stopped out, then price moves their way. A lot of the times you guys stopped out from trying to front run, not stopped out from, you didn't want to wait. You wanted to be a part of it. Maybe it's going to leave me. So let me jump out and get in because it could leave me. And then now you're down 150 points and you have to close. And then the market actually trades from that same POI you were trading from and it moves in your direction. But guess what? You lost confidence. Now that it's over here, you lost confidence to get in.
Well, and that emotional slippage compounds. So like in the next 100 trades, even if let's say 10 of those trades, you tried front running or doing something goofy and paid $100 here, $50 here, $70 here. Well, then over the course of how much money are you sitting in just debt of yourself of just being goofy that now you got to account for in actual good trades that are giving you profit? Like that's eating into your actual trade edge profit of you know what you can get from the market by just following your system.
Yeah, the good trades that you do take after they feel like they don't count because they're essentially having to be used to wipe away the bad trades that you just took out of an emotional state. So now while you took some great trades, there's no progress because those great trades only got you back to break even instead of getting you into profit when you should have just stuck with that versus that emotional spiraling.
Absolutely, bro. Well, hey, Dave, listen, I was not planning on you being as generous with your time. And I just want to be the first to say, like, seriously, thank you for giving so much of your time. You've not only officially been the guest that has brought a new all-time high to PackTV of viewership, you have been sitting here the longest, giving your time. So seriously, I really do appreciate it. So we are going to move into the next segment here in a little bit. So I would say what's your final words of wisdom, but you've given like 10 different pieces of wisdom. So like,
it's watch this stream again. Watch this stream again. Watch it. Watch a rerun of it. That's what you should do.
Awesome. All right, Dave. Well, seriously, you're welcome back anytime you want to come on. I think a lot of people feel the same way. Let's run it back. You got just to kind of recap everybody. You guys got to see everybody. You got to see the behind the scenes of Dave, who he was, what led him to trade the way that he trades. You got to see him call a trade live. That little circle on the left there, you see him. That's when he was calling for his long to go long in the options world. I can't speak the options language, but he got a really nice long there. I went 0 for 2 initially. I got stopped out. Going back to my screen here, I got stopped out twice trying to take this long, just unlucky stops, just perfectly took the stop both times. And then the third execution, going back to what we were saying, like sticking to the system, third chance got me the cover the queen, full extended TPs. And now we are done for the day. And you guys got to see both of us execute while teaching and trading. So thank you again, Dave.
All right, thank you. We'll catch up.
All right, bro. All right, ladies and gentlemen, it has been a session. It has been one to definitely, like Dave said, watch the recording. If you guys missed it or you're just tuning in, we literally did the entire New York Open from market open all the way until now, timestamp wise. So all the new people here, guys, it fires me up that we're able to have a platform where we can just promote peace on the charts through objectivity. And then with PackTV, bringing in all these different perspectives, these different disciplines of trading, and just showing you guys, like, it's not you versus some other trader or you versus some other discipline of trading. It's just you versus you, because we all speak the same language in some degree, right? You guys got to see many times how Dave and I were looking for the same areas of reversals or looking for the same area on the chart to continue or to take profit. Like, you guys got to see that. How cool is that? That one person that does market structure and another person that does statistics comes together and still finds some sort of similarity. So hope you guys got some piece of that. And if you are new here and you want to join the boot camp and learn a little bit about how we use statistics and what we do, the website's up there on the top left, but here I'll put the QR code right here. I'll also put it right here, big and bold. So if you guys want to join the boot camp, it's $100 for 3 months of access. There's all the different modules. It's self-paced. It's not just cookie cutter. You click through it. You have simulators. You have quizzes that quiz you on the specific topics. So we really do hold your hand to where you don't have to know anything in terms of advanced math. You don't need some degree. You don't need any prerequisites. Heck, we've had people come through that don't even know what the heck a candlestick is. And they've actually now already gotten payouts in less than a year of knowing what a candlestick was. So if you guys really want to learn how we apply statistics and the tools that we use, you can scan that QR code there, go to the website up there. And without further ado, we are going to get into the next segment right here. Okay, right here, where we have Bootcamp Focus Session, where we have the person that is in the head of operations, Mr. Justun himself, leading into Bootcamp Focus.
Did you find value in the Bootcamp Focus team? You can find them on X here. Watch them train daily by joining the Bootcamp link in the description.
Welcome, guys. Sorry, I had some issues trying to even get in here, but let's get my screen shared, and then we will. We're going to keep it pretty civil today. We're not going to go into too much, but damn, what a good session! I hope you guys got tons of value out of that. I'm going to send a quick notice out to the bootcamp people, and then we're going to be pretty simple, just looking at some price, and then mostly talking about bootcamp right now. And thank you, Vlad. That's a great little testimony to what I'm about to talk about. So bear with me a second. Just to ping the people in the boot camp in case they want to come hang with us. And we're going to boot this one person out of the Discord first because they didn't get reported. So I'm going to screenshot this. Sorry, guys. Got to do my mod stuff too. I've gotten a way of getting rid of 99% of the bots, but there's still some that seem to sneak through by doing a little bit more basic things like this person. So we're going to boot him now that I got his stuff recorded, and we're going to add it to our watchdog. How's everybody doing? Again, hopefully you guys got tons of value over what was just done. I really appreciate it. I was here for the whole thing and engaged for the whole thing, and must admit there was a lot of amazing information dropped. Dave seems like a fantastic guy. I have not seen him before, but look forward to seeing him again. And I think just shows the value of what we're doing here. And so I'll use this as a moment because he definitely went through some of his stuff, and I'd like to take a closer look at some point, but I will take advantage of this time to talk about our boot camp and what that offers and how that works for you guys and how people are benefiting from the tools and resources, etc. We are live, guys. Come on by. Sorry, I usually have this stuff done before getting in here, but I had a ton of technical difficulties with Restream. So, team leaders. I'm going to make this a little bit easier on me so I can get to here and just say go see the chat there. All right. Let's get to some comments if there is any. Oh, Justin, yeah, I don't know about that, but thanks. I've been watching a great stream. Can I combine my own strategy with your knowledge? I'm ICT based. So great question. That's a great starting point to what I wanted to talk about anyways, which is our boot camp. So you can come to this website, thedailyprofiler.com, to take a look at anything. And this is going to, this should comment everywhere, so I'm just going to put it here. And this will kind of go through everything for you and gives you kind of a good rundown, gives you all the access that you need to things and stuff. And the big thing is you can log in here and you'll get access to whatever you get access to, whether it's our free stuff or whether you want to access our bootcamp. If you want to access the bootcamp, the login will help walk you through how to get access to our WAP, or you can do it through our Discord. But the idea is, yes, 100%. If you are an ICT trader, a DR trader, whatever way you like to read the market, this stuff will work around what you do. But the idea is, and the suggestion is, if you are not making money right now, because a lot of people say I'm an ICT-based trader, or I'm a DR trader, or whatever it is, and they're like, this is what I know, but I'm still not making money at it. That is a very good question you need to ask yourself before you even jump into this, is if you are, I've gotten a few payouts here and there, but still really haven't found your groove, still aren't profitable on a consistent basis, then great. And if you want to bring in your ICT stuff afterwards, fantastic. But what I would highly recommend, what all of our team and all of our users pretty much have always recommended, is stop trading for a little bit. Come into this with an open mind and just stop trading for a bit. What you'll do and what you'll find is you'll digest the information far more aggressively and in far more better sense. It will give you a chance to live in the moment of some of the stuff we're trying to teach you, and some of it isn't even in the moment. Like at first, you're going to start off with your chart looking fairly simple, and it's really going to be 05 boxes, maybe the 930 box, which is what I drew here manually, and these 05 boxes. And you're going to be playing off of those. And as you can see, we get a fake out, another fake out, a wick, which is another fake out, and then finally we break out of the top, and then you make some money, kind of thing, potentially. So the idea will be to read this and use this as maybe a guideline for how you might want to trade. And as you can see, like when you're getting in this little range and can't make that full breakout, don't keep taking this trade down. And so when we simplify things down to just looking at these 05 boxes when you start out the boot camp, that is going to be very eye-opening for you. And if you do it still looking at your ICT stuff or still looking at this and being distracted by that, you're not going to give it its full due to kind of read live price action in the moment and take out all the shiny things that maybe you've jumped between. Because even as an ICT trader, it feels like there are things you can jump around between and whatnot. So being in the moment, stopping trading, I think is very, very important in that environment. So fantastic question, but I do ask that you, if you choose to do so, and I think, again, compared to the money you've spent probably on prop firms or on live accounts or on other mentorships or other ways of learning to trade, this $100 will not be the same kind of pit for yourself in a lot of people's cases, especially if you have that prior knowledge, especially if once you're done the boot camp, you can then ingrain what you've learned from the boot camp and what you know from your other trading and create a plan that is unique to you. And I think that's one of the biggest misses between a lot of people in the trading space is you constantly chasing shiny thing, and almost like what Dave was talking about earlier, you never commit to any of them. You're constantly rejigging your edge or affirming your systems and rejigging everything. And like Austin even said as well during the live, is you're creating a new set of expectancies that you have no measurement of when you do that, until you fully engulf yourself into a plan that you have an expectancy with, and let it go through days, weeks, months, quarters, and see its expectancy play out by sticking to your plan and sticking to your systems, it's going to be very hard to become a profitable trader. So hopefully that makes sense. That was a very long-winded answer to your question, but hopefully adds value. So let me know in the chat what you think of that. And fantastic. We don't usually have 112 people still sitting here to listen to me, so I appreciate that. The two, Austin and Dave, ran along, which helps out this chat that we get to have. And as I said, not necessarily going into too much price. As you can see, we're ranging inside the 12 o'clock 05 box. During the 12 o'clock session, there is a lunch break gun chip that I often will look at and take. It did, I believe, give us, I presume, a long, actually, I know a long, but I would have been hesitant on this one this time, just because of where we're at. We're inside the 930, which is oftentimes a spot where I will be a little less aggressive with the gunship lunch break. And actually, it looks like it didn't end up printing a long, which I'm a little surprised with, but it must have taken it out during the play out. Oh no, I'm not on the 5 minute. So yeah, so actually we didn't get a long. Let me double check. Yeah, lunch break. Let's take a look at the data. I'm not going to spend too much time on this one because, like I said, I wanted to kind of stick to mostly general stuff and most of the boot camp. And like I said, we'll take a look at the 05 box a little bit as it displays. But yeah, so no lunch break, no front run. And this is just one of the tools that you get when you join the pack trading group, which in order to join the pack, you do have to go through the boot camp first. That's a very important first step. It gives you a lot of the foundation you need to understand the stuff that we're going through and the tools and the resources that we offer and that we've built for everyone in the group. So we start with the basics. And like I said, one of the basics is the 05 box. And you can see today it's actually played out pretty well. I mean, we couldn't get, let me see, how far did we get outside? Usually our 05 box, and I do have a different one, but charts like still keep not. Yeah, see, we just didn't catch the 0.1% outside of that 05 box. And we definitely didn't go above the 930. Yeah. So for there's our 930 start right there. So we could not break above. So that's where this breakout looked so good. But again, because it was such a large 930, that made it pretty hard for people to go short. But the short would have been the play, and that 05 box played quite well. This one here, same thing. We got a little breakout there, but it stuck right back in. So those 05 boxes can be very powerful. You're not necessarily building a trading style because you can find a lot of opportunities where you get wrecked like this, but it's definitely a good guide and a great way to start your learning process inside the boot camp by learning these 05 boxes and then learning the relationship of them to the 930. The really neat thing about the boot camp is how it evolves. You start with something simple like these 05 boxes, then you add the relationship to the 930, then you add the relationship to line X, which people learn later on, where you know whether we're creating a line to the downside for the New York 2-1 session, and then whether we're creating or we're creating an apex like we've done here, basically. And then that helps us run into the 12 o'clock, knowing whether we're going to have a continuation or a reversal. And that can be very open-ended right now when we're inside the 930. So a lot of really great discussions that we have inside there to help build your foundation before moving on to things that are a little bit more complicated later on in the process. So definitely some neat things there. So any more questions, guys? There's a few of you here, so I'd love to get some interaction from you guys. If you're looking to join the boot camp, as I said, the website, I dropped it in there for you. That's a great place to start. And where you can build your foundation around what you already have, or if you're fresh, new. We have a couple of guys, one in particular, Ryan, who's been in the boot camp and never saw a candlestick before he joined the boot camp. He's still working on himself. He hasn't only been in here for not very, very long, but his discipline and his ability to stick to his plans and not change them from day to day and hour to hour is really helping him create a really good foundation for his trading journey to be quite a nice arc, I think, to the positive side when he gets going there. So as you can see, we've now built the full 15 minutes, which is another thing you'll start learning as we get deeper into the boot camp, is when you have a 15-minute a quarter of the hour built, and we get a breakout of that, this breakout can be far more advantageous and a little bit more probability behind it going to the positive side. So what we do here is we'd sometimes maybe think, okay, we made our breakout, so can we get 0.1 because we're in a major session. Can we get 0.1 to the upside? So we're going to look for that. I'm not trading anything right now. We're going to see if we can get towards that 0.1%. Even 0.5, because we're in a little lower volume kind of thing, it might be a better idea to get this 0.05 out of it. But we're going to measure out the 0.1 and see if we get there. Again, not taking a trade off of this, just looking at it to see if the 05 box plays out or whether it gives us a suck back into the range and denies us that. And as you can see, it's already pushing fairly well. The other thing that we'll see is if we can get up here and actually make a breakout to the upside from our range that's built from our lunch break, which is from 8:30 till 12. If we actually get a breakout at the top here, we could see some good momentum to the upside towards these MFEs, which again is a tool that we have inside the Pack Trading Group. You get access towards the end of the boot camp to start kind of seeing what's available for you if you choose to join the Pack Trading Group after the boot camp. But pretty cool there. So awesome. I'm glad that's a good answer for you. Like I said, anybody else, if you guys have any questions, now's the time. Anything related to the boot camp or what we offer inside the Pack Trading Group, it's pretty much all on the table right now. As you can see, there's a QR code up top to the stream if you want to access it that way, or the website inside here. As you can see, we had a pretty darn good push, but it's now sucking back in. So the other thing that we measure with that 0.1 is we'll oftentimes measure its actual ability to get away from the 05 box. And as you can see, if we do cut back in, then this would validate this potential. I mean, obviously, trade-wise, how you trade that can be varied depending on whether you want to put a stop loss at the other side of the range or inside or the open of the hour or whatever. But I'm just going to still keep this here because it's still kind of long. And like I said, this is pretty basic stuff, but it's where we start inside the boot camp, and I think it's pretty important to start with the foundation, especially when we have people coming from all kinds of walks of life, like ICT, like new traders and all that kind of stuff. And the nice thing that we try and enforce in our group is that we're here to kind of not give you the fluff. A lot of places you go to when you start with a new group or a new system is oftentimes it's here's the answer to all your prayers and here's some strategy that I use, and they don't really show you how to use it. They don't necessarily give you all the additional context that you need to use that profitably. They just say, here's the tool, see all these really great examples that I cherry picked for you, and then you sink or swim, and usually sink is what ends up happening because you have no context. You haven't lived and breathed that system in a long time, and because it doesn't work, you then move on to the next shiny object. So being inside this boot camp, giving it actually 1, 2, 3 months of process, that's how A, you're going to break old habits, B, you're going to find a system that works for you, because that's the biggest problem is and I talked about this already earlier, and I can babble on forever, guys, but obviously I do appreciate some questions and comments in the comments section. But oftentimes what breaks us is we don't make anything our own. And I know Dave even said it with his stuff, and depending on how his systems are, I think there's some value to what he said, absolutely, to saying something like go in and absolutely engulf a certain system. I agree with that. I think if you are going to take on a system, if you don't give it your all and don't 100% follow it to a T, if it is a true system, the problem is most of them aren't. If it's a true system, you hopefully will find success with that. And you cannot do that if you're half-assing it and putting your own discretion into it, because then you're messing with the probabilities of that system, if that makes sense. Hopefully that all kind of jives and lands with you guys. And if you can't, and then by doing so, you're disproving something without using all the facts, and that makes it very, very tough to do. So yeah. Other than that, as you can see, like the afternoon session sometimes does, we get into a lot of little ranges, but we are in a range up here, so we'll see if that ends up breaking above or below to either take our potentially protect the queen kind of zone here, as we call it, or whether we're going to validate this trade or not. So again, this isn't a trade I'm in, just showing you stuff based on what's going on. Inside the boot camp, I mean, I can show you a little bit around there. Everything's set up as modules. I'm not going to get into too much detail into it. We log in using your Discord, which is linked to your WAP. So anything that you get inside there, like once your WAP role is given to you inside the Discord, everything gets linked to the website, and your access to stuff unlocks based on that. So all of this stuff is stuff you all get access to as a Bootcamp member. This stuff will unlock as time goes on and as you work through your system. And then we tell you things that are coming up, like if Dave trading with us today. The journal, that's an undervalued system that one of our developers created in here. It is very, very robust and has a lot of detail in there. And I think more people should take advantage of that and use that tool to their advantage. But the main thing, obviously, is the Bootcamp. The Daily Profiler and the Candle Science are two widely used systems that people build into their process oftentimes after going through the Bootcamp. One, two, or both. Sometimes one, two, or both. Sometimes people kind of lean towards Candle Science or lean towards the Daily Profiler, and sometimes they end up using both combined. And I think there's a great way to look at that. Inside the Bootcamp, so the first one you'll have access to is obviously the Futures Bootcamp. And inside there, you're going to have access, and I got to go through the rest of these modules. I've gone through the Bootcamp several times, but this new automated system with all your videos and stuff, I've got to finish going through this. But basically, you can go through all the videos. It'll keep track of what you've gone through and what you haven't. And as I said, as you unlock pieces of this system, you will get access to different tools. The neat thing about it, I think, and where one of our devs did an amazing job, is there's even tools in here, and I'll see if I can show it to you. Rolling 3 hour line. Yeah. In here, there is, and you have to unlock it, but there's actual live candle printing, like random candle printing that will happen on here, and you'll make decisions based on that. So to help you put reps in and help you understand what you're going to do when you get back to the live market or when you replay the candles in TradingView, for example, this system will actually already have you set up to know how to do that because there's simulators built in here that you can run through on the website that walk you through an 05 breakout system and what decisions you're making, if then statements you're putting in. So what that does is it helps when you're on the live market. It can be very debilitating when you're on the live market and things are coming at you and you're seeing those candles print. You're like, what do I do now? What do I do now? So by having the simulator built into the course, it gives you a chance to practice and see what happens and help you make decisions in a little bit slower time frame so that you can speed up when you're actually in either live or replay markets. So yeah, there we go. So we got somebody that's live trading and putting up his things with all kinds of emojis, but we're not going to fall for that stuff. Although I did say we were already kind of looking at it, but we're seeing what happens. Welcome, Rulo. You'd like to learn more, and if you're a profitable trader, great. Come on by and you can learn even more if you want. Oh, look at that. We actually hit our 0.1. We had a little stab up, and we actually hit our 0.1. So we would have potentially protected the queen there during that last 3 minutes while I was babbling. And then we'd be hopefully in a risk-free trade because we would have gotten the profit we needed to then carry that trade forward. So whether our stop loss was here or maybe just below the open, we'd just either keep that there or pull it to break even, depending on what type of trader you are, what type of plan you create for yourself. But there we go. The stats have kind of played out. We've both hit the 0.1% of the breakout, as well as we've hit the 0.1% of the actual 05 box. So we do, and again, still above the opening quarter. So our idea is, unless we break here, we're not being invalidated. So that's where I would possibly put the stop loss if I was in the trade. So yeah, so cool to see that play out. We still have not broken out of the gunship range yet, so we're still waiting for that. If this does happen, it will probably happen somewhat forcefully, but we will see if that happens during our little stint here. So I'm here for about half an hour more. Like I said, if you guys have questions and stuff, now's the time. If you're curious about what we offer in the bootcamp, please do not hesitate to drop questions in here. We do have quite a few people still here, but I know some people are probably just in the background with YouTube playing. Here. Need to go that high. All right. Blow anybody's ears out. Just like a little something. Wish you could actually type in a number sometimes there. So yeah, guys, please open up the chat. Give me some questions. Help me out here. Otherwise, we're just reading these little candles as they go. some stuff outside in the Discord, but brand new here. Who is ICT? That's Drez. You guy, you. You should come up here one time. I know you're already in the morning, so it's hard for you to come up. But I know you're probably actually in your work day now. But Drez is one of our live traders in our magic hour. So what we do is, and you might have seen it today if you're watching the stream from the beginning, but we have streamers throughout the day and the Asia session. Most of that happens in the Discord as part of our paid group. But on Mondays, we like to give you guys access to seeing what we do every day in the Pack trading group. So Drez is one of our magic hour traders, which is from that 6 to 8:20, 8:30 time frame before Austin and Mick come on live. So just another feature we offer inside the group to help provide value to our users. So and that's in the Pack trading group. So once you're done the boot camp, you get to be distracted by all those guys trading and doing their thing. And the nice thing is we don't just have one type of trader. We're not just sitting here doing we're not just doing one thing and it's just a cult or anything like that. We all kind of speak from the same kind of verbiage, I guess, if you will, and same idea of watching the market. But we all have our own ways of reading the market and turning ourselves into a profitable trader. Which is great too, because the one thing I find again with groups, not to knock them and stuff, a lot of the groups out there, it's one way or the highway, and that may not work with you. It may not be the time you trade. So if you can't trade market open because you're in another country or in another time zone or work gets in the way or whatever, we offer, and the idea is by you building your own plan, we offer stats around almost any time of the day. So you can find a place somewhere in there to find a home for yourself. And there's other traders in there to help support you with that journey who are trading those time frames as well. We have a live London trader. We have live Asian traders. We're still working on that, but we have some that are there right now that trade for you. So all these different ways to help provide value, help you find a system that will work for you, and help you find the trader inside you. And if you're serious about it and you're ready to make that move, this will be one of the best tools and best systems and best groups to help you do that. So I'm a little biased, can you tell? But for good reason. I think, again, a lot of people who may be here who have been in a bunch of different places, it's hard to find the Dave Trades type places and the Pack Trading group type places because we're taken by all this shiny stuff that is just not real. And I don't know why it's so hard for people to realize it's not real, but unfortunately, I think we get taken by the flashiness of it all, and it makes it hard for us to see outside of that bubble when we get trapped by it. So. And then you want it to work, and then or like I said, you're just moving from the same shiny things because I think they use all the same marketing tools, and they are very loud, which makes it hard to ignore them. So yeah, it's tough. It's tough. So we're still barcoding there for the 12 o'clock, but we are doing it again, still and above that area. So, Drez, you got any words of wisdoms or any talking points for me? Other than that, like I said, Bootcamp is very well structured now. I do really like how it's evolved. It makes it really easy for people to get through it now. I think it makes it easier for the masses to digest compared to what it was when we were doing it live. And but we still do these focus sessions, and you can actually book these focus sessions with Mickey or myself or both, whereby if you want some time, some more one-on-one type time, we put that time into you guys, and you can book that through our website as a Bootcamp member. And then on top of that, as you join the Pack Trading group, Austin will then host what's called Sergeant Time training, where he'll give you one-on-one time for your plan that you've maybe built from going through the boot camp and help walk you through things you can do to unlock that plan or maybe make it better or whatever that may be, depending on how your system works. So definitely lots of ways that we support everybody with your memberships and stuff. And again, nothing crazy in there. So every so often you get to rock some. I'm in a sweater, although it's warm in here. I do have the AC going, but then you get to rock some gear, which I think we're getting back to getting some more again because people want some of that because it's fun gear. Wish I would have made earlier. Classes. Oh, the live. I wish I had made a decision earlier to be in the. Yeah, I mean, they were great, but like I said, honestly, I think this is a better learning system. And because we still do the re-engineerings at night with everybody, and those are all recorded, and because there's still, and because a lot of people couldn't make it to the live ones, this works really well. And with the focus sessions, you can kind of book those. So I think truly, and I know I do get you missing that, but I truly believe, having done both, that there is more value to this, especially with the added benefit of being able to have the focus sessions. So I agree with you. I hear you, but I do think there's lots of value to what we've created now and how it's evolved that makes it even better. So you're not wrong, but I do like the way we've gone. Where am I going here? Let's go back to the chart for a second. There we go. We're making a little bit of dip back, maybe a little grab before we head further. So keep watching this. So I'm here for another 25-ish minutes, and then I got to run. We're still building things in the background, building a bot basically to trade the gunship for us. We're actually doing some beta testing now on it. It's actually working quite well, but there's definitely some fine tuning. It's not just a get rich quick scheme with this bot. It takes a lot of you understanding the system, you understanding the gunship, you understanding the regime that we're in, and whether certain plays will happen better than others, whether you should be going for the stretch goals or going for the short goals. It definitely is not just an automated process that you can just set and forget, but it definitely is something that's been a long time coming into the boot camp, and I've done a lot of the work from Austin's data to create that for the for Ninja Trader. So looking very forward to launching that, but I will be getting back to more of that work after I'm done with this live, because that's where most of my time is being spent right now, is for that stuff. So yeah, oops. Let's get back to the chat. See, I don't see anything though. And Mazking, nice to see you. It's been a little bit, so hopefully all is well. And hopefully you're still trading like a beast. I know you were doing quite well there for a while. All right, I babbled for like 30 minutes and now I'm running out of juice. Things to say. I should have some water, but. And now Restream is messing up, so hopefully you guys can still hear me. It's doing its thing. Sometimes it pops up a little. We're having trouble. It seems if I do anything other than 100% that, but as soon as my computer does more than one thing, Restream goes bleh. Which is slightly annoying, but is what it is. What are you gonna do? Pardon me. Looks like it's gonna be a slow and steady 12 o'clock, but we did a lot and to come right back to where we started, so it's quite the V curve. And that was what, 10 o'clock. 10 o'clock was our time, like always. It's crazy how that works out. Let's take a little peek while we're here. Let's take a little peek at the daily profiler, and we're going to look at some of the things we go through on the daily profiler. No, I want to go. Let's go back to this site. This will be easier. God, when that screen goes white, it goes bright on my face. The profiler. So this here is one of the tools that you get access to inside the bootcamp, and then inside the Pack Trading Group, obviously, after you finish the bootcamp. The idea here is we have basically like a ton, 4,677 days of data. And using that data, we can see what's happened during the day to try and give us some clouds of what the day might look like where we're at. So now we're going to be looking at Wargaming the New York 2. And so I'm going to key in some stuff here based on what's going on right here. So we got, so basically all I'm doing is going in here and going long, false, broken for Asia. Oops, none. What am I doing? Long, false. It'd be interesting to see if we can get above the high or whether we're just going to do another break back down, broken. And then we ended up with short true, crazy enough and we don't often do a true on New York 1. So that's one little statistic that we have. So you can see before the true was on there, the false was a high probability. And we did not do that. We ended up going true, which is, that's stuff going on in the background, I guess. But true. Come on, there we go. So let's see how we're looking. So based on right now, we have not, I don't believe, let's go back over here for a second. Yeah, we have not broken out either side because we just finished building it at 12:30. So we have not gone long or short in New York 2 yet. Obviously, the tendency might be to go long because we are in the upper half of that right now. We are above the OU, which is one of the you'll learn all this inside the boot camp. So when is that set to launch? And also, how long has it been? Have you been trading it? Sorry, Grams, I'm just going to double check because I did go off the screen. Are you talking about the gunship algo? If so, we're doing the beta test now. I don't want to set dates. I don't like setting dates, but it is set to launch. I have been trading it. I have stopped over the last couple of weeks because I went away on vacation and did some other things. I'm going to go back to it. It definitely did well. I think I got almost past an account. I did my own silly stupidity to mess around that one. But yeah, it's done well. But again, it's not just, like I said before, I don't know if you were here, so I'm going to reiterate it. It's not a get rich quick thing. You still have to know the gunship. It's not just an automated process. You need to know the gunship inside and out as best you can. You have to use this data to decide when you're going to turn on trades and when you're going to turn off trades. And we've added some other features which bring in the daily profiler segments into it and stuff. So you still have to use a lot of your wits about you to try and figure out whether it's the right thing for you and when to trade it. But there's definitely some edge there and some things you can do and have some great times with and create some more automated systems for yourself, which is pretty great. So New York 2 model right now, it obviously, like oftentimes when you have, so we only have 10 days. So I'm going to take off this broken. That's crazy. You only have 10 days with all that actually. So what that means is after entering all this data points, because of this true, I guess, we only have 10 days. So I'm going to do this right now. Well, it only adds 20, but anyways, okay. So let's keep it down to the 10 for a minute. But as you can see, it actually goes quite rangy. And then if I take that off, it's going to favor the downside, but not until, yeah, which is funny. Okay. So I'm assuming if we choose long, yeah, we're going to, okay, it's 50-50, interesting. And short is 5 days. The short is still more of a range, and the long gives us a little more of a pump. So, but there is a dip around that 12:30 mark, which we're here at 12:05 to 12:10, which we did kind of sort of see, not quite a big dip, but so the long obviously is kind of what's maybe playing out, sort of, but it's still undecided. So it's this is why like I said, I was even coming into this, I wasn't too big on trading it, but yeah. So anyways, hopefully Grams, that answers your question. If it was related to something else, let me know. But otherwise I went through that answer. So hopefully that helps. Pardon me. A few more minutes here, guys, and then I'm going to probably get back to work. And I assume Austin will come on and put on some gunship screens for you just to kind of wait us out until re-engineering. And re-engineering, if you are part of the, I should have said this from the start of this whole thing, I apologize, but if you were part of our live session today with Austin and Dave and Mick, I would recommend coming to the live re-engineering. The neat thing about the re-engineering is we kind of get to take today's candle and and cherry pick it kind of thing, right? We get to look at it after we've already seen it and go through how and read live price quickly. So those if then statements that we would have made throughout the day, all of the kind of classification of what we're doing and why we're doing it, whether the flags are up or down for our candle science type stuff, all that kind of jazz. We'll do that in QuickTime, and it's just a really great way to learn, a really great way to digest the day and kind of go, okay, what happened here? And stuff. So it's just, I really like it, and I think it's great, and a lot of people really love that session. So if you are leaving us for a few over the afternoon, 3 o'clock Eastern, come on back and see us re-engineer the day. I think you'll find it a lot of value if you're new to our YouTube and our and what we do here. So so yeah, so we'll give it a few more minutes, see if we make another break out of that 05 box. We're kind of coming back in, arranging back in, which again is definitely possible in this hour. And if we break this bottom, then we're invalidating the flag up, because we invalidated the first 15. We've already actually not yet. We're about to invalidate the previous 15, so the second quarter. It's our opening candle for that one, yeah. So if we get below here, which we're just doing right now, which we've done right now, if we close below here, this to me kind of invalidates. So if you had gotten cash flow, this might be a good time to close the trade, because we're kind of going against the grain. But so we did close. So if you were in a trade, potentially this is the time, and maybe wait for another breakout for a second chance if you'd like. But this is definitely playing out to be potentially a doji candle, because we've broken that. And if we come back and drag anywhere into here, obviously the chance the last 15 becomes kind of a coin flip at this point, because we've broken that 15, because we've broken the previous 15, and we're potentially about to break the open. All that stuff kind of gives us a little bit of a lean towards being cautious. So, but it is rejecting that. It did not break the open of the candle of the 12 o'clock. So we'll see. Maybe it'll carry on and stay up there. But, so yeah, the focus session, I do sometimes trade in this afternoon session, sometimes not. Oftentimes, like I said, we reserve this for just going through stuff, and we do appreciate when the bootcamp members can be here, but that's not always the case. Sometimes they're really shy, but I do appreciate when you guys throw some questions. If anybody has anything else, now's your chance, because we'll probably be shutting this down soon-ish, or in moments, because we're coming down to the last 15 minutes, and I probably will prefer to leave it at that. And we're right in the middle of 932 actually, so definitely a decision point. Look at that, right on cue. Gave Austin a quick little jump shoot. So he's going to probably bring up some screens in a second and get stuff ready for us to transition to a little break. And as I said, we will be back at 3 o'clock Eastern, and that's when Mickey and Austin rebuild the daily candle and kind of show you guys with hindsight how the day played out. And the other thing too is, and the other thing that I didn't mention, I apologize. Mickey does a re-engineer or a war game in the morning, usually around 8:30ish, somewhere around there, if I'm not mistaken. And he does that live on YouTube for everyone. So that is a huge value. And what you'll often see is when we come back and do this re-engineering the candle, there's definitely some relation to what he's described to what we end up doing on the daily candle. So there's definitely some, if nothing else, some value to that free stuff. And then if you do find value in that, do come and join us. The war games, we also still do free right now in the Pack trading group. So Monday we do it live here with you guys, and then Tuesday to Friday we do that with inside the Discord to give you a little better idea of how the days normally play out with us live in there. So you get a kind of a sneak peek into everything using that. So again, new here, come and join it. If you don't want to jump into the boot camp right away, come join us for the live war games in the morning, and then the live re-engineerings inside the Discord afterwards. So Definitely true. Knowing the regime. Yep. Yeah, Graham, perfect. Sorry. So hopefully soon we'll have that for everybody. But for now, we're just having some beta testers go through it. They're not finding a whole lot, so I'm hoping it won't be a long beta test process. But we do want to make sure we kind of. I'm going to add new beta testers as time goes on, just to kind of really make sure we give it a good run for its money and make sure we've gotten everything all taken care of. So I'll give Austin a few seconds there to maybe get his screens all set up, and then we'll bid you adieu until the next time. So again, we'll see everybody next Monday, and we'll go from there. As you can see, we're still toying here right around the mid, right around the open of the candle, and right around that 15 minutes. So things are looking very rangy. Actually, was this even a big day? How much did we spend today? 1%, so it's nothing crazy. Well, 300 points though. But yeah, cool. And there it is. Oh, not yet. Go ahead, take it over, Austin. Or flip it over. There we go. All right, I'll leave you guys at that. And if anything else, let us know. We'll just play the outro instead of the outro's in there twice, but we'll just play the outro now. Thanks, guys. I appreciate your time. Go ahead and look me up, grab my DMs, whatever. If you guys have any questions, please reach out to me. I love talking about this shit. And appreciate it, guys. Have a great day.
Did you find value in the Bootcamp Focus team? You can find them on X here. Watch them train daily by joining the Bootcamp link in the description.
Spitting with a vengeance, no repentance, and it's for my descendants. Don't be out here in these trenches, cause these trenches turn to ditches, and these ditches turn to prisons, and you lose your independence. But I can last, I'm stupendous. Running wild and sipping Guinness in the cup with all the misfits. I just made a few of them some millionaires. I had to burn a few of them, they didn't care. I had to earn a few of them some clientele. But still we broke the bank, so don't you dare. Tryna knock me on my path against foul, no rap. Knew this life was hard, so I'm taking no steps. While I'm light years ahead of you, and I fit no death. But I'm far from invisible, if not hold that, hold that, hold that, hold that, hold that. Keep on going, even though my pain shows I'm focused, even though the flames low, I'm frozen. I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames low, I'm frozen. I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames low, I'm frozen. I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames low, I'm frozen. I be burning all day and I keep on. They
this shit for yourself. I do this shit for myself. They not like us, and they know that. They not like us. We ain't gon' do. They not like us, and they know that. They not like us. We ain't gon' do it.
She has something in mind, but the plan didn't go as designed. Couldn't waste no time. She had to figure it out on the fly. So she picked up the phone, then she started to put her on, and the rest is all, it's all just history now. So what you gon' do now? I do it all. I'm counting up my wins. I'm counting up my wins. I do it all. I do it all. I'm counting up my wins. I'm counting up my wins. I do it all. Had to figure it out, but they hear me out. I guess the story repeats itself, no one else is allowed. I've been burning the gas, doing the dash. Oh, I'm never gonna look back, so don't try to say you've been on my side. I did this on my own. I do it all. I do it all. I'm counting up my wins. I'm counting up my wins. I do it all. I do it all. I'm counting up my wins. I'm counting up my wins. I do it all.
All the people all around me keep telling me how they're feeling, what they're thinking, what they see. Saying all these other people you should change your ways. You could get a taste. I'm just thinking, don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's underrated what they say, and don't they know it's I do what I wanna do because I can. Not gonna change who I am to fit in. I don't care what other people have to say. They don't know what's in my brain or in my veins. I'm just thinking, don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it's overrated what they say, and don't they know it? They say the world's a scary place. They say that I should stay in line. But who are they? What do they know? I don't believe a word they say. I don't know. Don't tell me I can do it if you ain't ever done it yourself. Don't tell me that I'm losing. You don't know what it's like in hell. I told you not to do it, but you went and did it yourself. Don't tell me I can do it if you ain't ever done it yourself. Don't tell me I can do it if you ain't ever done it yourself. Don't tell me that I'm losing. You don't know what it's like in hell. I told you not to do it, but you went and did it yourself. Don't tell me I can do it if you ain't ever done it yourself. it's like in hell. I told you not to do it, but you went and did it yourself. Don't tell me I can do it if you ain't never done it yourself. Don't tell me I can do it, if you ain't never done it yourself. Don't tell me that I'm losing and I'm losing. You don't know what it's like in hell. I told you not to do it, but you went and did it yourself. Don't tell me I can do it, if you ain't never done it yourself.
Have you ever felt bad when all the bad things you were told not to do make you feel so good, so good? I don't know what to do. Ooh, yeah. And I'm feeling confused. Ooh, yeah. All of these emotions. Ooh, yeah. Don't know what I'm choosing. Not to do make you feel so good, so good. All of the bad things you were told not to do make you feel so good, so told not to do. Make you feel so good, so good. Count your stack, make it back, make it the trend. Is your friend, follow it till the end. What do you have to spend if you wanna contend? Don't try to pretend. The trend is your friend. You can fight the tape, but you can't fight fate. Ride the wave and elevate. The trend is your friend. 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 It's been a while, baby. Take it slow. It's been a while, baby. Take it slow. Count your stack, make it back. The trend is your friend, Follow it till the end. What do you have to spend if you wanna contend? Don't try to pretend. The trend is your friend, You can fight the tape, but you can't fight fate. Ride the wave and elevate. The trend is your friend. 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 It's been a while, baby. Take it slow.
Welcome. This is PackTV. Sit back, relax, and watch how we day trade with statistics.
I did it. I'm going up. I'm blowing up. Rappers folding up. That mean they fold. I'm taking off. I'm shaking off. Yeah, it's time to show them how to be the coldest. I'm the same old kid that you always knew. I'm stacking up wins and I'm counting them. These rappers are fakes. I can't none of them, and I'm only getting started. That's the problem, huh? I'm on the up and up. Now I'm coming up. I'm going dumb and done up. And they just running up. It's not a one and done. It's just one of them. And I'm only getting started. That's the problem, huh? Yeah. Woo. Yeah. 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 Yeah. 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 Yeah.
my style. My style is the bomb, daddy bomb. My style is the bomb, daddy bomb. My style is the bomb, that style. My style is the bomb, daddy bomb.
They rigged the race long before your first breath. Signed your name in the ledger, made a bet on your death. Puppet masters and neckties, count your hours like cash. Presidents pushing their pieces while you fade in the ash. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn a script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain. Burn it down, burn it down. Burn it down, burn it down. A lead over production, too many miles out thrown. China rise in the rear view, old empires turn to bone. Same damn cycle, same sharp teeth in a grin. They sell you fate on a pay-per-view, call it virtue, call it sin. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn a script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain. Burn it down, burn it down. Burn it down, burn it down. You were born in the crossfire, raised on a rerun lie. Told to choose a side in a cage fight they already fixed on high. But the match don't matter when you torch the ring. Kick the crown off the dealer, hear the chain dog say, hey!
Welcome, this is PackTV.
This is re-engineering time on PackTV. Re-engineering! This is re-engineering time on PackTV. Re-engineering! And this is re-engineering time on PackTV. Re-engineering! This is re-engineering time on PackTV. Re-engineering! And this is re-engineering time on PackTV.
Yo, yo. Okay, I see 2 Mickeys and a Justun, not a Mick. So now I'm really confused. Is this the right Mick? How many Micks does it take to make a Mickey? We're having some technical difficulties here, folks. As y'all are coming in, welcome, welcome. If you are new here, we do re-engineering, same time every Monday on PackTV and same time every day, Tuesday through Friday in the Discord. 1500 EST. All right, now we've lost 1 Mickey. Let's see, do we get another Mickey? We have a Mickey on the top and the, okay. Now we do not have a Mickey. Restream does not like it when we hit all-time highs, ladies and gentlemen. Won't let us be great. Oh, is this the Mickey? Oh,
Hello.
aha, I hear you.
Oh my gosh, Restream is frozen all kinds of ways. I can't even share my screen. All right. Dude, this is horrible. What is going on with Restream? This is my 5th time logging out and logging in.
Let's see if I can get rid of that one.
I can't even share my screen right now.
Oh, is it not letting you button?
No, it's not letting me press anything. I'll log out and log. I'm gonna log out and kick every. Well, maybe that just worked.
I can do hand signals.
All right, so I'm gonna log out one more time and then kick all Mickeys out of here, and then I'll log back in.
Let's try that. Is it plugged in? What up, Brooke? Hey, let us know in the chat while we're sitting here waiting on some technical difficulties. How'd y'all do today? How'd you guys see the market? Good, bad, indifferent? Remove. Okay. Now let's try to add Mickey back. And when I say put in the chat, how did you do? I don't mean if you just had a green or red day. You can have a great day and still have a red day. Did you follow your rules? Did your rules either let you see the market clearly or not, but you respected your risk, or you maximized how you seen the market? Oh, okay. Added Mickey. Mickey, are you there? I saw it right, but got cooked because of bad habits. Well, let's talk about it, Hunt. Broke rules left, right, and center. What did you break? What rules did you break? We'll try to fill the dead air here until Mickey gets his restream working. What happened today, or what caused you to be an F-tard?
And what trade was it? Were you just stuck on trading a certain way, marrying a bias? You know, because sometimes like we can fantasize or fetishize our issues, right? Like we can be like, I did it again. I overtraded again, right? When if we really just attack the root issue, oh, now we have 2 Mickeys. Dude, I'm just like Pokemon. I'm collecting them all over here. Collecting all the Mickeys. Size, I was over ambitious. 945. So you tried taking 945 longs and you didn't size correctly to pay for the times that you're wrong, right? You got stuck thinking in the outcome of a singular trade. So we might need to move to Discord. Oh no. All right. Well, let me, I want to talk about this one single thing, and then I'm going to tell everybody to move on over to Discord. So if you're like Hunt, give us a chance for Mickey to see if he can get this worked out. If you are like Hunt, and let's say you got the move right today, but you're like, oh my God, I over-risked or oversized. It's because you're trading for that singular outcome to win, man. When you're focused on that singular outcome versus the process it takes, that is what really can cause, like, you just, it doesn't matter if you're right about a single trade. If you can't afford to pay for that trade, it's not a good trade, right? Just like, look at the 930 movement. I even said this on stream. Just because I could see that 930 winning, the risk it would have taken for me to win that 930 trade would have just been way too expensive. And there we go. We got Mickey back.
Can you hear me?
Yes, sir.
Oh my gosh. The market was calling our bluff.
Telling you, man. We got market makers watching us, and it's either they hunt our TPs or stops, and if we're not giving trades, they're hunting our technical problems.
Yeah, right? All right, let me see if I can get... Is my volume coming in okay? Because I don't know if I'm hooked up to my
you sound great.
Okay, perfect. All right, so Hunt, all right? The only... I can't see the volume or anything. The only thing that you can control in these markets is your position size and your risk and your decision making. And it is a proven fact in every strategy, right? The account size and the risk per trade matters more than the entry, the strategy, or the TP, right? And I would recommend that you remove yourself from all Discords, all log off of social media, because you're getting fed malarkey, right? Right? I traded 5 micros, took 2 off, and let 3 run. There's not many streams that you see me go over position size. And today definitely wasn't an A+ setup because 930 didn't make the low of the day. We didn't have a firecracker system up because we had a trend in the night market overnight. So like at some point, you got to understand and you have to admit to yourself, let's do it real quick. Let's do it real quick live on stream, right? This is how malarkey, right, the trading space is, right? Professional traders, right, usually trade 1/4 to 0.5%, but they also have really, really big accounts. You, on the other hand, right, have a very, very small account, a very, very small account. So you have to risk a little bit more. And so right now, what we're going to do is we're going to do an exercise, right? And this exercise hopefully exposes you to like why it does not pay long term to over leverage, right? And so if we're willing, and so what we're going to do is we're just going to take a $2,000 account, right? And we're going to start with 2.5% risk per trade, 5%, 7.5, and 10%. And then you've got to learn to identify when to use each type of risk, right? So let's go on down here. And we're going to say we have a $2,000 account and 2.5% risk. How many micros out of that 2,000 can we afford? And we're going to just do a static 10 basis point stop, right? Like the way me and Austin trade 930, it's less than this. It's usually a max 30 basis point stop, but we'll do a 10 basis points because I know you want to be a snipey McSniper, right? Now, if I risk 25% of this $2,000 account, I not only get 4 attempts, right? But in this case, am I still here? Cool. In this case, we're going to think somewhat responsible, like we have some kind of freaking common sense, and that we're not just degenerate gamblers, right? So we're going to say, hey, right, we'll say 25% or 10 basis point stop in today's market. 10 basis points is approximately, well, is around 30 contracts or 30 handles, right? So we need to make this 28570, and this is going to represent a 10 basis point stop, right? And so right now we know with my little 50K that has a $2,000 drawdown, right? If I am going to risk just 2.5% risk, 2.5% risk. So let's bring up the handy dandy calculator, right? I'm going to say 2,000 divided. We know that we can take a crap ton of losses, right? I'm not going to do percentage calculations right now. I'm stupid right now, right? But I can know that I'm not going to like blow my account off of that, but I can't necessarily afford, right, any micros if I'm just risking 2.5% risk per trade of a $2,000 account, right, based off the tick values of micros. Like I just can't afford it. So I instantly know that I'm going to have to increase my risk per trade to 5%. Now I can see, oh, I can afford 1 micro, but I have to risk 5% of that $2,000, right? I can afford 1 micro, and then like, why is this not doing this the right way? If I lose $100, right? Now that's a sustainable plan because I would have to lose 20 times in a row to blow this account, right? 20 times in a row. If my stop was 10 basis points, I would have to lose 20 times, and I was risking 5% risk per trade. I'd lose $100 risking that 10 basis points, and I would have to lose, I could only afford 1 contract, and I would have to lose 20 times in a row, right? So now let's go 7.5, right? Now I can afford 2 micro contracts, and my loss, just using 10 basis points, would only be worth 150, right? And so whatever, let's see, 2,000. I would have to lose 13 times in a row for me to blow this account. 13 times in a row, right? Now, what were you risking? What was your stop risk, right? We can do 10%, right? I could afford 3 micros and my stop would be $200 and I could lose 10 times in a row. The problem with the game that you play in prop world, right? Number one, there's not a lot of positions, right? Whether you're a structure-based or a risk per trade trader, like today, right? If we targeted this 945, right? As let me go to the 1 minute and do this right. All right, let's say we just use the 945 candle, which is right here. And the moment we closed above this 945 candle, we could, right? So right here, we closed above, so entry somewhere right there. Our risk per trade would still have to be, right, 10 basis points, we're getting stopped out. And this dilutes, and you've already done the exercise, this dilutes the whole competition between large stops versus small stops, and you can go use the dump pouch for that. But the problem with the prop space is that it forces you to take positions more than your leverage for on any investment. On any investment, let's say you're talking like you want to trade other people's money. First and foremost, type in the chat how many contracts you took today and how big your stop was. Right? And was it at 50K, a 150K? What kind of account it was? And I'll just keep doing it with this simple $2,000 prop until you do that, right? So let's say we wanted to take 5, right? I would have to risk just 10 basis points. I would have to risk about 20% of that account. 20% of that account. That means if I get stopped out, that's $400. Right? Oh, you're at 4? So now I want you to start asking yourself every time you take a trade, and just remember this, all right, 15%, 13%, 13%, right? Is that setup? If you ask your dad, who I know is a very smart individual, right? If you ask your dad, I want to risk 13% of any account for one shot, would he approve of that? Would he approve of that? Yes or no? He would not. I know your dad is a very smart individual. He'd be like, no, that is the dumbest idea possible. You don't risk 13% of anything for one attempt without some kind of, hedge, some kind of, like protection, some kind of something, right? So with that being said, what you got to realize is the environment that you're in, number one, the prop world, this is why I think nanos are going to be a really good thing for you guys, is because you right now are looking in social media and you're seeing people trade minis with this kind of risk, right? If I wanted to get 10 on here, I would have to risk 25%, I believe it was. Nope, I have to do more than that. I'd have to get one mini on this 50K account with $2,000 drawdown. I would have to risk 30%, which means I can only lose 4 times in a row without blowing the account, right? So it doesn't pass that common sense test. So number one, like you need to remove yourself from social media so you can stop distracting your brain with nonsense, because you don't get to see how much they're spending on prop, every single trade that they take, all that stuff. And it's already diluted. Usually, like the exercise I just did with you, I've done with you plenty of times. You don't need to know about trading to understand risk per trade, all right? And like when you start over position sizing and ignoring the account drawdown, right, and the risk per trade, that means something's influencing that thought process. And usually that something is, right, we can use cliche words, greed and FOMO, fear of missing out, but that stems from something else too. Right? That stems from something's incorporating itself into your little brain and telling you to be a degenerate retard, right? And over leverage your account. Now, we have proven it over and over again that never plays out well, right? And I'm not the only one that's proven it. 99% of academics, right, and actual trading hedge funds and anybody in the capital space, right, has proven that over and over and again, that there is no need to ever over leverage. As a matter of fact, your probability, I think the number one reason why 90% or 95% of retail traders fail is because of purely over position sizing and over leveraging. Period. It has nothing to do with strategy. I don't think it has anything to do with the decision making. Yes, you have your people that just continue to press a button without a system or process or any of that, but I think I've seen the way you guys study, right? I've seen the way like you guys obsess. Like I've seen the ICT community like pinpointing. I've seen like volume people pinpointing and like getting their kick really good. I don't think it's a strategy issue. I think it's a risk issue. It does not make sense ever, right, to over leverage and to jeopardize yourself in this kind of case, especially in a market that can move 10 basis points. If you had to risk 13% for contracts, loss of $400. The Nasdaq moves. Let's go past the common sense test of this. Right, this is 10 basis points right here. Well, that's 11 basis points, right? Every single 1 minute candle is 10 basis points. So now you're asking yourself to do the impossible and be perfect every single day. This is god awful exhausting. To try to do that is exhausting, right? You have to be very, very good at that one kick to be able to be this accurate, right? So, I don't know what else to tell you, man. Like, other than, you know, like, you got to increase your risk, put it under something that's probable, right? I mean, your stop position, and you have to decrease your position size, or you need to get really good, like you see me and Austin do, with covering your queen at high probable targets, right? All right, that's enough about that. Let's get into reengineering. It breaks my heart, but if we have to have this conversation again, but we have to have it again, we'll have it as many times as it takes. All right, so in today's war game, right, we knew what we were looking from a daily chart. We knew where the probabilities were lying. We knew that this previous day high had a higher probability of getting retraced to, but it had to turn the false movement. We knew that we were to go down to come up was the highest probability, and going completely down between and not being able to take out the 7:30 to 11:30 time-based range by 11:30, that was the lower probability. We knew we were going to use the 4-step reversal to capture the higher probability, and we're going to use the 4-step continuation to identify the lower probability. All right, so let's please be kind and rewind, and let's re-engineer. All right, so, all right, if you need to know how to do the war game and all that, show up at 8:30 and I will talk to you. So, like, I'll show you the war game every morning, but I'm not going to do it for reengineering. Reengineering is about dissecting the candles and figuring out exactly what the decision points were, right? So we knew that we were anticipating a new false broken. We were anticipating a new low of the day, right? There wasn't too much data that could convince me that I wasn't going to get a new low. There was no data that could convince me. If I had to adjust my thought process for a new low of the day, I could, right? And the only way that I was going to be convinced that the high of the day was in is if I had that true scenario. So the 4-step continuation, right? Even with the true scenario, the short true, pay attention, even with the short true, a dominant low of the day was 10. That we knew it was in the morning session. We knew that our high of the day was here, right? So, right, coming into the day, we knew that our 4-step reversal point was going to be right here at the 40 basis points between here and here. We knew from a candle science daily approach, this was the extreme right here. We knew from the 7:30 to 8:30 MFB that this was the extreme right here. So we knew that, like, if we breached this area without doing a 4-step reversal, we were more likely to get a true continuation, meaning that we were not going to be able to make it to the other side of the 7:30 to 8:30 time-based range by 11:30. All right. So we knew if we were we could come make a new low of the day and then start incorporating the 4-step reversal. We knew that that would be an easy long to take, and then we could get above P12 mid. We could target settlement, Globex, P12 high, previous day high. But we had to have the if-then statement of the 4-step reversal first, right? So with that being said, right, the one thing we did notice, right, is that the false price model for this morning was really awkward. It said we were going to go down and then come back up and then go back down. So we knew that from a price structure standpoint, something was off, right? We knew that the true, right, would be like go down and then range. And then we already saw from a low of the day perspective that expect the low of the day and then something has to happen after that, right? So now, right, let's re-engineer. We know what we're looking for. We know that we were looking for the reversal, which is a higher probability, but we knew our line in the sand for the lower probable movement. So 9:30 opens up, and we start selling, right? Right out of the gate, 9:30 showed his hand with volatility because all last week we had And the week before that, we had 930s that were 20 basis points or less. This 930 is almost 38 basis points from high to low. So we knew volatility is increasing, meaning the ranges were going to get bigger. Well, when ranges get bigger, right, the green boxes, we don't typically target the green boxes. So the 730 to 830 MFE and the candle signs from the daily, we were expecting it to get blown out, right? We knew that we would have to do some blowout just to get a new low of the day, right? But now we have to pay attention to details, right? Do we make a new low of the day, suck back into the range, step ladder above the high, find footing, step above the 25, find footing, step above 50, find footing, and so forth and so forth. And if we saw that signature, we would strategically position ourselves in longs and expect P12 mid, settlement, previous day mid, P12 high, previous day high. But if we could not do that, we would have to target sells or wait for the low of the day, which for today was cool because we were expecting the low of the day almost literally the same exact time as the false, right? So we just had to wait for the reversal to show up, right? So, right, we can see that we can't even get above the 25 basis points. Now we're at the 10. And then at that point, right, we lose that and we continue to head lower. Now we're at the 4-step continuation, 40 basis points right here. We're at the 50th. We have a lack of 4-step reversal and we blew through the low of the day for the short fall. So now we know that the odds of a short true are stacking in his favor and we have no reversal at this point in time. Well, remember the stat of the day, right, that showed his hand was the low of the day for the short true from a time-based and a price-based standpoint, right? So we went from mode to median, it was 1.4, right? Then the drop off. And then if there's an extreme news movement that caused us, we can make it to 2.6 or 2.7. And I'm not in the business of trading outliers, but like I knew, right, we need to think mean reversion, even if it is a true day. And Austin saw that, and Mr. Dave Trades caught that as well, right? So we know that we're not going to be able to manage any longs around 9:30. So when's the next default candle that we manage positions around? From 9:30 to 10 o'clock, right? The 9:45. As long as it is small enough, that we can negotiate our risk, we should be fine, right? So we have to wait for the 9:45, right? And so now, right, let's zoom out, right, and remember where we are. We're expecting, right, we're at the 70th percentile, meaning there's only a 30% chance that we were going to hit this 730 to 830 MFE breakout. We're at the low of the daily 70th percentile. So we're expecting mean reversion. And then not only that, we're at this drop off period of time from a short true low of the day. So all in from a time-based perspective from a short true. So we're expecting mean reversions. Trust me, right? If this was set up to be a short true, I would have tried to take sells off of this 945 because all this happened, right? We had to still engage with longs on it. And we knew that we are well past the point of return for a short true for the 4 steps, right? But the data did not make sense. That's why I said I'm not taking sells, right? Not this far low because I knew we were right here from a low of the day, time and price standpoint for a short true. All right. So all we have to do is set the conditions, right? You see 945 opens up. 945 candle was 11 basis points. 11 basis points. So now let's think of some if-then scenarios. If we're going to make a new low for the short true, a low of the day for the short true, doesn't mean we're expecting to get above 930 or to turn the same false. It could at this point of time, but even at 10, I'm going to walk you through. That's not the targets. All right. And the last step is that from a gunship approach, we're at the MFE 50th percentile, right? So, right, we're either gonna 945 as a 15-minute candle is gonna blast off and be this enormous green candle. Well, you saw us position in for that. You saw us cover our queen. You saw us position in for that, and you saw us get a stop out. Well, it doesn't matter. At least for me, it didn't matter because I had covered my queen, and it was a risk-free trade anyway, right? And we can see that the 945 15-minute candle was not a big green candle, right? So if we are going to do that mean reversion, whether it's a short false or a short true, we were at the time in price for both, right? How would it come? Well, it can come as a footprint rejection, which we teach you guys about. It can come as a 10 o'clock sweeper, or it can, like at this point, it can be those two things for mean reversion, or it can come as a false 05 break or a true 05 break. We just got to set the conditions, right? So 05 box develops, right? We know our 1 hour and a 3 hour probability flags are down, but we are expecting mean reversion. If we get a sweeper, we know that's the apex signature to the upside, right? If we get a Q3 or Q4 quarters break, there's an apex signature to the upside. So all things are pointing to longs, not just, data, right? So we get a false 05 break. I think it comes down a little bit more right there. And then we start sucking back into the range. So for a market that's so weak, right, and this was the long that I took in here that I showed you guys on stream today, right, after taking this long and getting stopped out, right? This market is so strong, right, they can't even make it 5 basis points off the 05 break to take out the 10 o'clock low, right, without trying to come and retrace the opening price at 10 o'clock, right? So now, right, let's drag that 945 candle over, right? I know Austin's stop, I think, was below the 945. For me, it was like around the 10 basis points off the 9 o'clock, off of this 05 box and below this 9 o'clock low, right? So if this is doing mean reversion, then we know that Q2 should be able to take out Q1's high. So any trades taken here, that's the if-then statement that you have to define. If this false 05 break, this footprint rejection is going to work, then we have to take out Q2 of this high right here, right? And we do in Q3. So now we're expecting a Q1 low with a 945 reversal for low of the day that both short true and short false support, right? With a false 05 break with live price lining up with statistics. So at this point, you should add all queens covered, right? And your stop should be left alone. This should be a risk-free trade for every single one of you guys if you're targeting longs, right? I was very adamant that I was not looking for a short in this because I knew where we were from a mean reversion standpoint, right? So now, and I said, if it's going to be a sell-in morning, I will just not participate, right? And you guys will just listen to me ESPN broadcast the day, right? So now we're expecting Q1 low, Q4 high, right? Right, from an hourly probability standpoint, right? We know that we are more than likely going to close this hour bullish, which means our hour probability flag from candle signs is going to be up for the 11 to 12, right? We knew that we would have to breach this opening price for it continuing on, right, for the 3 hour. Right, so if we breach this previous hour opening price, we know that the hour probability flag would flip down, but for now, the hour probability flag is flipped up, right? And then the same signature that 10 o'clock gave us can't even make it to 5 basis points off that 05 box, much less previous hour 50, much less previous hour opening price with the hour probability flag up, right? Is showing its hand in the 11 o'clock hour, same signature. So if this is truly strong, we're in Q2, right? You should be able to take out Q1's high, and then you expect Q1 low, Q4 high, and then your line signature up with the probability flag. And we cannot do it, right? We took out Q1's low, right? So we expect Q1 high, Q4 low. But just like after we take out an hourly or a 3-hour high or low, what's the action that happens? I've trained you guys. What is the action? Not just that we took it out, but what is the next step action? We sucked back into the range and started ripping. Right? We could not touch the previous hour opening price to flip this hour probability flag down. We could not breach the previous hour 50. They call this a footprint rejection. We just started ripping up. We could not get below the 5 basis points or the 10 basis points off the 05. So like true live price isn't really convincing to the downside. We just one tick wondered the Q1 low and instantly shot back into the range. All right, there's your range 2 day. We know New York 2 is forming. Right, proper mean reversion from where you are within the daily candle. And so now we know it's 11:30 to New York 2. We had a short true. At no point do I think we're just gonna, we very well can and could have, but at this point it's just we're gonna range into settlement. It's gonna be a red daily candle that is of normal size, right? And we're just going to range into settlement, meaning that I'm going to expect a range for the rest of the day. It's that simple. So any trades taken, which there were none taken for me after this initial long, right? Like needs to be targeting just 10 basis points, 10 handles, 5 basis points, whatever, right? But it needs to be around this 930 and bringing it back or bringing it back down to the 930 for cash flow targets only, right? We know we have a new 3-hour candlestick, right? So we know we're going to look for the 3 line signatures, the perfect line, the false 05 break, or the true, right? For that 3-hour high or low, because we know statistically, right? And the higher low for the 3-hour will happen within the first hour, specifically within the first 15 minutes. We know that it has happened enough times that we had to classify these individual line signatures because they're the most common line signatures for that 3-hour high and low. The perfect line, meaning the higher the low for that 3-hour, gets put in the first minute. Yes, the first minute of the 3-hour. So 12 o'clock exactly, we'll plant the higher the low, or the false 05 break, or the first 5-minute true breakout. We knew that that's all we're looking for, and then we're going to sync it in with New York 2's time-based range and put actual data behind it. Right? So we open up first quarter, right? And right now we know that we have a perfect line signature to the upside. And if we can suck back in the range, and Q2 took out Q1's high, so we're expecting Q1 low, Q4 high, right? And we're expecting a perfect line signature up until proven otherwise. Q3 opens up. What's the action that we did? Well, there's your Q2 low right here. And we breached it. So now we know statistically that this is more likely to be an hourly doji, meaning more wicks than bodies. It doesn't mean it's going to happen every time this way, but more times than not, it will happen this way. It'll be an hourly doji, meaning more wick than body. Not like that the body has to be a certain shape, but just more wick than body, right? And we know that this perfect line signature is now in jeopardy, and this can be a false 05 break. We can get 10 basis points outside the 05 box, and then, right, let me do like this. We also know that the moment we swept this high, right, this isn't one of the opening prices that matters, but, right, like some of the hour openings after taking out the previous hour highs, like you'll see that the opening price is a high probable retracement back to the open. This hour doesn't, right? All right, you know that New York 2 is formed, right? And you just wait in to break out of the 11:30 to 12:30 time-based range to put stats on the rest of the afternoon. You already know you're expecting a range into settlement, so you're expecting quarters to break, apex signatures, the typical range signatures, right? All right, your hour opens up next hour, right? You breach the previous hour open, probability flags are down. You're expecting a false 05 break to the downside, right? You're looking for the 2 apex signatures. You're looking for the 1 line signature up with a footprint rejection to the upside, right? All right, so now you're just looking for a sweeper. So meaning we swept the lows. If this is a true sweep the lows and retrace higher, we should be able to breach the previous hour 50, right? Why? Because, right, that's live price saying it wants the 46% probability, right, over the 66% probability to the downside. And this is what I'm talking about. Certain hours after you wipe the low, the last hour only had a 34% probability to retrace the opening. This one, after wiping the low, has a 73% of retracing the open. Same thing goes with 3 hours, 12 hours, all that stuff. But anyway, if this is a true sweeper, we're expecting down to come up for an apex signature, but we have to breach this previous hour 50, right? Q2 has to take out Q1's high, leading us into thinking Q1 low, Q4 high for the hour, right? And you do all that. So this is live price saying it wants the lower probabilities over these high probabilities of the downside. That's why we look for those signatures, right? So now can Q2 confirm it? It cannot, right? So now we have to think Q1 high, Q4 low. We know we're in a range in market. We're expecting the range for the rest of the day, right? We still haven't taken out New York 2, so there's no data for the afternoon other than what we can pull from the hours. Right, Q4 opens up. What is this signature? Right, is it going to give that range alert? Yes, it is. We've taken out Q3's high, right? The third 15-minute out of the hour, we've taken out his high. So now that gave us a doji alert. We know that this isn't going to be a typical Q1 high, Q4 low. It's going to be the opposite. It's going to be more wick than body kind of candle. We know we're in a 3-hour line signature to the downside. And then you got it anyway. New hour opens up, right? You know, probability flags are down still. You still haven't gone, you still have not broken out of the 11:30 to 12:30, so you got no data for the afternoon. All right, we start ripping back up, right? Just doing range one stuff. Like, this is the highest probable thing that we do year over year, month over month, day over day, week over week. We range one more than we trend in the New York 1 session, meaning that we touch and interact with this 930 price more times than we push away from it. So you've identified that we were expecting mean reversion down here, and you already knew that we weren't going to get like a complete reversal to do a green daily candle to attack the P12 mid in the previous day high. So what your if then statement should be thinking range one around the 930 into settlement. And that's exactly what you did. Right? Q2 takes out Q1's high. You expect Q1 low, Q4 high. You break a quarter like you just did here. Q4 breaks Q3's. You expect hourly doji. Continue the range. And as your re-engineering, let's go into Asia. All right. Let's war game Asia, starting with candle science, right? We're going to take today and yesterday, and we're going to put probabilities on this low and previous day high, which would be today's high. So first and foremost, we're going to put our low quads on, right? So tonight, right, we can see if we're reacting at the lower quadrant, the previous day mid, the higher quadrant, and not just this opening price, right, for a statistical standpoint, right? So let's go to candle science and put probabilities on them. Snipey, I just seen your comment, right? Listen, this is what I'm talking about, right? You have procrastinated this process and us telling you the same thing over and over for 6 months now. There's nothing wrong with that, right? But you've never truly dedicated. You've always found yourself chasing strategies, like not doing the work that's needed to understand true risk, right? Maybe now, like today, might be the day where you're just like, all right, if I'm really going to take this as a profession, I need to remove myself from all these other Discord rooms. I need to remove myself from social media. I need to stop strategy hopping, looking for perfect solutions to get me from not being able to take a loss. And I need to understand that I am going to take a loss, and I need to put my risk first and understand what risk per trade is and repeat a repeatable workflow every single day, win or lose. Because honestly, right, do you want to know what the secret of life is? The secret of life is doing the same thing every single day. The secret to a good marriage, right? Fighting or being in joy, keep showing up and doing the same thing. Trading, keep showing up, win or loss, right? University, whether you like the topic or the professor, right? You still got to keep showing up, right? Like there's nothing more complex than that, right? That's how life is designed. Whether you're in the trading space, whether you're trying to manage a relationship, whether you're trying to raise a child, whether you're just trying to, get a promotion at work, it's doing the same thing over and over again, understanding the risk of that something. And that way you learn the nuances and become an expert at it through the good times and through the bad times. That's the secret to life. Any period, right? And being a good steward of whatever that thing you're working on and understanding the risk. All right. That's my TED talk for today. All right. So we're going to take yesterday and today's price action. Yes, Friday was green. Today's red. Took out the previous day low. All right. So let's put that in our candle signs. Green, red, took out the low. Right. We can even say we close below the low if we want. Right. But we're pretty close to that. So we can see that there's a 21% probability to take out the previous day high. So we're going to come over here and we're going to put 21%. We can also see that there's a 65% probability of taking out the low. All right. So now what if, right, Asia opens up and we reject off of this part of the previous day's range or the previous day mid, or we just start working our way to that opening price? Right, because we know we're below previous month 50 and NFP Friday, so we're expecting 50% green days, 50% red days, period. Right, so what if we mean revert today's price behavior? Right, we breach the opening price. We know that the previous day high has a 68 and the previous day low has a 45. Right, so 45 and 68. All right, so now we know that if we see Asia open up and we step above and find footing on this level and step above previous day mid and find footing and step above this and we breach the open, which is all the way up here. We're not going to wait for it to get all the way up here. We're going to use these levels. Then we can anticipate previous day high over previous day low. Right? We also, we won't talk about that because that is going to be too confusing for you guys. So let's say we do take out that previous day low. How low can we go? Right? Right? We know that this signature has happened 354 times in the last 20 years, right? Right? We know that our 30th percentile, meaning 70% probability in this case, is 22 basis points off the previous day low. 30% of this 354 reversed before hitting that. 70% of it kept going after previous day low was taken. So let's draw this here. 22. And we're going to put a green box there. Now we're going to do our median, which is our 50 percentile. Right? Our 50th percentile is at 37 basis points. So out of this 354, Friday did what it did, and we did what we did today. Right? 50% of them reversed before 37 basis points off the previous day low. 50% of them kept going. 37. All right, so now the 70th percentile, which is a 30% probability. Which is 62 basis points. All right, so now we know that based off of what we did today and on Friday, right, that's happened 354, our 70th percentile, 30% of them breached 62 basis points and kept going, but 70% of them reversed before hitting that. Now we are in a market where volatility is still contracting, right? Volatility is still contracting, meaning that we have to aim majority of our decision making around this green box if that action happens with a little bit of this, right? Now, a couple of weeks ago when volatility was expanding, we were expecting to blow through the green box and go to the red box, the 50th to the 70th. Now let's go take what we did today, right, and put probabilities on Asia. And we're going to come over to our daily profile indicator. We're going to switch it to Asia. Right? We're going to come to the daily profile real quick. Let me take that off. If you're a gap trader, right? If you trade gaps and opening gaps and weekly gaps and all that, don't forget, and I'm not going to do it because I don't trade gaps that way, right? We have data to tell you the probabilities of that gap up or gap down for the next day. All right, so now we're going to come over to the daily profile. We're going to switch this to Asia. We're going to reset 4,674 days. And when they say this is what New York AM did and this is what New York PM did today, we see that we went short, true, broken, and then long, false, right, for the PM. So short, true, broken, long, false, right? And so we can see, give me 1 second. I gotta get a drink. I'll be right back. Give me less than 30 seconds.
29, 28, 27, 26, 25.
All right, I'm back. All right, so now we know that there's 4 possibilities as of right now that Asia can do. All right, we know that number 1, the 18 to the 1815 candle is a very important candle, but we know that we're going to use the 1800 to the 1930 time-based range, and it can go up, right? So we can go long out of that, and we can see that there's a 57% probability between the time we break out of that range to 2:30 in the morning that we continue. We continue in that direction and can't take the other side of that range. And there's a 42% probability that we will go up to come down, right? So first and foremost, if we go up to continue, right, what is the price signature that we're looking for in Asia, right? To go down and then to come up and then 1900 to reverse and then for us to like, so let's hope that's not the case, right? Let's hope we go down, make a Q1 low, in 1800, make a low of the days or a low of the session or a low of the 3 hour, and then we go up, right? Meaning that my risk needs to be below that, right? Because this is if we break out to the long side with a gunship, with Asia, with Q1 low, Q4 high for the first hour, my risk needs to be anchored on that low that's produced between 18 and 1815, and I need that way I can just hold through all this shenanigans, right? However, that's the higher probability. All right, if we're going to go up to come down, which is not the higher probability, it is 42% over 57, right? What does 18 to 1930? It does similar things. Number 1, right, we make a beautiful 18 to 1815 low, convincing everybody that, guys, the low of the day session 12 hours in, right? But we typically range same signature. So like for the long true and the long false, we range. The hour that's going to show its hand is going to be that 2100 hour, right? It's going to, like, if you start seeing volatility get wider, you can already start to think, right? This doesn't look like wild volatility. It just looks like higher highs and lower highs and higher highs and lower highs and higher highs and lower highs and higher highs and lower highs, right? We do go down to come up, but like you can even see that there's a possibility that you get a Q1 low, Q4 high for 18 to 1900, right? Now this, the lower probable movement to go up to come down, does not look anything like that. Look how wide the swings are starting to get in 2000, right? You can still get Q1 lows, Q4 highs, but you can see volatility is spiking up, and then 2100 is going to rip you back down and destroy everybody's pants, right? So that's the separator today for the long true, long false, right? Now, if we break to the downside, right, then we know that the 18 to 1815 high is the dominant one that we need to keep our eye on. We can see that there's a 58% probability to continue to sell off until 230 and a 41 that we reverse. So there's no true edge and continuation or reversal tonight. It's going to be pay attention to what price is going, right? If we do the 18 to 1815, what do? We range very, very much so until 1900. And then 1900 starts the trend downwards. And even for the true, we know that trend only lasts until around 2200, and then the new 4-hour period between 22 and 02, we're just stuck in this awful range, even for the true continuation. Right? If we go with a short false where we go down to come up, right? Typical range. So we know that the short trues, the short directions out of Gunship or Asia, right, we're gonna expect an initial range. The longs have the possibility of giving us long true versus long false, a trend at 18 to 1900. Right? But what we can see here is we range until 2000, and then between 1930 and 2000, we start shooting down to reverse back up. Right? So that 2000 hour is going to be the key hour to see if you're going to reverse. Mick, does the other side of the candle to the upside have the candle? Yes, absolutely. Right? So let's say, right, we do go for previous day high. We start stepping above the daily lower quadrant, the previous day mid, all that stuff, and Asia goes long, Gunship goes long, and we have to seriously consider that previous day open is going to get breached, and that's going to jump up to 68. Just click on, we took out the high, and you can do the same thing to the upside. This represents, it's only happened 116 times though, right? So half the amount that the other side did, right? You can even use this to, like, let's do today, for example, right? We're going to set up candle signs for today's exact movement, right? So today's exact movement was we breached the open. Friday was the inside bar. The day before was red, right? And I'm going to show you a little trick that I look at. I just don't teach it, but this is for the real nerds in the room, right? So the first day was red. Thursday was red. Friday was green. Friday was the inside bar. All right. We breached the open. We took out the low. We took out the low, right? Now I'm going to click right here, and just where it says MAFE, MAE timing, right? We can see that we went 1.4%. 1.4% that was made at, let me go back to it, right? At 950, we made a 1.5% move. I can even look at the historical data that says, let me draw this, let me do this. If this is 1% right here, right, the middle between 1 and 2 is 1.5. How many times have we done that? Well, we've done it quite a bit. Let me make my circle a little bit smaller so I don't get unnecessary data. Right, we've done it quite a bit. Right, like right here is, I need to put more time features on here, but this is the 930 open right here. So between here and 1040, this is 1.5. Half of those made a new high of the day. Half of them made the high of the day at 1930. Now I can take the high of the day that we had today at 1930. That went 30 basis points at 1950. And if that's the high of the day, then candle signs should be able to show me after doing these actions. Right, so this is 1930. Right, look how many, let me turn off squash outliers. Right, so 30 basis, this is This is 5 basis points. This is whatever that is. This is 0, right? Look how many of them, right, made that high of the day to make a new low of the day, right? So you can get creative with it. We made tools for simple people, and we made tools for the more analytical people that want to really know the data. Hopefully that helped. Going back to Asia, because I got distracted, right? We know if we range between 18 and 1930, right, more than likely it's going to be a short scenario, and then the 2000 hour is going to tell us continuation versus reversal. If we trend, if we break out to the long side, right, we know we're expecting a trend from 18 to 1930 to the upside, and then, right, the hour that we have to pay attention to is going to start in the 2000 with the volatility, but ultimately the 2100 hour is going to be the reversing hour, right? Possibly the 2000 hour. So it gave it more data. All right. So with that being said, that is your war game tonight. And Austin, passing it off to you to do your Asia war game for gunship.
Heck yeah, bro. You guys are paying attention or missed anything as far as what I'm looking at for Asia structurally? Just literally re-listen to what Mickey said, because daily profiler wise, that's all the same. The gunship piece I want to bring to y'all's attention today for all you pack members, and even your bootcamp members. You guys have access to the light version of the gunship, and you have the 1800 break. So my piece that I'm really obsessed about and I love to look for is the variance of statistics itself. So the fluctuation of the stats that you use, knowing when they're hot, when they're cold, when they're maybe due to reverse and start over or underperforming, just being aware of the pulse of your edge. So that's what you see over here with the tables on the left and the right. So going into the Globex session tonight, we can see that no matter if we have a front run activation or a breakout activation off the 1800 gunship movement, we see that it's standing pretty well in the current market of and also on a Monday. So we can see that it's in the top 2 for both, no matter if we get a front run or a breakout. So the activations that align with the highest probable daily profiler movements that you guys just seen Mickey kind of break down, it's the same thing, same way structurally we do the RTH. We use the daily profiler to kind of, just like it says, profile the day of showing you the conditional high day, low days, and then I'm trading my activations, my entry drills towards the highest probable statistics. So you guys just got the daily profiler war game with the specific entry processes that have, days that are unique to, we can see Monday performs in the top 2, same as the breakout. So if we get both a front run and a breakout in the agreements to the daily profiler direction, great. If not, I know where to fail to level of my systems, because that's what profitable trading is, not being right every single day. So knowing that Monday is a pretty good performer for both of these, definitely spend a little bit of money as well if the range lets me define my risk pretty well. And that's all I see going into the gunship 18.
Give me a bottom line up front. Pullback, front run, or breakout?
So bottom line up front, let me zoom out a little bit here so you can see the entire week. Just like how I'm looking at the daily candle on the weekly perspective here. So this is the current week we have, right? Here's the opening of the weekly open. We have a little bit of the wick of the Sunday high, and then we have that Monday low. So just like how when I go into the RTH session, I'm looking at, okay, is there any current high or low of the week that makes sense? Same thing I'm doing in the Globex session. If we continue pushing to the downside, I'll use this previous day low as one of my major exits, getting into either the front run or the breakout, and then vice versa. If we get bullish movements to the upside, that's where I see a bit more edge and a bit more of I'm going to push my runners more. Why?
Nice.
Because first and foremost, we're trading in an indice. Okay, it's bullish over the long term more than bearish. So anytime I get bullish setups, whether it's a 930 break, gunship 1800 break, it doesn't matter. The side that carries bullish intent, because I'm trading Nasdaq, is always going to have a little bit more skewness. But then specifically with this week, we know that weekly candles have good lows of weeks on Monday and Tuesdays. So if the 1800 movement and the Globex/Asia movement carries the overnight session bullish, well, if live price tells us where, statistics tells us where too. live price. If live price tells me bullish, okay, and we AK go long true for daily profiler, well then statistics tells me that the weekly open, which is right here, the weekly open could be a natural trajectory for a higher time frame movement. So therefore, I want more piece of this move and less piece of this move. So it's more heavier cash flow shorts and larger expansive cash flow longs.
It sounds good. It sounds like it's going to be an easy night. And you got to realize that we entered the market environment where we expect 50% green days, 50% red days. And we're stacking them red days pretty good, but you got to wait for the live price signature.
Yes, sir.
So this was really fun, dude. This has been probably one of the funner days that we've had on Mondays.
Yeah, dude, you guys got to see. I mean, we just hit all-time highs all around. We broke records. We freaking hit max viewership. Even on the re-engineering we're doing here on PackTV, we got 67 people I see right now. Like, dude, I think the max we've ever had on a re-engineering was like 35 to 40. So I think we're growing. I think we're getting the message out there to people, showing just realistic expectations, peace through objectivity, consistently executing the same way through quantifiable systems. Let's just keep doing it. Let's just keep doing the
one thing I will say that is going to break your heart is it broke mine. My daughter took a linear regression test on Friday.
Yeah.
She failed it.
Oh no.
I mean, she's my daughter. She knows linear regression. Like, I will wipe the floor with her. I will wipe the floor with her teacher with how much I know about linear regression. My daughter failed it.
Hey, it happens to the best of us, bro. I'd fail it too. Listen, I'm self-taught statistics. You're formal academic statistics.
Good stuff. Listen to good and listen to it and do the same thing tomorrow or in 2 hours.
Let's go, baby. Y'all have a great rest of your day. If you are tuning in here for the first time, welcome once again. I hope you enjoyed it. Hit that like button on your way out. Stay grinding on your freaking goals, and never, ladies and gentlemen, ever let anyone tell you that you can't do something they never done themselves. I'll see y'all later. Bye, everybody.
Are you stuck doing market shenanigans? Stop trading on feelings. Luck is not a strategy. Trading demands discipline and a detailed business plan. Stop rushing to failure. We teach objective statistical trading. We turn market noise into quantifiable facts with our bleeding edge tools at thedailyprofiler.com. Journal your trades, your thoughts, your wins and failures. It ties everything together into a single place. Your journaling software isn't just a diary, it's your personal risk manager, locking down your risk parameters daily and weekly. Let the platform show you the advanced statistical analysis of your decisions and their outcomes with a professional grading system, including backtest valuations, generating deep insight and showing you exactly where you have to focus on. Master the Daily Profiler. It instantly defines the market environment. Utilize the 4 steps for perfect reversal alignment. You gain instant clarity with our indicators. See the exact levels, 05 boxes, hourly, quarterly, and 3-hour logic. We provide the foundation for your success. Forget guessing candle fortunes. Our candle science uses previous open, high, low, close patterns to predict the next bar's probability. This means replacing subjective chart storytelling with objective statistics only. Knowledge means nothing without execution. That is where the pack steps in. Join an elite community focused on collaboration. Get guidance from experienced squad leaders. True mastery requires live market repetition. Our job is to move you from familiar to proficient to mastery. Stop guessing what happens next. Define your risk